most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and it's basically anyone's guess what's going to happen today in the markets. Now, why do I say it? Because the events of the last 2 days have been so confusing, the statements at cross purposes, conflicting, that one really has to sift through the sea of posts and social media stories to understand what's going on, isn't it? We had Friday evening, complete euphoria, yay, Strait is open, but it's not really.
Yeah, and the meme that came out on Friday was of the missiles coming out of a desert and saying portfolio stocks on Monday. Well, quite the adverse this morning. So yeah,
They fizzled. They fizzled before they took off.
Absolutely. My favorite meme that I was telling Alex earlier as well is how they're calling it the Schrodinger's Strait instead of Schrodinger's cat, because it's both open and closed at the same time. So, okay, here's the latest that we've put together of all the sense we can make on what's happening. The US and Iran have opened fire on vessels in the Strait of Hormuz in the last few hours. In fact, the US Navy has actually gotten aboard and seized an Iranian vessel. The Iranian side has also opened fire on vessels. It's unclear if the US and Iran will resume talks after Iran has said they've not sent any delegation yet. The Strait of Hormuz is not effectively open for passage. That's a fact. 2 Indian vessels were in fact fired upon on the strait, and then the Iranian ambassador summoned. There's some reports that some Indian ships did pass through after that, but it has to be confirmed. Friday evening's declaration of opening the strait did not clearly last long, and I think this is also an important factor to note, that the positive statements will not be taken seriously after a point. US markets, meanwhile, closed at fresh highs on Friday's trade as Israel and Lebanon declared that ceasefire. So all the indices were up in the green. But futures really is where the story is, isn't it? So you saw deep losses, and some of them still continuing, about 0.75% down on the Dow. Treasury yields, meanwhile, slid as bond markets responded to de-escalation. But remember, this is Friday and a lot has happened over Saturday and Sunday. So 10-year was at 4.24%. Crude actually would be the most current indicator of how investors are seeing all of these events. They've surged again, crude prices, after the attacks on commercial ships in the Strait of Hormuz. And you should pull up the latest crude rates, and you saw quite a bit of a spike over there as well. You were close to 98 when I saw it last. Let's pull up Asian markets for you, and a bit of a wobbly and a mixed start, but now in the green. So the Nikkei about 1% up. The India implied is also positive right now, so about 100 points up on the India implied. What do we make of this? Jonathan Barrett, Chief Investment Officer at ETO Markets, joining in to help us sift through this. Jonathan, when you're looking at the news, what are you expecting, especially in terms of crude prices?
Oh, good morning. Look, it's pretty exciting, actually, what's happened. Very volatile. And really, I hope the two parties can get some trust together, because I think that's really what's missing at the moment. But yes, you're correct. Crude oil just out of the gates early this morning, currently trading up around 4-5%. Really, I think we've got to expect more unseen things there. And I don't think it's all that easy to conclude that we will get a result anytime soon.
The question, though, is there's been quite a bit of back and forth, Jonathan, over the course of the last 3 days. They were intended to open the strait, and then hours later the strait was shut again. There were expected to be talks. Now it's uncertain whether those talks today will carry through. And so from that perspective, we've seen a significant amount of volatility. But after that initial announcement, you did see a very sharp cool off in crude oil prices. The question is, if things are resolved sooner rather than later, and if things move to a positive conclusion, how much do you anticipate crude oil prices will come off?
Right. I think that's an important question, because we have telegraphed the fact that the market investors, when they see that there's a positive resolution coming through and it's concrete, that we'll have a readjustment occur. And that could be as much as another 10, 15, 20%. But the important thing is to make sure that conclusion is there. We hear what the US does, we hear what Iran, but what can we really trust when we actually come down to an actual conclusion? Yes, I do think that if we do get that, we do get an announcement, but it doesn't seem to be something that's coming. And to me, that's a worry. We have a deadline on the 22nd of April. That's Trump's deadline there. That's only 2 days. And I think the market's going to factor in some form of volatility or disruption until we can get some clear signs.
Jonathan, the slightly medium term on crude, because I think IEA was quoted as saying that while the Iraq may get some separate pipeline over a period of time, other infrastructure may come up, but the near term, if the strait doesn't open, that crude prices are slated higher. My question to you is though, that if indeed there is a resolution coming soon, if it does, where do you see crude prices stabilizing fundamentally?
Fundamentally, if you take the Iran-US conflict out, the market should be around 65. Okay, but if you add that premium, and we're talking now a premium, that we're going to see less oil go through the straits and more of a conflict, then that'll be a lagged event, and that will see prices a lot higher, because we just need that supply. So I guess fundamentally, given that we can discount that, 65, 70 US dollars is where we were trading before this all occurred. But then on the back of this, we've skyrocketed. I would like to see something concrete come through. We'll see what Trump says in the next couple of days. But at the moment, the two parties do seem to be wide apart. And it is that element of trust that is not there. So let's really see. I guess we'll trade in and see what happens April the 22nd.
Jonathan, why do you think markets are not responding as negatively, at least from what we're seeing this morning? Do you think there is a sense that there will eventually be some kind of an understanding, some kind of a deal, and a lot of what we're reading right now in terms of commentary coming from both sides is bluster?
Well, there's a lot of bluster, and that to me is a concern. But both parties need to make a deal. Trump needs to make a deal for all the right reasons that we know, and Iran needs to make a deal. It's going to be a game of bluff and who crosses what line first, and then see the follow through. And to me, that's the major concern, because if you have the meeting of two strong minds, someone's got to give a little. The US says Iran has to give a lot. Iran is saying nothing's really been done. So Iran has the ability to hold its line, and the US has to force Iran's line. That to me is the issue at the moment, where we don't have the trust between the two parties, but we do know that two parties must come and do a deal for the sake of both them and the global economy.
On that note, thanks so much for joining us this morning. Pleasure having you. All right, let's talk about what happened last week. And the thing about it, and the thing about recaps in general, is that very little matters, but it still provides some context. So let's talk about it. Equity markets climbed in 2 of the 4 trading sessions last week, and foreign institutions were net buyers in 3 out of those 4 sessions. On Friday, those investors, foreign investors, bought equity worth 683 crore rupees. For once, it was the domestic institutions that were big sellers on 2 days, at least of the week. On Friday itself, they sold to the extent of 4,723 or 21 crore rupees. On Friday, equity markets recovered from a weak start to end positive, and you had Nifty 50 ended about 0.7% higher than the no, actually it was 0.7% higher, very near the intraday high. Reliance Industries, SBI, HUL, HDFC Bank were the top contributors, and the broader markets actually outperformed, gaining between 1.2 and 1.5%. Most sectors ended in the green, but you had the FMCG pack that outperformed on expectations of a strong Q4 earnings. Defense, energy and oil and gas were the other winners. Now, take a look at the ground that has been covered in April. It's quite stark. You have a 9% plus gain for the Nifty 50, about 13% or thereabouts for the mid-cap index, and 15% for the small-cap index. And the distance to the 52-week high or all-time high is 8% currently for the Nifty 50, much lower for the mid-cap index at less than 3%. And the small cap index is about 9% away. Very different from the end of March.
Very different from the end of March, and you could argue that Friday is very different from what today morning looks like, and that could be said for tomorrow as well versus what is happening today. So you never know what will happen. But just that the weekend development show viewers how difficult it is to try and make a concentrated trading bet, because it could flip overnight, it could flip over the weekend, and what looked amazing on Friday evening, not even Friday our markets time, Friday evening is looking so different. So just bear that in mind. I think the other piece is that the markets are probably showing a reaction which tells that the markets want to believe that even though there is a bit of this last minute shenanigans, maybe there is a deal around the corner. Who knows? Is that what the equity markets are telling us remains? Because remember, the US markets too have paired losses. However, the point being, because the markets have rallied a bit, it is important to be very selective and not be blinded by FOMO. Because remember, viewers, that while right now there could be a bit of a tide taking all boats higher, you will see some earnings impact, particularly in Q1, and stocks may actually mean revert as well if indeed they are truly impacted for 1, 2, 3 quarters. So please bear that in mind. I think the weekend, some study and some meetings suggested that steel is a sector to certainly monitor. We've been talking about metals, but within metals now, steel in particular, apparently steel spreads for Indian companies are up about 50% from what they were a quarter ago. That's a massive uptick in steel spreads, definitely higher from what they were a year ago, but a massive uptick in steel spreads from a quarter ago as well. The question to ask only is that are some of the positives in the price? It remains to be seen. But frankly, a 50% uptick in steel spreads means that the quarterly numbers and the Q1 commentary both will look very, very solid. I wonder, I'm not using this Macquarie note as a note on Tata Steel, but just to show what brokers are thinking of the ferrous space, that they are also saying that the domestic steel price stability and EU sentiment improvement will drive an upside, and they expect the EU business cash flows to improve in the coming months. So for Tata Steel, even that piece comes in, but for JSPL, for JSW Steel, SAIL, the higher spreads will really help the steel company. So keep an eye out. While some of the positives are in the price, as the numbers start coming in, you might actually see some bit of optimism build up here. It's certainly a pocket that you want to watch out for as one of the key performing ones for the Q4 numbers and the Q1 commentary. Keep an eye.
I think the big one, of course, is the banking results which came in, and they were much anticipated. If we see investors ignoring, and I say it in double quotes, what's happening geopolitically, it'll be thanks to ICICI Bank and primarily in some part to HDFC Bank, and that's pretty much the only thing that will hold things up. So it's topping my list of factors to watch. So strong private bank earnings will keep the bank nifty in focus and maybe buoy overall sentiment as well. Will you see an uptick when markets open? Will it sustain? Maybe, maybe not. Because remember, the expectation is that there will be a fresh round of talks as early as Monday, that's today or Tuesday, between Iran and the United States, but we don't know if that's really happening. So then the focus might shift domestically, and this has been a good set of numbers. So that's giving some strength. Shares will exit anchor lock-in on Monday for some companies. Hyundai Motors is one of them. Canara HSBC Life Insurance, their 6 months lock-in ends. Amagi Media Labs, their 3-month lock-in ends as well. So some of those might be in focus. As far as markets are concerned, the Nifty and the Bank Nifty are entering this session with a strong buy on dips sentiment. This is backed by a resilient rebound on Friday. The Nifty is at a make or break zone, and holding above 24,400 could accelerate gains, while a dip below 24,100 to 24,000 is likely to attract buyers. Technical structure is leaning bullish right now. So that is one positive sentiment. Supports at 24,200, at 24,000, resistance at 24,000 and 24,500. HDFC Bank and ICICI Bank have 19.4% weightage in the Nifty. So if earnings are digested well, we could see a quick move towards 24,700. Bank Nifty is the primary driver today, as we said, reacting to weekend results from its two largest components. Supports at 56,000, resistance at 57,000 and 58,000. And of course, HDFC and ICICI have 33.2% weightage in Nifty Bank. So it's basically tail of the two banks today. and that's where all the focus is going to be concentrated more than anything else.
Absolutely. And so definitely, I think a large part of the 100 points that we're seeing on the implied might be, the contribution from these two banks. But guys, we've been speaking about equity markets and the comeback that they've had in April, but I was looking at bond yields as well, because especially in this conflict, what we're talking about from India's perspective is the impact on macro and thereby the impact on earnings, right? So one of the lead indicators to how the market is perceiving macro is through bond yields. And we've seen that. Look, the same caveat holds that we've seen this as of Friday, but take a look at what's happened in April. You've seen markets that have seemingly priced in that the worst is over. You have had GSEC yields at the long end, and I'm talking about the 10-year benchmark, drop from 7.15% to 6.85% at the low. High-rated corporate bond yields have actually fallen more, 30 basis points. But more importantly, at the short end of the spectrum, and this is where yields fluctuate very quickly, you've had those yields drop quite significantly. For the T-bill rates, which is the government paper, that is down about 40 basis points. And for commercial papers, which is what companies issue, and certificates of deposits, which is what banks issue, the drop is between 50 and 100 basis points in April alone. So this is quite a significant move. The question is, what happens today? So it'll be interesting to watch how those markets react also at the start at 9 o'clock. But with that, let's go across to Puneet to line up for us what's happening in the F&O space. What are the cues today, Puneet?
Well, thank you for that. Definitely earnings led, as you guys have discussed, for the couple of banking names, but there are some interesting trends showing up on the data that we track on a daily basis. Now, for the an 100-point uptick, most certainly, it seems to have like we missed the rally. What happened on Friday? It feels like Friday was a holiday, because what we've seen on gains on the US market on Friday quickly hasn't, of course, transpired here because of the global events over the weekend. So the bank nifty also 56,500 continues to be a key level. Now we maintain that there are no current supports in the near term. So all supports at 57,200 and 57,400. And with the earnings starting off with the banks, we might as well go on to those levels very, very quickly. And then the story gets very interesting, because from that level is where we started to see the retreat and then much pressure on the index. So continue to monitor that. In terms of the cash markets, foreign investors bought into the market yesterday, 683 crores, but while a small figure, a buying figure by foreign investors. And in terms of the index long also, continuing to maintain that 20 to 21% longs being built in the system by foreign investors over the last 2 weeks, consistently maintained at this level. But the put call ratio has slightly inched up to 1.24 from roughly about a 1.1 to 1.15 level that we are watching out for. Now this is a very interesting chart, because 24,000 continues to be key level that the puts are maintaining. But look at the massive change in open interest at 24,800 now. As we moved up the index, 24,800 has seen an increase, 24,500 has also seen an increase for the calls, and puts only positions largely starts from 24,200 and below. So 24,800 starting to see that open interest could test that level very quickly, given what we are seeing on this index. And in terms of stocks, Godfrey Phillips, Motilal Oswal continue to have majority of the open interest change for the gainers, and for the losers, short covering seen on PV Fintech and Bandhan Bank. But definitely a tail of the banking index for today. Watch out for the first hour trading session, how we are able to sustain these gains going forward, because indications are that it could be a little difficult to maintain, barring what we've seen in the banking earnings.
Yeah, you have to look at the overview, I suppose. So, I mean, I'm going to start off with HDFC Bank. Decent set of numbers, I would say, but the core growth did slow down. So that's why you might see a bit of a pain point there. On its own, NII was up, net interest income was 3.2%. This is standalone Q4. Operational profit was up 4.8%. Net profit was up 9.1%. Provisions were down 18.3%, and gross NPA reported at 1.15%. So top line growth saw a slight dip. Asset quality did improve. Margins have witnessed a slight moderation. Credit and deposit growth remains healthy. ROA stays completely flat. Here's what Jefferies is saying. They've maintained a buy with a target price of 1,050. They're saying a softer top line growth is compensated by operating efficiencies. sustaining momentum on deposit growth key to loan growth and reduction in LDR. Credit quality is holding up well. The LDR is loan deposit ratio, of course. Credit quality is holding up well. We hold buffers in credit cost estimates. Momentum in deposit growth and NIMs, net interest margins, should be key drivers, and they see a 15% CAGR in profit before tax ex treasury. It stays among their top picks. Citi is not that kind. They've maintained a buy. They've cut the target price 2020 though. They're saying net interest income was a miss. Softer fees and loan growth lagged. Management stops short of explicitly guiding for system outperformance in FY27. The tone on growth momentum is constructive, factoring lower NIM revenue trajectory. They've cut FY27 and 28 earnings by 3 to 4%. So, I mean, think about it like this. If HDFC Bank had not reported the exact same date as ICICI Bank, maybe it would have looked better than it is right now. So, I'm not giving it an all-out thumbs down. By itself, the numbers are not bad, so thumbs up there. But you might see a bit of a knock on the stock. Yes Bank is pretty much clearly a good set of numbers. So that's an unambiguous thumbs up. Net interest income is about 16% up at 2,638 crores. Operating profit was up 23.1%. Net profit up 44.7% for the quarter. Provisions were down 41% and gross NPA improved to 1.3% versus 1.5%. Morgan Stanley has maintained its underweight with a target price of 15. They say Q4 was in line core performance. Core PPOP was in line versus estimates. PAT miss of 2% was due to 340 crores of one-off provisions. Credit costs were stable, aided by recoveries. NIM has also improved Q&Q and was above estimates. So with Yes Bank, you also have to keep in mind that it has this big investor which has come in. So Yes Bank, overall its trajectory is going to be seen as positive and its numbers have delivered. As far as Godrej Properties is concerned, that's the third stock. It's a Jefferies note, which is why it's on my radar today. They've maintained a buy with a target price of 2,420. Promoters' 5% stake increase shows confidence in business fundamentals is what Jefferies is saying. Execution and cash flows are key management focus. They're targeting a 20% return on equity on reported profits by FY28. Expected sustainable pre-sales growth of 20% over medium term. Valuations are attractive and expects to turn substantially free cash flow positive in FY28. So those are the first three on my radar. I don't know if you want to go ahead and say HDFC Bank is a thumbs down?
No.
Or is it a bit of a miss? Yeah. Or a mixed bag right now?
I think that the Q4 earnings were better than expected, but what the street may not like is the outlook or the lack of clarity of what's going to pan out in FY27 and the fact that overhang on leadership has not gone. So there is commentary saying that you will have somebody that is
they want KK. They've said they want KK.
Yeah.
Yeah.
But absolute clarity is not there. So there's still a little bit of uncertainty how that's going to pan out. And more importantly, there is no very clear statement of intent to beat the system on credit growth in FY27. So the last quarter was actually better than the whole year for FY26, but they're not out of the woods yet.
I thought it was pretty good. A healthy quarter. I reckon FY27 could be healthy. Banking in general might be okay because you're not now seeing a rate decline trajectory, but uptick in interest rates very likely, or at best stability. Definitely not a cut by virtue of all that's happened. So the macro is in favor. Yeah. There is no unknown negative. All the other pieces are now known and likely priced in.
So it's not a thumbs down. It's a thumbs up, but not as good as ICICI for sure.
Okay, so not as, so that's the thing. If they had posted any other day, maybe they would have been looked at more favorably.
All right. Oh, yeah. Well, before we round up the list on banking, I don't have any banks on my list. Actually, I have two pharmaceutical companies. Cipla, for one, has gotten a US FDA, actually Form 483. 2 observations were made for their Goa facility. And that plant is, of course, crucial for manufacturing of various dosage forms, including inhalers, injectables as well. Context for you in case you're not a pharma nerd and you don't understand how this works. Companies in receipt of Form 483 observations, this usually happens after an inspection by the US regulator, which is the US FDA, they must provide a corrective plan on how they're going to fix these issues, a failure to act on those observations could lead to an escalation, which usually is an issuance of a warning letter by US FDA. It's not reached that stage yet for Cipla, and it hasn't reached that stage for Lupin either. You have the US FDA that has concluded inspection at its Somerset, New Jersey facility, and at that facility, it manufactures tablets as well as capsules and powder and liquid oral dosage forms as well. Inspection is ended with 3 Form 483 observations, and the company is committed to respond to observations within the stipulated timeline. This is going to be key, of course.
Hello.
But sentimentally, it's a negative at this juncture. Hyundai Motor India is the third stock on my list, and it's a negative just from the perspective of the amount of supply that will come into the market right now. The 1.5-year lock-in is ended, and 162.5 million shares will enter potentially the market. That's about 20% of the total outstanding shares. Why this might be a problem for Hyundai Motor is that it's not really performed. If you look at it, it currently trades 3.6% below issue price and only about 2.5% above listing price, and it's been quite a while. So the question is, will people say, okay, you know, it's a good company, let's have patience, or they'll say, look, there are better opportunities at this juncture, I'm going to exit and I'm going to look at better opportunities. So there could be pressure, I think, at this point on Hyundai.
Yeah, and you're seeing a lot of these because it was such a hot IPO market 2025 that a lot of 3 months, 6 months, 12 months lock-ins opening up and putting pressure, or at least supply coming in. Watch out for Hyundai for sure. Okay, ICICI Bank, since we're making a meal of what is happening with the banking results, I'm just using the MS note because the clutch of notes that have come in, but just Morgan Stanley's overweight, Citi's buy. Thank you to my producers for actually producing this. Kotak is a buy, Jefferies is a buy, but the Morgan Stanley rationale I thought stood out as in very simply put what happened with ICICI Bank. They maintain overweight with a target price of 1705. Now what are they saying? Q4 was a solid quarter and it is a preferred play amongst India financials. I think the gentleman who will come in at 8:30 will probably say the same thing. The profit after tax beat estimates by 7%, largely driven by lower provisions. The core PPOP was about 1% above estimates as well, effectively reflecting the higher NII, right? And the short adjusted NIM could have, dipped a little bit, but 2 basis points is not really anything to make too much about. Loan growth, in fact, accelerated to 16% versus 10% in Q2 FY26. And therefore, what you saw, this is the line, right? Resilience with growth amidst geopolitical uncertainties. That is what you want, right? Which is why people are preferring energy transition, telecom, etc. Because there is resilience with growth in a geopolitical volatile world. And hence, I think ICICI Bank kind of stands out. Won't be surprised if there is some positive moves there.
2.4% return on assets on the base that ICICI Bank has. What more do you need?
What more do you need? And Alex now trading at about circa 1.6, between 1.5 to 1.7.
Forward.
FY28 basis, depending on whatever estimate you want to give to ICICI Bank numbers. And remember, the rate uptick trajectory not priced in as yet. So that is one. So keep an eye out for that. Ultratech is interesting. Cement, we've seen some bit of momentum come in simply because the valuations were beaten down. Ultratech commenced operations to take capacity up to 200. Effectively, with the new commencement of the operations, their current operating capacity is now 200 MT. And Kumar Mangalam Birla announced that the additional 50 MT will come up in the next 5 years. So very constructive on that space is Ultratech. They are a leader and they are ramping up the capacity expansion as well. Keep an eye out for Ultratech today. BHEL is, how would I say, you could argue that it's mixed, but there is, while there is both positives and negatives, maybe the positives are higher, and I'll tell you why. I was reading this note, and it was a note from somebody who tracks it way more closer than most people do, and which is why I'm borrowing from there. So the FY26 business update, it missed consensus revenues by about 4%, nothing dramatic. The street was pricing in a very large miss. That has not happened, so therefore that's a positive. The backlog of roughly 2.4 trillion rupees lends visibility for the next 5 to 6 years, and hence BHEL withdrawing its letter of acceptance of the letter of intent from MB Power, not yesterday, actually 2 days back, worth about 2,600 crores, may not be considered that big a negative, simply because it is 1% of the overall order book, and the order book or the order backlog is so large that order visibility is not a problem, only execution is. So now, I think that note put it very well, that the dopamine from order inflows is behind BHEL. Incremental order wins will not likely move the stock too much. Some minor order losses will not move the stock too much. They now need to execute. And if the stock or if the company executes, it gets a re-rating. If it doesn't execute, it gets a de-rating. So I think that is where now BHEL or analyst focus will be on BHEL for FY27. So keep that in mind. But I tell you, Alex, it's a day full of the newsmakers, right? Because you pointed out some of the pharma companies and what they have in terms of news flow. There is also IEX, in which this market coupling conversation has started. Trent is going to consider a bonus issue. Geo Financial showed some improvement. MCX has gotten approval for investment in a coal exchange company. United Breweries had adverse comments. It's a massive news flow day today.
Yeah, but the headline is going to be taken, of course, by the banks, and that ultimately is a large part of our focus heading into trade today as well. HDFC, ICICI are going to be front and center. We're going to get a conversation going with Samir Sawant of Mirae Asset, Sher Khan on it. But let's listen in to what both the managements had to say in response to specific questions by NDTV Profit's Piyush Shukla.
You mentioned how the legal review of the resignation by former MD is pending, but what markets were also eyeing was whether the bank's board will go ahead and apply with the Reserve Bank of India for a reappointment of your tenure, which I believe ends in later towards this calendar year. Can you provide us some clarity, Mr. Jagdishan, whether you are keen on continuing with the bank and what is the board's view on this particular matter? And I also wanted to understand that you have posted above industry average deposit growth in the FY26. Till now, your guidance was that next year you will outpace banking industry in terms of loan growth and deposit growth. You will post higher than industry standard. What can we expect now? Upwards of 12-13% sort of a credit growth and 14% the stable sort of a loan growth and deposit growth in FY27. And any color on margins, sir, if you could help us understand when will you reach that 4% figure. So it has been static, it has been stable at around 3.4% between the last quarter and this quarter.
A lot of questions are being asked, but I will let my colleague, because it's pertaining to me, let my colleague Kaizad sort of respond to one of the questions, or
so
many more.
Let me respond to your first question, and then I'll request Srini to respond to the balance. As regards to your question with regard to the reappointment of Shashi Jagdishan, the NRC and the board is completely seized of the matter, and this will be taken up in due course as the necessary process would require. So let me assure you that this is a matter which is engaging
growth in Q4. What would be your guidance in terms of both loans and deposit growth in FY27? The other question I wanted to understand, you are the second largest private bank and have a fair view of how macros will be impacted, the second and third order impact from the Middle East conflict on banks' balance sheet.
Piyush, I mean, very difficult to make a forecast in this day where forecast validity is not even a day at this point of time. But given the overall scenario, there has been an immediate impact on market yields, which you are aware of. There has been an impact on currency, equity prices, and some of this is reflected in the numbers for the Q4. Of course, during the Q4, there was a very little period of the West Asian conflict. We will continue to monitor these indicators. The impact on economic growth and potential credit demand will depend on the duration of the conflict. Of course.
Okay, so that's a collection of some of the commentary from both managements to NDTV Profit. I want to go across to Sameer Sawant, research analyst at Mirae Asset Sharekhan, who tracks the space quite closely, and we're going to get you a variety of views today on HDFC Bank and ICICI Bank. Sameer, very good morning to you. Would you say that, and I'm going to talk about ICICI first, that this was a clear beat on all expectations?
Yeah, of course. Particularly ICICI Bank, almost on the most key parameters like margin, loan growth, and core operating profit, it was a beat. And so I think the overall results were quite positive from ICICI Bank perspective.
The same about HDFC, or would that be a more tempered analysis?
HDFC, I would say sort of decent numbers, because there was a miss on NII as per our estimates, which was slightly compensated by lower than expected provisions. So all in all, the bottom line numbers were in line.
Sameer, then just wrap things up for us in terms of how you read the numbers and heading into FY27 as well. So on the one hand, you have ICICI Bank, which is rock solid, credit growth better than expected, and likely to continue to grow faster than expected. And on the other end, you have HDFC Bank, where it grew maybe not as fast as some people had anticipated, and there is still question mark about what the growth rate is going to be in FY27. What is your pecking order between the two, and why?
So I'll go with ICICI Bank. As far the growth and overall performance is concerned, because first of all, HDFC Bank is yet to reach a desired level of CD ratios. They are, I think, around 94, 95. So I believe that they would be focusing on deposit growth as well, mostly towards deposit growth. So the loan growth may inch up slightly. Currently it is at 12%. It would go maybe around 13% odd up. But for ICICI Bank, I believe a 15% growth would be sustainable. Obviously, depends on the outcomes of other West Asia war or any other economic activity downturn can maybe influence the overall sector growth, and overall credit growth can obviously reflect on these two numbers for ICICI Bank and HDFC Bank. But among these two, I believe ICICI would be giving it a thumbs up.
Yeah, I think that's pretty much the consensus view. How are you feeling about Yes Bank, Sameer? In terms of how we will see some of these stocks respond today, could Yes Bank have maybe a large upside as well?
Technically it is not in coverage, but yeah, whatever I have seen the results, the numbers are quite good for Yes Bank. Margin improvement of 10 basis points on sequential basis, and sharp rise in profitability as well, along with 11 odd percent loan growth. So overall, Yes Bank numbers are good. I believe if the overall markets are good, Yes Bank should show a positive opening, as well as for ICICI Bank. HDFC Bank, you can say mixed bag, sort of.
Okay, we'll leave it at that. Thanks so much, Sameer, for joining in today and giving us your view. Really appreciate your time. We slip into a very quick break.
No,
or before the break, should we take Parag Thakur's views?
I think we should. We have Parag
I think you were teasing the viewer, weren't you?
Kush Bora here.
No, I admit I got confused. I thought we should take a break, but since we are on the topic of ICICI Bank and HDFC Bank, it will be really important to get in Parag Thakur's view, because Parag Bhai last week mentioned this is the last time that I'm talking about ICICI Bank, and look where it's landed us. We're talking about ICICI Bank again. Kush Bora, good morning to you as well. But आज कायदे से Parag Bhai शुरू करना बनता है. You must be happy with the performance.
Yeah. So by God's grace, I thumbed the table on ICICI Bank on Friday, and they proved me right. So full credit goes to Bakshi ji and the entire team. I think superb growth, 15.8% YOY loan book growth. Even their deposit growth was 8% QOQ, which reduced the CD ratio to 86.5%. Their LCR is at 126%. All these ratios will permit them to grow at more than 15-16% easily, if the system permits. And plus NIM, people say that NIM was stable for all, will stay all banks in spite of this 25 basis repo rate cut. But most importantly, ICICI Bank NIM is at 4.3%. It is highest, and there you have that stability. So basically, and with a very, very low credit cost. So basically, you are lending responsibly, where your recovery is superb, and you are making good margins out of it also because of your low cost of funds. And now from here on, I'll say what to look for ahead is OPEX growth will be lesser than business growth. So your jaws are opening. So positive operating leverage will come.
Yeah, and a possibility of NIM expansion as well, Parag Bhai, right? Even if interest rate trajectory changes.
See, they are at such a high NIM now that even to from here to increase NIM will be difficult because
but they don't need to.
Yeah, but they'll grow at 16%. Your OPEX will be lower than your loan book growth. So your EPS growth will be more than your loan book growth, 15-16%. And valuations again, I'll see simply put 1.6 times FY28 book value. FY28 core banking book value is 600 rupees and subsidiary value is around 300 rupees. So out of 1350, if you introduce 300, so 1050 divided by 600 is 1.6 times.
Right.
And 1.6 times for 2.3% ROA, which is industry leading ROA. And growing at 15-16%. So even if it goes to 2.3% ROA, you are getting 40% from here.
You would buy today?
I want to buy, but I am maxed out.
No, I mean, if
I'll keep buying ICICI Bank at this price or below this price or 2-3% above today's price, last closing price. I want to buy, but of course I have maxed out.
Okay.
Through exclusion more than anything else, if you had thought that HDFC Bank had knocked it out of the park, you would have started with HDFC Bank. But you have not. You've obviously chosen ICICI Bank. So through exclusion, you've already told us what you think. But you want to spell that out?
So HDFC Bank, see, I'll tell you, HDFC Bank is a bank which has proven asset quality wise phenomenally well across the cycles, right? In ICICI Bank, we have seen that after Mr. Bakshi has come, that asset quality has improved significantly. In HDFC Bank, across the cycles, they have, so that benefit they have. And that is why if you compare their valuation with the historical average, it appears very, very low. So now it is, I think, 1.4x only.
But the question is not asset quality, na, Parag Bhai. It's the question is about growth. And
no, that's what I'm saying. That's why I took ICICI Banks because they are growth leaders, margin leaders, ROA leaders. HDFC Bank stands with a unique USP of best asset quality and valuations which are much below the historical averages.
Okay.
The core growth slowing down, the net interest income below expectations, the lack of clarity on whether Keki Mistry will be chairman, not be chairman, the two people are rooting for him, we don't know what's going to happen. Does that bother you?
So I think it is captured in the price, in my view. At 1.4x with a 1.9% ROA, I think it is captured in the price. This is tolerable. This is tolerable. It is captured in that uncertainty is now priced in.
Then it removes the case for an increase in price. Do you think you'll see a knock on the stock today? Because
I don't think so. It will be a knock on the stock, but definitely see, if you see the QOQ NII growth numbers of both banks, ICICI Bank is 4.8%. You have to reduce little bit of that interest on tax refund, while HDFC Bank it was 1.4%. So the growth numbers, the margin numbers, the ROA numbers, definitely ICICI Bank scores.
Okay, so we've seen some of those numbers come through, and Parag Bhai has actually spoken about a lot of them. But let's put that in context, and we've got Piyush joining in to tell you about how they stack up against each other, not just the metrics in the fourth quarter, but also the valuation metrics. Piyush, over to you.
Yeah, that's right. HDFC Bank's Q4 results, the advances are up around 12% YOY to 29.60 lakh crore rupees. Deposits have grown around 14% YOY to 31.05 lakh crore rupees. In terms of NII growth, it is lower than ICICI. It's at around 3% YOY at 33,082 crore rupees. The NIM have come down sequentially by 2 basis points and stands at around 3.38% in Q4. PAT, as we are aware, rose 9% to 19,000. Yeah. Yes.
That so what you can see behind you. Let's talk about that comparative and
Yes.
see how they stack up with each other.
Yes, as HDFC Bank's NIM, NII was up only 3%. ICICI did a fairly well job. Their NII was up 8%, 22,979 crore, and there is a reason because HDFC consciously is growing their loans slower than the deposit, so the interest income is lower. Going to the next move is on NIM. HDFC has seen that it has come down by around 2%, 2 basis point quarter on quarter to 3.38%, whereas ICICI Bank's NIM has actually expanded by around 2 basis point to 4.32%. HDFC Bank's PAT is up 9% to 19,221 crore, whereas ICICI's PAT is up 9% to 13,702 crore. ROA of HDFC Bank is lower than ICICI Bank, stands at 1.96%. ICICI Bank's ROA is at 2.4%. Asset quality wise, HDFC Bank's asset credit cost, which is the potentially provision that are made for potential bad loans, it's at around 0.35%, down 20 basis points quarter on quarter, whereas ICICI Bank's credit cost, they do not explicitly share that figure, but we do have the GNPA ratio in the next slide, which stands at around 1.4%, which was down around 13 basis points quarter on quarter, and HDFC has also done well. GNPA ratio is down around 9 basis point to 1.15%. In terms of the net NPA ratio, HDFC's Q4 NNPA ratio was at 0.38%, down 4 bips quarter on quarter, whereas ICICI Bank's net NPA ratio was down around 4 basis point to 0.33%. Valuation wise, the market cap of HDFC stands at around 12.31 lakh crore. It has taken a hit in recent times. ICICI Bank's market cap stands at around 9.68 lakh crore rupees. The price to book ratio around for HDFC is around 2.12x, whereas for ICICI it's around 2.68x. 1 year target by brokerages for HDFC Bank shares is around 1,061 rupees per share, and for ICICI Bank it's around 1,661. In terms of the consensus, there are only two sell calls for ICICI, one sell call for HDFC, 48 buy for ICICI Bank, HDFC 46, and there is no hold call on both these stocks.
Okay, so an interesting head-to-head comparison, and right now ICICI Bank looking much stronger. Thank you for that, Piyush. We'll take a very short break. We're coming right back with a lot of other stocks that we want to talk about and some of your top calls for the day.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
कुछ बड़ा होने वाला है। Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching India Market Open. Let's pull up the implied very quickly and show you what's happening there. 81 points up. Now, this is despite no talks, firing in the Strait of Hormuz. I don't know who's going to turn up to this so-called talks which are happening between Iran and the US. Markets don't seem to care, Kush. Not as much.
Is it open or is it shut?
You
tell me. Both
Schrodinger's Strait. Depends on which eye you look from. Close one eye, it looks open, the other one, it looks shut.
You know, if it wasn't for the absurdity and the humanitarian angle, this would just be amusing. Pehle it was Trump, now somehow it seems like even Iran has joined in. Pehle aap bolte ho band hai, fir khula hai. Gift Nifty was at 24,800 at one point in time on Friday. Right? Imagine the enthusiasm, with which all the call buyers would have gone in, or anyone who's taken a long position would have gone in, only to get disappointed today. But the fact of the matter is that we are here now. If you just missed everything that's happened in the world and everything that's happened around the Strait of Hormuz, you would still take this as a positive sign, right? Now, let's start with whatever has happened and what the view is. My view largely remains what we've been speaking about for the last couple of sessions, which is the bias remains positive, but we are in a consolidation zone. So positive bias, but a big breakout will require either a geopolitical push or, as ICICI Bank's already done, but that will perhaps be a little subdued by whatever's happening geopolitically. So remain long. Any fresh long positions will, perhaps have to be intraday only, because from a positional standpoint, the risk-reward ratio is not favorable. However, let's just to add to those positives. FIIs have turned buyers in the cash segment, and they've been buyers for the third straight session. This is perhaps the longest streak in a long time. Also, they've turned buyers in the index and stock futures, which is also a positive. As if you see the put call ratio, put writing has taken precedence, and the base is shifting higher from 23,800 to about 24,000 now. So all in all, there are positives. The texture is improving, as is also proven by the small and the mid cap index performance and how the stocks are doing. So stay long. Big breakout only above a certain key levels are taken out. 24,500 is the level to watch for on the Nifty. If that is taken out, you see 24,800 on the cards. But like I said, you might want to start booking profits partially in that resistance zone.
It's the only context in which I will say dire straight in a negative way. But having said that, let's talk about individual stocks.
Absolutely. And also, let me just add to that. We've been speaking about consolidation, but largely on the index level. Stock performance, we've maintained that, will continue to remain very impressive, and that's been the case. Let me first come to the stocks and then a couple of updates. ABB is the weekly pick for today. The stock's shown very good strength even before actually, the ceasefire came about. The stock had started showing strength, had started showing recovery. This could very well continue. Targets 73.45, 76.76, stop loss at the 67.50 mark. TMB, Tamil Nadu Mercantile Bank. This is the one, very quietly flying under the radar, but a very positive up move. Volumes, nothing great, but the price action alone is very supportive. So 700, 720 target, 655 is where you keep that stop loss. And Graphite India, here too you've seen a positive bias, a breakout above the 665 zone has come about, and the stock is sustaining. So 699, 717 are your targets, 665 is where you keep that stop loss. And now just a couple of updates. Inox India and GVTND are the two stocks that we had discussed as weekly picks a couple of weeks ago. Both of them have gone on and hit a target to. Inox India, by the way, has done phenomenally well. So you could book profits if you're holding. Friday we said Pokarna is the call of the day. Went on to hit the target too, but the more interesting one turned out to be Nava, one of the three stocks that we discussed, which at one point in time was up 17.5% and closed with gains of over 12%. If you're holding this, not a bad idea to book profits out of this one as well.
Have you given an ICICI target price?
haven't yet, but I'm glad you asked. So ICICI Bank and HDFC, interestingly, did not have a very exciting setup going into this result, by the way. They did have this cap up and this massive run, in the week prior. But last week there was more consolidation with that positive bias and nothing exciting on Friday. So there could be that flip that could come about, at least in ICICI. If you do get a move towards 1400, perhaps even 1420, I think it's a good idea to book profits in ICICI right now. Maybe you could buy again on declines. HDFC Bank, fairly similar view, but the number on that is about 835, 830. If you do get HDFC Bank closer to that level, it's a good idea to book profits and then again add on declines.
Okay. Let's also get in what all the chatter is on the dealing street. Samit Sarkar joining us this morning as we talk about what has been heard on the street. Samit, what are you picking up this morning?
Well, multiple stocks that dealers have highlighted that one should keep an eye out for in trade. Firstly, it's a couple of IT names, HCL Tech and Persistent System. There are sell flows on institutional desk on both these counters, and dealers are indicating that the fourth quarter numbers could be on the weaker side. So keep an eye out for both the IT names. For Kotak Mahindra Bank, there are buy flows on institutional desk, and post good set of numbers coming in from HDFC Bank and ICICI Bank, we could see some buy flows coming in on all the banking names. But for Kotak Mahindra Bank specifically, dealers are indicating that the selling pressure coming in is largely now over, and the stock could bounce from the current level. For PFC and Patanjali, there are buy flows on DI desk. Delivery volumes are also on the higher side. And lastly, when it comes to Lupin, there are buy flows on the large HNI desk is what dealers have indicated, and they're expecting the fourth quarter numbers to be on the stronger side for this counter. So keep an eye out for Lupin as well.
Okay, thank you for that, Samit. So, some of those stocks that could be on your radar. Remember, the heard of the street on the street segment is what we're picking up from dealing rooms. We're not collaborating this or corroborating this as news. This is GUP, and of course, as always, you have to figure out what you want to do with the information that we present to you over here after speaking to your own financial advisors. But let's get to some other stocks that are going to be on the radar. Where do you think the action lies for the next few days, Parag Bhai, apart from the very glaringly obvious banks? Because everything else is going to feel a bit of heat.
So basically, see, it all depends on where oil goes. If, for example, on Friday, we saw a very interesting rally in FMCG, if you see. Lever was up 4%, Pidilite was up
Nestle.
4%.
Yeah.
So that was because I think somebody knew that in the evening, at least for some time, Strait of Hormuz, they are going to open.
What was the point?
So I know.
That person didn't know that Monday tak band bhi
So that rally might reverse a little bit today, but it all depends on where oil lands.
Fast moving straight closing.
So I would say if oil directionally goes lower, then you will see good rallies in FMCG, Indigo, Pidilites of the world. While if oil continues to go up, you will see, I would say, very selective rallies in private sector banks or some PSU banks or maybe Bharti Airtel kind of stocks.
Okay, well, so many other stocks in news. Today is a packed day. I know banks deserve all the attention, but there's just so much more to talk about. Let's do one positive and then we'll talk about IEX as well. But Trent is, well, arguably the positive because the board is set to take a decision on the bonus and dividend with the earnings coming into focus as well. Mahima joins in with the details. Mahima.
Right, Neeraj, so this is important because, it's the first ever bonus for Trent after getting listed and it's, the company is set to consider it on 22nd of April. The exchange filing also did say that they're going to consider dividend as well on 22nd of April. The other interesting aspect is that they've also mentioned that they might do fundraise also going forward and this could be via equity or rights issue. The last right issue for Trent happened in June 2010. If you take a look at the cash balance right now as to how it's fared in the last 3 years, March 24 it stood at around 298 crore, went up to 340 crore by the end of March 25, but September 25 it stood at around 195 crore. So probably the fundraise is on account of everything that they're doing with regards to where expansion goes, because now the cash balance standing at 195 crore, they might need some cash for expansion of store could be one thing. The second could be higher discounting due to competition, and the third thing could be higher inventory and inventory turnover on account of changing trends. So these could be the reasons as to why they are considering fundraising as well. Just to give viewers a perspective of what the growth guidance Trent has given so far, going forward they're expecting 20 to 25% growth overall in terms of top line, and management expects demand traction to pick up over medium term. So this is the overall view, news flow coming in for Trent and why it will be in focus today.
Okay, Trent in focus today. We spoke about FMCG doing a bit of a pullback, but what about a Trent? You think before the results it's a good one to look at?
So basically, see, it's a great company doing all right things. Now they are coming out with bonus, and I saw rights also. So if rights is going to come, it is good sign, because then promoters are commanding money at that particular price, whatever price the right comes. So I'll be watchful of the right issue price. But I think it's a great company to have a somebody who is not bothered about performance for 3, 6, 9 months in the portfolio and just ready to wait out and be patient with a very strong company which has a much higher growth potential, then this is a great company to be in.
Okay, yeah, all right. Certainly those valuation concerns that you might have had 1 year back or about a year and a half back don't exist, or at least they're softer right now. Let's talk about IEX, and Neeraj briefly mentioned this. Let's get right into the details of this, because that same market coupling issue does not seem to be leaving this particular counter. Let's go across to Varsha to understand why this is being spoken about today. Varsha?
Well, CERC has issued new draft rules for market coupling, for market power regulations. Now CERC is looking to introduce a formal framework for market coupling in power market. Now what will change under new system? A single central body will decide the price versus currently, if you see, each exchange decides its own price. Now, market coupling will be applicable for day-ahead market, real-time market and other market segments. And who will decide the electricity price? If I were to talk about, Grid India will become a market coupling operator and will aggregate bids from all the exchanges. Now, what will exchanges do like IEX? So, power exchanges will collect bids from buyers and sellers and will send the bids to grid controller. Now, how will power prices be decided? So Grid India will combine bids from all the exchanges and one uniform price will be calculated. If transmission is congested, prices may differ by region. When will these CERC rules be applicable? Public comments on the new rules are still invited till 16th May 2026 and detailed market coupling procedures will be issued within the next 6 months. Now, of all this, how this will impact IEX? Of course, a negative one. This will reduces IEX pricing power and IEX will to rotate as a market coupling operator with other exchanges. The moat for IEX will actually vanish. Volumes may shift to rival exchanges because 80% share of spot power market is with IEX and the core revenue from transaction fees and price discovery will vanish, and market coupling can pressure margins and overall financials for IEX. So yes, a negative one, but do remember these are just draft rules.
No, Varsha, so quick point. I thought in the day-ahead market and the RTM market, IEX holds over 90% market share, right? Not 80%.
Yes.
Nearly 99%.
Yes,
part
correct.
Part 2, Varsha, this was always the case, right? Market coupling. So what's new in what has happened right now? Is it that the CERC is laying timelines and therefore it's a reality now?
Yes, absolutely. And the one thing, so in Feb 2026, APTEL had dismissed the petition filed by IEX, and hence, we were seeing all the stock price going down. But now this draft rules coming into picture, the clarity, it's like maybe the market coupling will be, come into picture maybe the next 6 months.
Yeah, perfect. Thanks, Varsha, for that. And viewers, just keep in mind, so if they hold 99% in the various subsets of the power exchange market, which is the day-ahead market and RTM market, the belief is that the market share goes down quite a bit over a period of time and it loses its monopoly, so to say, and the pricing power. Parag bhai, very quickly, a negative for sure. How big a negative?
So basically, I think this was known. So stock price has not done anything since last 2.5 years and it has only corrected. So I would not expect a very big fall, but this thing is very important, market coupling news. It will not go up for sure, but I don't think so. And I don't own it, by the way.
Okay. All right. First rates coming in. Exciting morning. Yes Bank, 10% up. This first rate's coming. Okay, all of this will settle. ICICI Bank, 5.5% up. I want to pull up HDFC Bank as well. We'll see if we can put all three together. Of course, the Nifty and Sensex also looking fine. Nearly 200 points up on the Nifty. Again, pre-open session. HDFC Bank is muted, but 2% up. 5.5% up on ICICI Bank. All of these rates will settle. Yes Bank is looking like the star of the show, perhaps, for relative terms and reasons. Pfizer is doing well this morning. EID Parry is doing well this morning. So a lot of stocks in focus. I want to see if we can get the Bank Nifty rates in case we can pre-open. That would be interesting to see how that entire index is doing. On the losing side, meanwhile, India Cements, Kajaria Ceramics seeing a bit of heat today. Shriram Finance seeing a bit of heat. Muthoot Finance also seeing a bit of heat. But overall, even your advanced decline is looking positive. So you're going to see a positive day on the street. Yes Bank on charts, Kush?
So, again, has a lot of trader interest for sure. There has been a recovery, but again, I wouldn't really suggest a trade into this. Immediate resistance is at about 21 and 21.5, just rounding that off. So yeah, if you have a position, not a bad idea to offload some. Don't go out and buy now because it's already at that resistance and that supply zone. So close to 21, 21.5, there is supply. I would rather book profits if I held it from lower levels.
Yeah, it's a profit booking take fundamentally, you think, after the results, Parag bhai? Because on charts, Kush is saying that, okay, now at 21, 22, you maybe hit a ceiling.
Yeah, so I would say Yes Bank has been reporting good numbers on asset quality side and everything. Margins, of course, the NIMs are at a lower base at around 2.6, 2.7%. The only thing is that one big profit tailwind which they had, which is from security receipts, that is now fading away. So, for example, this year, they might have got a benefit of 1300 to 1500 crore. Next year, that benefit will be 1000 crores. That will start going away, fading away. So, from that perspective, I would not buy at these levels.
Okay, all right. So, fundamentally, bear that in mind as well. Milan Vaishnav, founder and technical analyst, Gemstone Equity Research, joining us this morning. Milan, thanks as always for taking the time. ICICI Bank looking like it's going to open significantly higher. At this junction, the pre-open session, it's up 4.3%. If it holds at this level, would you buy at these levels, or if you manage to buy earlier, would you book out? I'm terribly sorry. I think we're going to have to try and fix that link. It's glitching a little bit. So let me ask that same question to you, Kush. Now that we have pre-open rates, 1400 is visible right now for ICICI Bank. If you manage to get at any point over the last 3 weeks, do you take money off the table?
For sure, 1400, 1420, that is, 1400 incidentally happens to be the, 1385 actually happens to be the 200-day moving average, and just past that, there are supply zones. So multiple times the stock has hit that 1400, 1420 zone and retraced from there and sharply at that. So yes, I mean, there will be supply pressure coming in at those levels. Plus, if you did buy it at lower levels over the last 2.5, 3 weeks, you're sitting at fairly handsome profits. So not a bad idea. If you are in love with that stock, even half as much as Parag Bhai is, then at least book partially and then add that same position on declines.
Okay, that's sound advice. First of all, you should never be so enamored by any investment, I suppose.
See, from medium to long term perspective, you can be in love with that stock. From short term perspective, of course, what Kush is saying.
Okay, not everything has to be a long term relationship with your stock. Okay, I want to look at MCX and Shyam Metallics, just stocks which are in news. Let's see how they're responding this morning. MCX has got a thumbs up for an investment in a coal exchange. Nothing much happening there. Shyam Metallics, actually, there's an investigation which will be on in one of its subsidiaries. So that's about 0.5% down. I will look at Geo Financials as well. Geo Financials also reported numbers, and the top line actually was pretty decent, but 0.5% down on that stock this morning. BHEL is the other one that we should look at, and it was in our watch list as well. There's been a withdrawal of an LOI, but that's not making too much of a difference right now. Let's look at Vedanta. The death toll in the power incident has risen for Vedanta as well. The stock is seeing mild amount of pressure right now. But let me go across to Sharad now, joining in with the big brokerage call of the morning. Sharad, what do you have in mind?
Well, yes, in focus is Concord Biotech, and Citi has come out with its report and they have maintained a neutral rating going ahead, and the target price has been cut, and there's a significant target price cut coming in from 1680. It's come down to 1190 rupees, and even the EPS for the next year has been cut by more than 20%, ranging between 20 to 23%. Now, primarily this is reflecting a deceleration in both the API and the formulation revenue, and that's negative for the company, and this will also lead to a compression in the EBITDA margins, and the slowdown is due to the adverse competition coming in a lot of key products. Now they're also lowering the revenue growth forecast from 17 to 18% to 14% on a year-on-year basis. So significant cuts coming in for Concord Biotech for Citi.
I do want to ask both the gentlemen on this table, Parag Bhai and Kush, about Hyundai, because this is a stock that is trading now considerably, about 4% or over 4% from its issue price, lower, right? With that kind of supply coming in, 20% supply coming in today with the lock-in ending, there's potentially going to be downside pressure. So both on technicals and fundamentals, is it now looking like a valuation that you're finding more palatable?
I think closer to 1700 it's a decent buy, but auto OEMs have a lot of headwinds now. Steel prices have gone up so much, all of them will be forced to increase prices. Now that momentum of consumers buying into cars after the GST cut, that is also fading away a bit. So I would say, and not consumer sentiment is also not that great. Plus, remember, in every other country, petrol, diesel prices have gone up. In our country, it has not gone up. It might go up if this situation continues for a while. So I think auto OEMs, I am not very excited as of now. But Hyundai at around below 1700 due to this selling pressure, it is something to consider.
Still far away.
Still far away, yeah.
Currently at very close to 1900.
Yeah, so I am not in a hurry to buy.
On the technicals?
This one amongst the big four, in this space has had a fairly weak structure. Twice I remember, I've given a short call on Hyundai, in the last month or so. So that remains. It's had a good uptick in the last couple of sessions on the back of good volumes, but I think this is more of a relief rally and more of a short covering rally. This could be sold into. And in fact, just to quickly, technically also allude to what Parag Bhai mentioned, all four names here don't really give as much conviction, as they used to in the past. It's perhaps somewhat because of legacy that Mahindra & Mahindra still stands out. I still prefer auto anchors like Wheels India and Lumax Auto, but amongst these big names, Hyundai is a sell, Mahindra & Mahindra is more of a positional bet.
By the way, 908, so the prices have settled and IEX is amongst the top loser on the Nifty 500. Nothing dramatic, just 2.5% cut. But certainly a gash there. Even on the gaining side though, we don't have too many stocks which are really rising. Yes Bank though is up and about 20.64. I must say though, pull up the Yes Bank, whatever 3-year chart if you will, and it may announce various things, come out with various earnings reportage, etc., etc. Stock stays at 20-21 rupees. Just doesn't budge. So bear that in mind when you're trying to think of trading Yes Bank. But yes, this update is interesting. The stock is starting off well. Let's see what it does ahead. Pharma is in news today, and Kush Bora, two large names have both gotten foam for it. 3 observations. I think Alex pointed out both Lupin and Cipla. Is there a trade in either of these two names?
So Lupin I would avoid.
Long or short?
Long or short. It was a long candidate for a while. I'll avoid long because it's had multiple legs of negative divergences, volumes on the way down fairly healthy, a lower high, lower low formation on weekly setup. So it's not looking good. Could be profit booking because if you see the last year or so, it's done rather well. So could be a phase, but right now I would avoid, maybe closer to about 2200 or 2150 thereabouts. It might turn into a buy. Cipla is a little interesting. Not a breakout rally yet, but there is a good base formation, accumulation very healthy, just recently took out the 20-day moving average. So maybe there's a case for a long trade on Cipla with a stop loss around the 1200 mark, and on the way up you could well see the stock go to about 1280, and then supply comes in at 1315, 1320 odd. So good risk reward ratio. Maybe from a positional standpoint, Cipla is something that you can still consider.
But in the pharmaceutical space, Parag Bhai, you will stick with Torrent?
Yeah, I'm okay with Torrent because of course in between Aurobindo also I traded, but more or less Torrent is what.
You were nodding your head on the technicals as well.
Yeah, because it was a call. We just gave it about a week or so ago. Has been doing well, continues to do well. Volumes slowing down, so maybe you could see some profit booking. But the primary trend, from a medium-term perspective, very positive on Oro.
Okay, on Oro, not on Torrent Pharma. Aurobindo.
Torrent Pharma is buy and hold and shut it, fill it, shut it, forget it kind of a stock. So every dip you buy, but momentum-wise, Oro is doing rather well.
Okay, how are you seeing a Sapphire Foods, a GMDC, some of the losers this morning as we're going into the opening session? Keep in mind the overview that you're seeing is actually quite muted, fairly muted in the markets. It's not a runaway positive, it's not a runaway negative, quite like the Strait of Hormuz. No, quite, I was just looking at data. Apparently on Saturday, you had the highest traffic in the Strait of Hormuz since the war started. On Sunday, it came back to 0, and whoever went got shot at. So is that confusing as far as the markets are concerned as well? But I was asking you about GMDC and Sapphire Foods.
अभी GMDC को खराब नहीं बोल सकते 3 दिन पहले स्टॉक वाज अबाउट 20%, राइट, एंड 2 days prior to that it was our call. इसी शो पे यहीं पे हमने कॉल दिया था और वहां से बहुत अच्छा चल गया, तो थोड़ा बहुत प्रॉफिट बुकिंग है. I like the structure on GMDC. There was a breakout imminent just when we gave the call around that 600-615 zone. That's where it came about. So right now some consolidation, some profit booking, absolutely par for the course. I will actually look to add this on declines. Maybe around that 685-700 zone becomes an interesting buy again. So structurally positive. Sapphire Foods, avoid.
GMDC on fundamentals and on valuations is...
So basically, see, it was always a cheap stock earlier also. Now this entire narrative of critical minerals getting added has fueled this big rally. So I would not buy into this because I have seen this stock at 100 rupees was languishing. Nobody was ready to touch.
But that time, if you want to play the rare earth story in India,
I don't want to play it.
Acha, you don't want to play it.
See, there are some things. See, GMDC, in fact, out of the end, all the stocks which have been talked about for critical, GMDC has actually something.
Exactly.
Yeah, but that is okay. But I don't want to play every theme in the market.
So rare earth not interesting right now.
Those themes can be very short-lived. So if you don't trade out in that short window, then you can be stuck with a stock at a very high price.
The problem is that there's a very narrow focus of tradable ideas right now.
Yeah.
Apart from your basics, maybe a smattering of FMCG banks, there's very little option and opportunities.
So recurringness is something which I look for. It should be a recurring earning. It should be recurring, growing earning, compounding earnings.
Okay, let's talk a bit about Asian Paints before we go into the opening session. They've announced a second round of price hikes of 3 to 5% with effect of 5th of May 2026. This takes the cumulative price increase to high single digits to double digits between the two. Earlier there was a 6 to 8% price hike which was implemented in April. So between April and May, about nearly double-digit price hike is going to come in. The stock about 0.25% up before trade. You'll see others also in focus. Paints in focus, is that something that you would look at? Crude impact directly there, but at least they're passing it on.
I think March quarter was good for paints. My channel check suggests me that demand, volume growth was good. They have taken price hikes also. The revenue growth will also be good. So March quarter was good. Of course, from here on, things will depend on
favorite paints.
So I'm playing it through Grasim. Now Birla Opus also comes there. Ultratech is also covered.
Okay. Your take on Asian Paints very quickly, Kush.
It's a hold. Nothing breakaway. So if you have, you can continue to hold. Twice it's tested that 2100, 2000 level and rebounded. So the recovery underway. But like I said, more of a hold rather than a fresh
10 seconds. One stock that you're looking at after pre-market.
The weekly pick ABB 7345 7676 targets 6750. That's your stop loss.
Okay, Kush, going for the weekly pick and not necessarily a day trading idea, but a lot of stocks, like we said, in focus this morning. So maybe you'll see a lot of reactions. On open though, on the green side, we'll watch out for ICICI and HDFC. But first, Mr. Market, not a bad advance decline ratio. Interesting, really. I'm surprised a bit with that. But the indices starting off flattish. Nifty Bank flat too. I'm guessing IT index must not be doing too much either. Okay, 0.17, and the broader markets too flattish, so keep this in mind. Let's get the heat map up on the screen and see what is moving and what is not. Okay, first the gainers. There are a few gainers, more losers, but ICICI Bank right up there. Noticeably, HDFC is not in the list of the top 5. Trend on that bonus announcement 1%. Airtel about 0.5%, Ultratech 0.5%, that reiteration of a higher capacity build out. Adani Enterprises in the green, HDFC Bank is in the red somewhere. Okay, let's figure where. Right in the top 10 losers, by the way, down about 1%. Hindalco though is the top loser. Geo Financial, couple of notes said that the numbers looked okay, but the street not liking it. The verdict is negative. There is weakness in Tata Motors, Eternal, etc. But this is more to do with the fact maybe that the stocks, some of these stocks have rallied and are cooling off today on a day of quiet start. But HDFC Bank is the one, well, for some people, maybe even me, a bit of a surprise, the reaction thereof. Maybe on any other day it would have been different. But yeah, more losers. In fact, now 1/3% lower for the Nifty 50. So some profit booking coming in for sure because of the uncertainty. ICICI Bank, in some sense, from the heavyweights, the lone star really. Trent is there, but it's a lightweight stock. So ICICI Bank kind of giving that support. Nothing else really. 100 points down now for the Nifty.
You know, I can't say I'm surprised because I would say implied was truly misleading. Look at how the situation has changed in the last few hours, and that's what the street is showing. If it was not for ICICI Bank, you'd have a much, a worse picture really. Pull up the contributors and you'll actually get a sense of how poor it is. It's ICICI Bank and Trent to some extent because they have a bonus issue coming in. Bharti Airtel has taken minimal price hikes. Axis is doing okay. But altogether, you have just 24 points out of the 33 in the green coming in from an ICICI Bank. HDFC, the street is not really feeling too tolerant for that miss in net interest income on the top line. RIL, again, a reflection of what is happening in the Strait of Hormuz, right? Any kind of crude choke-ups. That's why you're seeing about a 93-point downtick. Let's pull up the broader markets and see if there's a better situation there. I mean, there's no ICICI Bank there to sort of hold up the broader markets either. So 0.5% down on the Nifty mid-cap 150. The small-cap 250 also nearly 1% down right now. Advanced decline also not looking great. I mean, none of this is surprising. The question is whether investors come in and buy at lower levels, because that behavior and that pattern has been rewarded in the last few weeks. People who have bought in at lower levels have seen a positive outcome of that decision. So maybe that comes in, but it's difficult to say right now till more clarity emerges. Let's look at the sectoral heat map if we can. And the sectoral heat map will show that it's all flat. The PSU banks doing okay. Everything is flat. It's largely a red screen, frankly. Metals, Nifty Metals, the biggest loser, 0.75% down. Realty, once again, seeing some heat and some pain. The small cap about 0.5% down. If you had to take solace, take it from this point that they're not deep cuts in that sense. You know, your worst performing index is not even 1% down right now. So that can give you some solace, perhaps. Let's look at individual stocks. Results impact. Coming in, Yes Bank, JFS. I'm just going to pull up the ones that we've not done on the Nifty. Yes Bank was actually a pretty good set of numbers, just about 1% up. Top line growth in Geo Financial was fine, but there seem to be some treasury concerns there, about 2.5% down. Crude impact, I want to pull up ONGC, Oil India, Interglobe, all of them which could react one way or the other in the red. ONGC actually, with crude going up, should have been in the positive, but that's not really happening. Kajaria Ceramics is another one that I spotted in the pre-open session. And global uncertainty impacts stocks which use gas, propane in large numbers. This one also seeing a bit of a downtick. Asian Paints and Bharti Airtel have both taken price hikes. Very minimal response on the positive side. IEX was in focus. Decoupling concerns are back because of draft rules which have come in, or draft recommendations which have come in. That's the top loser, about 5% down, at least on my list. Alex, I wonder what you're spotting and if there's any clear signal out there.
No, there isn't, Tamanna, and you've actually highlighted quite a few of the big movers this morning. You have the metal pack, and you already highlighted that as the worst sectoral performer, and so therefore the stock that is bearing the brunt of that selling is Nalco, which is down close to 3% at this juncture, 2.7% or thereabouts at this point. GMDC, some money being taken off the table after that red hot rally over the course of last week, but it's only down about 2.5% or thereabouts. Hindalco also losing about 2% or so. Niva Bupa about 2% lower. So no big losers, and neither are there very big gainers, but there are a few that stand out. Shipping Corporation of India, by the way, building on to the gains that it has had in the very recent past with a further 4.5% gain. NLC is up about 3%, Zentech a further 3%. You have Radico Khaitan that's up and about today, and Trent that is doing up, that's up about 2.5%. I very, very quickly, Kush, want to get a supplementary view on ICICI Bank, because it's not the gap up that we had anticipated. It's certainly not 5%, it's just about 1% higher, and 1361. Does that provide you with an opportunity on the technicals to buy at this point, or would you hold off?
No, hold is a better strategy, because since we were anyway looking to book profits at slightly elevated, slightly higher levels around the 1385, 1400 mark, wouldn't really suggest a buy right now. You could hold, keep your stop losses at the previous day closing around the 1345 mark and continue to hold.
If Parag bhai, If you were not maxed out on ICICI
I
Bank,
would have bought.
you would have bought. Okay. You would have bought. So that answers that question. Gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. And we're joined this morning by Gautam Shah, the founder of Goldilocks Global Research. And what an apt moment to be speaking to Gautam. Gautam, thanks so much as always for taking the time, and good morning. The question is, with this back and forth that we've constantly seen, and I think the window for that back and forth has also shrunk quite dramatically based on what we saw Friday to today. How would you trade, if at all? What is the strategy that you would employ?
Good morning. Well, my experience tells me that stock markets are the best judge of geopolitics. And I think the market saw the possible problem early March, and we had that big fall. And now you have the Nifty recovering 2,000 points, which just goes to show that the market is a lot more resilient and a lot more comfortable with all that's happening in the world. I mean, the fact that US market indices, the S&P 500 is at lifetime high tells you a lot about what markets can do and what they have done, because they really believe in discounting. You know, when the situation started, it was all about markets reacting to what had happened. Now it's all about understanding the intensity. And I think the market believes that the peak intensity of this entire, geopolitical situation could be behind us. And that's probably the reason the market is looking a lot more comfortable. I think we've rallied quite a bit. Most of the positives of the situation, I think, are in the price. So I don't think on the Nifty we are going to do anything special from here. 24,300, 24,600 are important resistance numbers. I don't think we are going to cross that in a hurry. And on the downside, I think 23,500 is going to be a sort of important support. So we are going to stay in this band of about 23,500, 24,600. But in this very period, I think stocks, sectors and themes will continue to do well, because what was earlier a major headwind is not anymore. So in that sense, I would be a lot more constructive, but I would be stock specific. So use the volatility to your advantage. If there are dips, use it as a buying opportunity. I think the worst was over at the recent low. We will gradually move higher. There are a lot of other issues that our country is still looking at. So it's not about the index and the large caps, and it's about the broader markets.
Gautam, hi, good morning. It's about the broader markets, not about the index and the large caps. So you are not really in that whole camp of people who are looking at the HDFCs, ICICIs of the world. You're looking at beyond that, and what are you finding interesting?
Well, Tamanna, to be honest, I've not been in that camp for a year, and I think that's saved us to a greater extent, because there is no return on the Nifty. I mean, it's really not gone anywhere. There is no point looking at some of these top names when you know that India is facing a lot of other issues around AI, around consumption, around the economy, around valuations versus the rest of the world. I mean, these are all issues that are still at the forefront. So I don't think the Nifty is in a position where it can do anything special. So top 100 is not something which I'm very excited about. But look at the microcap 250 index, for example. At the lows, it was at 19,000. Today is at 22,300. That's a 15% move on that index in a matter of 3 weeks. So that's where the opportunity is. And I think microcap and small cap, I think, will outperform the Nifty for the rest of the year. Now, how do you play this? You can play it by buying a basket, which is probably best for a retail or an HNI, without really putting your mind to stock picking. Or, you can look at select pockets of the market which have outperformed. And I think for us, metals, PSU, energy are three baskets, which we have been recommending and we continue to like for the medium term.
Gautam, you hit a raw nerve of sorts, if you will. Good morning. Simply because fundamentally it seems to be a no-brainer that energy and energy transition, or both, like in all forms of energy, thermal and non-thermal, will be mainstays. It was probably true before the conflict as well. I think the conflict has only reinforced that belief, both in terms of the companies, maybe the government, and the market players as well. What though looks promising, because this ecosystem is very vast, right, Gautam? I mean, fundamentally, there are green energy producers, there are thermal power producers, there are these suppliers, T&D players, what have you. There's a very wide ecosystem. What looks good to you?
See, this entire energy theme has been a great story for the last 1 year. I think fundamentally, as you rightly said, there was always a case. But in stock markets, there's always a right time for everything. And now with this geopolitical situation that took place and the kind of impact that it had on our country in just 10 days, I'm sure the government and everybody realized that there is a problem and we need to correct it. And I think the market saw that. And I think the market saw that 3 weeks back, and that's probably the reason so many energy stocks have come back so strongly. Disclosure, we covered it at Goldilocks as well. And I think this is a theme that's going to stay for the rest of the year. The NSE energy index is just broken out 5 or 7 days back. This looks like a mega trend. I think a lot of stocks will end up delivering anywhere between 30 to 50%. Some might even double. And I think that's where commitment should be, because I think the government support is going to be there. The charts are very well placed. The relative strength is all there. Now, what to buy? I think I would still stay with the green energy producers. I think it will all trickle down from there. But when a theme does well, everything is a beneficiary. I mean, we saw that with chemicals 4 years back. Everything in chemicals did well and got into a massive bull market. So I think the entire space will explode. If you are somebody who can get into stock picking, you can go to the small cap and micro cap within energy, or you can just stick to the top 5 or 7 bets, which are quite in the open, and I think they will do really well.
Okay. All right. I've asked you this in the past, Gautam, and just from the perspective of one of the most volatile moves in the recent past, and that is crude oil, right? Do you have an opinion on the way that Brent has moved, and do you have any idea about the direction? Because what we saw on Friday was a very sharp move on the downside. The moment that there is even a semblance of a positive update, there's a very sharp move on the downside. So what's keeping it where it is right now?
Well, it's quite obvious with what's happening in the world, it's keeping it where it is. And I think it's going to remain this way for a while now, because I don't think you have a result. You don't have a result to the conflict as yet. It goes back and forth. And obviously, in this kind of an environment, you can't have crude settling down. For 2 years, crude went nowhere. Nobody really talked about it. It was languishing in that band of about $65 to $85. Talking about NYMEX crude, and then this situation came up, and that led to a big move towards close to 120, and now it's back around 85-90. I think it will stay elevated, which I think in some sense is a problem for India, and therefore Nifty and large caps is another reason why they might not do as well. More likely that they stay in a band of say 80 to 105, but I don't think the movement in crude is a lead indicator to what happens to the stock markets. At least that's not worked page by page in the recent past. So I would not look at it with such close metrics. But I think what has happened
sorry, I'm going to just interject on that point, because the general understanding is exactly that indicator, that crude is a lead indicator of how equities is going to behave. You're saying that it's been decoupled?
I'm not saying it's decoupled, but this logic was written in the textbooks in the 70s and 80s. And I don't think you can go by that logic, just one logic to understand equity markets today. There are too many other factors. Who had factored in domestic liquidity? Had domestic liquidity not been there, there was a very clear direct correlation between crude and, equity markets. So I'm just giving you food for thought. And that's probably the reason we're looking at a lot of
I'm saying forget about 70s and 80s. Let's talk about the last 6 weeks in the Strait of Hormuz. Crude hits 100, and temperatures here go up as well. So despite the domestic liquidity, are you saying in the current situation, forget about the textbook definitions, crude is not something that is going to impact us as much as it's being thought?
Not at all. Crude will definitely impact us in the medium term and long term. Market realizes that, and that's the reason we are still one of the underperforming markets in the world in terms of the overall recovery that has happened in the last 3 weeks. S&P 500, as I said, is today at 7,100. Look at European market recovery. Crude is definitely a problem. All I'm trying to say is don't try and judge crude movement on equity market movement on a day-to-day basis. If it stays elevated, it's definitely a problem for India long term, but I don't think it's going to be a case for markets to collapse.
Okay. Yeah. Also puts into question that in normal economic times, a lot of the other indicators become very, very relevant. These days, the indicators probably have to react a lot more to the Truth Social posts, and now and the posts on X by the Iranian side as well. So that is also playing quite a bit of havoc. Gautam, I'm inclined to ask you about gold. After a phenomenal 2025 or better part of 2024 and 25, it's kind of gone quiet, almost sedate. What's happening here?
I'm happy it's gone quiet because $1,700 became $5,400. That's not normal by any standards in a matter of 18 months. It needed that consolidation. It is in that consolidation phase. It's not going to fall big. I think it will see its rallies from time to time. And I think it'll probably stay in that band of, say, about 4,000 on the downside and 5,300 on the upside. It needs that consolidation. I still feel that silver is the bigger opportunity. We've recommended clients to take positions in silver every time it gets close to 65. I think it will stay in that large band and it will trade with the bullish buyers. But gold and silver is an opportunity. There's no doubt about it. It's just that you have to now buy at the right price. But the other big theme, which I'm also a big fan of, is hard assets. And I think, as you know, I've said this on your channel multiple times, the metal space looks very interesting to me. It is, as we speak, at lifetime highs. Look at what ferrous and non-ferrous metal stocks have done in the recent past. And I think the best is yet to come for metal. So there's a big move, even from current levels, for the entire metals pack.
Non-ferrous both, right, Gautam? Very quickly.
That's correct. See, non-ferrous already had a mega trend in the last 1.5 years. Now the ferrous side, the iron and steel producers are making a comeback.
Yeah.
So that's also a big opportunity going forward.
Yeah, by the way, like we said in the morning, steel spreads viewers have really shot through the roof. So keep this cohort in mind. Gautam, great getting these lead indicators from you, even if crude may not be a lead indicator anymore right now. And people will have both sides of the opinion there. But thank you so much for joining in and talking to us today.
Thank you, Neeraj. Pleasure.
All right. That's Gautam Shah of Goldilocks Premium Research. Now, let's move on to the corporate conversations and first get in the flexible workspace provider Smartworks. They are accelerating the expansion strategy. There were question marks raised around whether they'll be able to meet some of the guidances that they laid out, etc. or no. Before we get the management, let's get in Mahima to set up the conversation for us. Mahima.
Right, so Neeraj, as per the recent news flow coming in with regards to their expansion, they've expanded a multi-city engagement with Forbes, where the client portfolio spans around 4 cities, over 5,000 seats, and this is expected to have a rental revenue of around 155 crore from all locations. In the recent news flow, they had also announced their Hyderabad capacity expansion. They were set to invest around 17 crores in that one as well. In terms of where capex guidance goes, they've said that 2.5 to 3 million square feet per year is something that they're looking to add, and 350 to 400 crore per year is what they're going to invest to do so. In terms of geographical strategy, global capability centers contributed over 15% to their revenues in Q3, and they are positioned as a major growth driver for the next 3 years as per management as well. And in the last 9 months also, they've signed 4 mega global capability center deals with over 1,000 seats in Europe as well as America. Right now, the expansion focus remains in tier 1 cities, and Singapore is positioned as a strategic presence as well. In terms of the management commentary coming in, I think the key one for me was that Smartworks can sustain 25 to 30% of annual growth without any incremental equity raise, is something that they've said. So we'll have to watch out for as to how this expansion takes place via internal accruals. So this is the entire aspect of news flow coming in and what we're going to talk to management about.
Okay, Mahima, thanks for setting that up. Harsh Binani, co-founder and executive director of Smartworks, joins in right now on the show. And Harsh, good morning. Thanks so much for joining in. We thought of doing this conversation with you while you are in your silent period, not to get in not the last minor decimal detail, but to just get a sense of whether you as a firm are on track for delivery with the cash flow numbers estimates that maybe the street would have had 6 months ago. Because, the last couple of months, there have been question marks, not just for you, but for a clutch of players in this ecosystem, that will they be able to hit the numbers of expansion that they had guided to, the million square feet that they had guided to, etc. Could you tell us if that is indeed on board, if you are permitted to talk about it in your silent period?
Good morning, Neeraj. Thank you so much for having us this morning. Just to take a step back before I get into the specifics.
Yeah, sure.
Neeraj, what we are seeing today play out is a mega trend. It's once in a decade shift right in front of us. Offices are no longer being consumed as a static conventional lease, but rather you're seeing consumption happen through workspace as a service. In fact, it's not a surprise that flex space, where we are the market leaders in terms of area, is no longer an alternative. It has actually become the default now. And you have several such examples in India, whether it's the data consumption or the quick commerce revolution. Flex space in India is the largest category in the world. So that's the broader context with which how we should look at the overall space. Of course, we will be declaring our results very soon in the next couple of weeks. So I can only reiterate what we've mentioned during our last 3 quarterly earnings. The company went public in July 2025. And the business model of ours in the last quarter, like we mentioned, is now entering a cash compounding phase where the business model is flex, but in reality, we are an annuity-led flex platform where large tenured, long enterprise contracts give a lot of predictability to what we do. So today we sit on more than 4,700 crores worth of committed contracted revenue. We've also mentioned during our last earnings call and consistently that the business will continue adding 3 million square foot every year, but that's largely going to be funded by internal cash accruals that the business has. So we are firmly now entering a compounding phase where not only will you see massive growth in footprint, but all of this is also going to come with expansion in margin because operating leverage is clearly playing out. And you will also start to see that reflect in our balance sheet metrics, like you had seen in Q3, where our ROCE jumped and our free cash flow was almost starting to get positive as well.
Harsh, hi, morning. Alex here. I'm just wondering about relatively near term. And this is something that a lot of people will wonder with regard to setting up of new capacity and acquisition, whether cost will increase because companies will have inputs rise in terms of inflation because of the war and because of everything that we're seeing, right? So you're talking about steel prices going up, you're talking about concrete prices going up, everything goes up. And so therefore real estate, irrespective of which place you play in, is going to see an escalation. Is that something that you're bracing for as well?
Good morning, Alex. It's a great question. And in fact, the question reminds me of a massive opportunity that lies in front of us. Because if you look at how this industry has now risen to almost become 15% of India's commercial office space, we are a service provider whose main raw material to begin with is the rentals that we pay to our landlords. And in the case of Smartworks, you will see that we've specialized in leasing really large format campuses. Courtesy leasing these large campuses, we always end up getting preferred terms. And recently, there was a report by Cushman as well that the vacancy in India has actually tightened up. And it is actually at a 5-year low, nothing that we've seen in the last 5 years since pandemic. So this, in fact, presents a massive opportunity for us because this is actually telling you 3 things. One, that there is real demand on ground. For the last 3 years, consistently, about 65 to 70 million square foot of leasing has been happening in India consistently. So it's not necessarily a demand issue. The bigger issue is whether such supply is available or not. And here is where we have secured our supply for the next 2 years. So our input costs when it comes to rentals aren't going to go up. And the way our business model is set up, today our pan-India average per seat cost is about 7,500. Alex, what is 7,500?
Yeah.
7,500 is about 250 rupees a day. What are you getting in that? You are actually getting an office plus a hotel combined in that. So office rental costs are taken care of. And like in a hotel, right? Your utilities, electricity, tea and coffee, facility management, everything is bundled together. And this offering is not isolated in one city. We have several campuses across the city. So for example, Alex, in Bombay, we have campuses in Andheri, Vikhroli, Navi Mumbai.
So basically,
and here when you see,
Harsh, ultimately what you're saying is that you have ample room based on the costs that you currently have worked through, and you can pass on if required into that cost, right?
So without even passing on and taking any material pricing action, because our cost to serve is so low, we will continue delivering value. And Neeraj had mentioned, of course, right, when Mahima had set up the context earlier about this 155 crore deal with this Forbes 2000 company. This is in fact a testament, Alex, to the business model that we are able to sign a lot of long tenured multi-city deals, right, with a lot of these large enterprises where we become core to their strategy. And as India proliferates, you will start to see a lot of these concepts of work near home, walk to work, all play out, which is where a model like ours, right, which is set up all across India, and we have several hubs in each city, that will continue to benefit from this mega trend playing out in front of us.
Sure. Harsh, very good morning. Tamanna here. A couple of mega trends playing out. And the other one, of course, is AI, and I'll come to you on that. Just wanted to check, what are your current occupancy levels? Are you still maintaining around 90-92%?
Good morning, Tamanna. Our occupancy levels continue to remain above 90%. So for all our mature campuses which have finished more than 12 months, in fact, our committed occupancy, as we reported in our Q3 results, was in the range of 93%. And this is courtesy all of the long tenured contracts that we signed. And in fact, we had mentioned a very key metric to our business. 35% of our revenue comes from 1,000+ seater deals. And these mega deals ensures a lot of stickiness. And the advantage of these deals is that not only are these clients code to that location, but they also expand and grow with us. So in fact,
just trying to understand. So sorry, Harsh, just trying to understand. So any impact you've seen in new business because of what's happening geopolitically or AI adoption, and because that's also a mega trend which is coming through. And I understand perfectly that 35% of your clients are long-term, so that stickiness stays. But are you seeing any new business impact at all in fresh occupancy coming on?
Look, our business over the last 5 years has been fueled on uncertainty. First, there was the COVID pandemic, and now you have the recent uncertainty. All of this augurs very well for flex space as a concept, because larger occupiers do not have an inclination to sign long tenured conventional leases of 9 to 10 years. So the more uncertainty that you see, better becomes our product and the value proposition. So from that perspective, in the last 3 months, the two large disruptions that you've seen, right? One is the impact of AI, and the second is the impact of this entire war. Both of them have in fact been big demand drivers for us, and we have seen no slowdown whatsoever. And in fact, going forward,
sorry, just for my answer, how can AI be a demand driver? You'll just need few people in seats for any business.
That's a very simplistic view of how AI is going to impact the workforce. But if you just take a step back, what is happening? AI is actually creating new industries. A lot of AI occupiers, particularly as we're seeing India becoming the office capital of the world, right? A lot of GCCs continue to come to India. They have some of these high value functions. And for them, when someone like Smartworks can come and deliver office spaces in 90 days across India, it becomes a big advantage, because you yourself don't know how many people do you need in 3 years, 5 years. So from that vantage point, A, we benefit, and B, AI is redistributing a lot of workforce across different industries. So from that vantage point, if you had to just look at the Cushman report as well, what is it telling us? Lowest vacancy in last 5 years. In sub-markets, it's less than 3%. So we believe that AI will actually be a big facilitator for redistributing a lot of demand to flex. We do not see any slowdown based on AI. And in our model, for the next 2 years, we have our entire supply secured. And we have a committed revenue of more than 5,000 crores. So in fact, it's going to be a big opportunity ahead of us.
All right, let's hope that's how it works out, Harsh. And I agree with you. I think the verdict is still out. And the final word has not been said on what exactly is the impact on AI, but we've seen globally large flex space companies sort of see meltdown in their stock prices for this fear, right? That you're going to have less people that will be needed, less bums in seats, as they say. But thank you so much for speaking with us today. Great to have you on. All right, our next conversation, DRDO is set to hand over full missile production to private companies under a new manufacturing model. For players like Premier Explosives, this could translate into stronger order visibility and deeper integration into India's missile and defense ecosystem. Before we speak to the management on this development, Varsha joining in to set that conversation up.
Well, thank you so much for that. You know, what DRDO is signaling is actually the missile technologies, if you see, are rapidly evolving, and DRDO is working closely with private industry, wherein the focus will be shifting from R&D to full-scale production. And the new model, that is development cum production partner, is being introduced. Now, what is this model is, the DRDO will design and develop missile system, and an entire production will be handed to the private companies, and the private players will be involved from start to finish with fastest delivery and scalable manufacturing. Now, why this is important? Because this strengthens Atmanirbhar defense manufacturing, reduces dependence on the PSU-led production, which creates long-term order visibility for private players and will boost domestic missile and explosive ecosystem. And lastly, why Premier Explosive is in focus? Because it's a key developer, supplier to DRDO and defense program, and also is expertise in energetic materials and explosive, and has direct linkage with missile and strategic system, and also is positioned to benefit from higher indigenous production. So hence, Premier Explosive will be a big beneficiary out of this.
Okay, we're going to try and get the management. I'm told we've just lost that connection. Thank you for that, Varsha, and we'll come to that conversation as well. But defense space overall, you know, I mean, the stock prices of some of these companies are not really keeping up with the pace of announcements, is what I would say. Is one of the reasons possibly could be that lumpy business? You don't know when it's really going to hit their balance sheet. Timelines are long.
Yeah, but that could be one. But two, I think the last 12 months have shown that some bit of that lumpiness is getting out, because 6 upward revisions to the annual outlay of defense by the government of India alone, right? Let alone what comes out now of Europe and some of the others that we were talking about day before yesterday too, or on Friday.
The South Koreans are here today. I don't know if there's going to be something on defense, but definitely on technology there will be more cooperation coming in. Yeah. But then that's the point. The revisions are there. The stock price is not keeping up with the pace of.
Yeah, some of them have though. So I was just seeing, for example, just one swallow does not a summer make. But Paras Defense, for example, in the last 4 days has moved up from 700 to 810. A couple of others, but yeah, maybe the street now wants to see the proof of
real, the real action, right? Which is why I've heard one commentator at the very least talking, if I'm not sure if it was Parag Bhai, talking about why he likes BHEL as opposed to some of the other names, because the timelines for the completion of their projects are relatively shorter and you actually see cash flows come through. Whereas a HAL, you would wait for quite a while, or a shipbuilder, you would wait for quite a while, just purely because the gestation period is so long and you have to watch that Z-shaped revenue model play out over a period of time.
Even a Zentech, for example, had a great run and then cooled off quite materially as well. So in some sense, some of these are interesting thoughts. Okay, let's see what happens to defense. Okay, but like we said, I mean, we try, while we wait for the management to come back, we're trying to talk about other themes which could do well. And FMCG, which had in some sense a banner day on Friday, their expectations are being shaped by geopolitics as much as demand, because higher Middle East exposure is adding that little bit of uncertainty. Before we get in Abneesh Roy to talk about which stocks could do well against this backdrop, Mahima Johnson with the list of the factors to watch. Mahima.
Right. Saniraj, Friday moves that we saw on FMCG was largely on account of the way, Bajaj Consumer came out with its earnings and did see, a good growth coming in. That's why, probably we saw an uptick in the counters, penciling in a good Q4. Overall, if you take a look at Nuvama's top buys, they include Marico, Nestle, Tata Consumer, as well as Britannia, and they also like Pidilite and Asian Paints. Now, in terms of the Middle East exposure of FMCG company, I think the highest is from Dabur around 6%, followed by Imami around 5 to 6%, then CCL products around 5%, Marico, Bajaj Consumer, Berger Paints, Tata Consumer, as well as Asian Paints and Pidilite in the 2 to 3% of range. Now, overall, the concern going forward will be because of crude prices, because that will, overall impact packaging cost of these companies, as well as raw material costs going up. Packaging costs around 15 to 20%. The other aspect is edible oil inflation as well. That's one of the key talking points, because overall edible oils have in the last couple of weeks the price hikes have happened in that 4 to 5 liters per range, and this will of course accelerate revenue growth for counters like AWL, Agri, as well as Marico. But overall palm oil has been up 25% during the quarter, and this could impact counters like HUL, GCPL, Bikaji, Britannia, etc. Price hikes going forward are expected in Q1 FY27. This is largely the expectation. Even in terms of monsoon, below that 94% mark is negative for rural consumption. So that is something that we will be watching out for going ahead in FY27. But overall, this could be positive for summer categories. So counters like Varun Beverages, Imami, Quality Walls, United Breweries, etc. could benefit. Just last point of view from a valuation perspective, a lot of these counters are trading below their 5-year averages. So it raises the question whether this is the right time to enter a lot of these FMCG names or not. So this is the overall view of what's happening in the FMCG space.
Okay, thank you for that, Mahima. Avnish Roy, Executive Director, Research, Nuvama Institutional Equities, joins in to speak on this morning. Avnish, very good morning to you. And of course, we'll get to FMCG, which is where your expertise really lies. You track that. But I want to get an overview on the markets first from you and the kind of uncertainty we've seen. Even though we have range-bound trade today, do you think markets are now looking at other factors apart from the disruptions of what's happening geopolitically?
Yeah, I think I'll speak more on FMCG. Yes, markets will be volatile based on geopolitical. Crude clearly is a monitorable. But clearly we are positive on FMCG in the FY27 perspective. And we see multiple reasons for that. What we are seeing clearly is we are seeing pricing growth coming back for the sector. If you see paints, 2 round of price hike by the market leader has been announced. So that clearly is a positive for FMCG from a market perspective, because as you rightly asked on the geopolitical issue, lot of other sectors which have say exports etc. will have that issue. Even in FMCG, Imami and Dabur will see this issue in March month and April month also. That Middle East will be quite challenging, because if crude is not coming, then obviously FMCG is quite difficult to take from India towards Middle East. So that is a challenge for Imami and Dabur. But for many other companies, Middle East is quite small. So we are seeing that interest in the sector is coming back because of pricing power, and local players will lose market share, right? See, in most of the FMCG paints, there is 10-20% kind of market share of local players. They will feel very challenging in terms of working capital. They'll cut down advertising promotions. So we always see market share gain for the market leader in these kind of scenario. Of course, Q1 paint sector, FMCG will see margin pressure. But Street is now looking at a more long-term, that FY27. Yes, El Nino risk is there in the second half. Q1, there is a margin pressure. But frankly, every sector will see challenging times because of the Iran crisis. But overall things, if you see pricing growth, operating leverage, and definitely market share gain, those I think market is taking positive from a construct perspective for the FMCG.
Okay, yes. So it's a strong argument to make, Abneesh. And I guess to a certain extent on Friday, a lot of buying seen in some select FMCG names, even the frontline companies. My point to you though, is just to counter that just a tad bit on expectations, which is, for example, for an HUL, after the last quarter results, where the expectation was that volume pickup would be seen in FY27 in the first half, and it would improve further in the second half. If there is going to be a cost escalation, and okay, fine, if they have pricing power and they don't have to pass on as much as the smaller players, there will still be a challenge to that volume growth, won't there be?
So good question. So if you see what you have said, actually that is something which has already played out, and that's why Hindustan Unilever, Asian Paint, and many FMCG stocks corrected in the initial time frame of the Iran crisis, because crude oil and palm oil etc. are a key raw material for HUL and most of the FMCG. So that valuation comfort we got. These days, how it works is near-term results really matter. So if you see, the start for FMCG sector in Q4 has been extremely lucky, extremely strong. So we saw VST Industries result, that's a tobacco company, very strong sales growth, very strong EBITDA growth, but that was on a soft base. Then we saw Bajaj Consumer on extremely strong beat versus our and very strong numbers. Now Nestle results are there tomorrow. We have already published a preview. We expect strong numbers from Nestle. Even for Hindustan Unilever and Asian Paint, our sense is we should see Q4 broadly the recovery will sustain. So for Asian Paint, we are building in 9% volume growth in our preview numbers. But we expect that given Asian Paint is so aggressive, we will see beat to that. That is our expectation. Even for Hindustan Unilever, what you said, Q4 versus Q3. Q3 was a good recovery, right? Companies saw 4% volume growth and 5.5% sales growth, which was a multi-quarter high. We expect that even in Q4, we should see recovery in HUL sustain. So how market sees these stocks, and that is the right way, that yes, initial Iran crisis already it has played out on the stock correction which we saw. Then the market sees okay, Iran is now getting factored in. Now what? So yes, as I said, because start to the Q4 result has been strong, and as I said, in Asian Paints and HUL, I do expect that overall Q4 numbers should be decent. That's why I think the valuation comfort is coming back. Of course, sector rotation happens. Initially, we did see that IT sector in the last 2 weeks, there was a comeback. So yes, sector rotation also is happening, and crude from the top has corrected. So whenever you see that geopolitical issues are getting resolved, people feel that okay, yes, FMCG, the stocks have corrected, there's a linkage to crude, then those stocks come back. So what you said, I think it's a mix of all this rather than just okay, no sector will keep correcting based on the same news, right?
Agree completely. But okay, so correction is one. The other thing is, Abneesh, the recovery, right? And there's talk of Asian Paints at least having hike prices, and other companies might follow suit. And this is the second hike, I believe, in the last 2 months. What does this mean for the paint stocks' fortunes for Q4 and Q1?
Yes, it's a good development. I think in paints, if you see first round of hike, which Asian Paint took was around, can I go ahead?
Do.
Yeah, 6 to 8% hike Asian Paint has taken, which is a positive. Apart from that, in the second hike, which came over the weekend, we are expecting 3 to 5% hike. So if you see, it's a very sharp double-digit hike if you combine both. Generally, Asian Paint is quite aggressive in the recent times and in inflationary year. Please note there is 25% market share of local players. Even Birla Opus, if you see, has already taken one hike. We expect that even Birla Opus and all other paint companies will eventually match Asian Paint on pricing, because this industry, if you see, only 40% do have pricing power. So in spite of all this Birla Opus and inflation, if you see, there's a lot of concern that will Asian Paint be able to pass on. Just see how quickly they are passed on. And my sense is at a $90 also, crude oil, these two hikes are now going to overcome the entire inflation. If crude moves to $100, I think one more hike might be needed. So we would monitor that. But I would say that even if crude moves to 100, I think Asian Paint will take one more hike. Because as I said, you operate at around 40%, paint companies operate at 40% gross margin. So this kind of inflation you'll have to pass on. And as I said, market leader always takes market share in this kind of year. And in fact, I see a silver lining that the local players and the new player clearly have not seen this kind of a volatility in the raw material. And as I said, the advertising spends and promotions will be cut by the new player and the local players. I think that's a market share gain scenario for Asian Paint. So yes, in Q1, of course, there will be margin pressure for entire FMCG and the gross margin even for paint companies. But as I said, May 5th when the second hike is happening, I think the entire hike inflation is being taken care of. So there will be some pressure, but structurally investors will see what is the medium long term. And if you see how this industry behaves is when the inflation actually corrects, you see that players will still hold on to the pricing for 1 or 2 quarters. So that's where I think the entire stock up move happens. Plus, as I said, in Q4, I expect Asian Paint to report a good volume growth. Okay. So we are positive on the Asian Paint in that space.
Abneesh, before we wrap up, top FMCG pick, top paint pick.
Sure. So in terms of near-term numbers, I think Marico, Nestle, Tata Consumer are looking the best. In terms of paint, I already answered. Asian Paint is our top pick there. We are seeing very high aggression from Asian Paint, and Asian Paint will take market share from local players in this scenario. In terms of crude recovery, clearly Godrej Consumer and Hindustan Unilever also good place, but you'll have to monitor crude oil for that because it's so volatile. But Godrej Consumer and HUL have high indexation to palm oil and say to the packaging cost also. So if crude corrects, I think they are good plays on that. So we would add those two names from a crude play. So these are our topics: Marico, Nestle, Tata Consumer, and Asian Paints.
Okay,
From a
fantastic.
fundamental perspective.
Fantastic. From a fundamental perspective. Thank you, Abneesh. I mean, the foremost voice really on the space that you can ask for, and very clear response over there coming in from Abneesh Roy of Nuvama. Let's talk a bit about BHEL. Company's order inflows in FY26 have fallen sharply. Let's pull up the stock price as well. The stock price has definitely not fallen sharply. That's about 4% up right now in a market which is quite tepid otherwise. Puneet, what's going on with BHEL?
Well, thank you for that. Definitely the 19% drop is one of the key concerns. There's also a letter of intent being cancelled of almost 2,600 crores, but the overall order inflows of 75,000 crores as an overall number still continues to be strong, and there is a book-to-bill ratio of almost 7 times to the company, given the company's current revenue state of affairs. So you are seeing order book visibility for the company at 7.4 times gives you enough comfort for the next 1 to 2 years, and these issues of cancellation of LOI because of non-delivery is of course, while concerning in the near term, you will see a long-term more prospects for the company to be important at this point of time as well, especially in terms of new order inflow. So execution has picked up sharply in Q4, and hence in the whole year also the provisional revenue number gives us that key positive trend for the companies. But overall, given the long-term nature of the order book, hence potentially one of the key reasons for the stock to continuing to be in an up move. Provisional numbers for FY26 turnovers are up almost 18% at 32,000 odd crores, with they have already commissioned 8.9 gigawatts of power capacity in FY26. So these are some of the key factors to watch out for. Stocks rallying possibility on that 7.4 times book-to-bill ratio, but a lot to watch out for in the quarter 4 earnings.
Yep, for sure. But Puneet, thanks for that update. Viewers, I'll tell you why the stock seems to be, or stock is doing well today. That is primarily due to the FY26 update that they've given. That business update missed the consensus revenues by just about 4%. Only 4%. I think the street had factored in a very large miss from BHEL's end because of execution challenges. What they've done is only 4%. And hence, the belief will be that actually the earnings cuts that were factored in will not be so bad, and they might need to revise it upwards. Also, the backlog of 2.4 trillion odd lends visibility for the next 5 to 6 years, and hence this 2,600 order LOI that they have to take back 1% of their order book. Not a dramatic miss. And therefore, as we said, BHEL now moves on from being getting the dopamine from order inflows to actually seeing movements on the back of execution. I think that is what will drive BHEL. And because Q4 has seen a sharp execution uptick, the stock is up 3.5% today. New highs for this one. Keep an eye out for the big execution play out of India. And yes, Tamanna, God bless you.
Thank you. That was a quick sneeze in the studio. Okay, BHEL looking exciting. We have a very interesting interview lined up, in an exclusive interview on NDTV's Walk the Talk with Editor-in-Chief Rahul Kanwal. Industrialist and RPSG Group Chairman Sanjiv Goenka has shared his insight on the ongoing energy crisis, global uncertainty, and how India stacks up to its peers. Listen in to a slice of that conversation.
You know, we're talking at a time when the world finds itself in the midst of the biggest oil shock, energy crisis, global economic uncertainty. How are conglomerates like yours dealing with the uncertainty around when this war ends, how long it goes on for, and the ripple effects it has on companies like yours?
Undeniably, there is an impact. And those companies, we have one company where fuel is an important raw material, and therefore it's a huge impact on that. But frankly, there is also confidence that somebody like Narendra Modi, or Narendra Modi specifically, he leads us, and ये भरोसा है कि मोदी है तो होगा. 2 महीने 3 महीने यदि तकलीफ भी होगी तो उसके आगे चल के अच्छा ही होना है.
Sure, yes and no, because while of course the government can try what it will, and it is, a lot of this is frankly out of the government's control, and therefore you're having to respond and react to actions of the Israeli side, the Americans, the Iranians, which are having an impact on the Indian economy. You know, you're also in the retail business, apart from a whole host of other consumer-facing businesses. Are you seeing that impact already in terms of consumers holding back on purchase?
I think there is some impact, and people are wanting to conserve resources and capital. But say, as far as we are concerned, yes, we do realize that 2 or 3 months will be challenging. But it's about this whole India story. It's about the great potential that India has. And yes, 2 months or 3 months or 4 months, who's to say, will impact us. But these 2 or 3 or 4 months cannot be defining in the career of a company. And as I said earlier, the confidence is that when you have an Narendra Modi at the helm of affairs, he will make sure that India gets its due soon enough.
Dr. Goenka, there's never a good time for war, but this war comes at a particularly inopportune time from the Indian economy's perspective, because post the budget, it just seemed that the Indian economy was poised for a takeoff in terms of capacity expansion, industrial production, and the economy seemed in a good space. Do you see the consequences of the war being relatively short term, or do you think this could drag on for several years, if not just for a few quarters?
I don't think it's going to be very long term.
Not the war, I'm saying the consequences of the war.
The consequences also I don't think will be very long term. But frankly, it's difficult to forecast how it's going to impact us on a medium term basis. There is a short term impact, of course, and it's going to impact everything in terms of the company's performances. But I think going forward, the faith in India, in the Indian consumer, in the Indian market, in the Indian ecosystem is so high that I think it's going to bounce back. And for us, we have one set of businesses which are impacted because they are based on fuel, and therefore the prices are impacted. So therefore there is an impact there. But in most of our other businesses, it's not really impacting us. For example, the power distribution business, it doesn't impact us. Of course. In the renewable energy business, it doesn't impact us. In the BPO business, it doesn't impact us. In the music business, it doesn't impact us. In the film production business, it doesn't impact us. So, you know, having a diversified portfolio is actually proving to be an advantage at this situation.
KP Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise.
Welcome back. You're seeing some amount of recovery in the markets. In fact, I just want to pull up the Nifty and Sensex before we get to our next conversation. Nifty peaking into the green. So recovery from lows to some extent, but it's been range bound. 24,300 has been held on. Let's see if we get to 24,400. We're not too far off. The Nifty, the Sensex also back about 0.25% up. But let me go across to Rishabh, who's giving us details on an event which is worth tracking today. There could be a fresh FTA, free trade agreement, between South Korea and India. The South Korean delegation is here today. Rishabh, give us more details.
Very crucial meet between India and Korea is set to take place today here in New Delhi. What you have is the heads of the 4 largest conglomerates that have come out of Korea, also joining the South Korean president on an official business delegation visit. You have the chiefs of Samsung, Hyundai, LG, as well as SK Group, the much famed SK Hynix AI group is also coming to India as part of this delegation. So a lot of very interesting names as part of this. You have a 200 plus business delegation that is coming in, flying in from Korea to New Delhi. The focus sectors are, of course, going to be electronics, autos, semiconductors. You have electric vehicles, shipbuilding, AI, supply chains, all of them becoming a very integral part of this current visit. Another very integral part of this visit will be the upgradation of the current FTA that India and South Korea share. So the CEPA, the Comprehensive Economic Partnership Agreement, that is also set to be upgraded, because the current CEPA, which was signed way back in 2009, that has some sort of limitations now, and there is scope to sort of review it and take it to the next level. So that's what Piyush Goyal, the trade minister, is also going to look at with the South Korean president. What you also have is India pushing for better access when it comes to services, pharmaceuticals, agri-products, while what Korea is looking at is gains in manufacturing as well as electronics. So there is some sort of a trade-off to be made when it comes to these trade agreements as well. What is also important is that both countries are looking to diversify against some sort of dependence on China, as well as there's also the US tariff pressures that the countries have to navigate. So a very interesting business meet that is lined up here in New Delhi.
Right, certainly, and we'll keep coming back to you over the course of the day to get more clarity on that. Rishabh, thanks so much for getting us those details. By the way, we've come off the low point of the day, certainly, and trading in the green just about for the benchmark Nifty 50. And it is a couple of banks that are contributing. You have ICICI Bank, certainly, that is pulling the most weight, but you also have Axis Bank and SBI that are contributing on the upside. On the flip side, the biggest contributor on the downside is HDFC Bank, which is losing ground in trade today. We've got Ajay Srivastav, Managing Director of Dimensions Corporate Finance Services, joining us this morning. And Ajay, always a pleasure speaking with you. Thanks so much for taking the time.
Good morning.
Let me ask you this. With the kind of comeback that you've seen in April, the market certainly seems to be pricing in that the worst is over. For those people that missed the bus and did not deploy at any point during March, have they missed a golden opportunity? Or do you think that the opportunity still exists as things stand right now? How are you deploying funds or advising to deploy funds?
There is always opportunity. You have never missed the bus. The bus keeps coming. You know, it's like your metro circuit. The train will keep coming. You get on it, you get down. The question is, did you get down or did you circle it and came back exactly to the same spot? Because the key is profit booking. If you not booked it, you sat on the train well, you saw it go to the high, and you come back to the same platform. So I think you never miss the bus. There are always opportunities. And India is definitely, you know, when we get optimistic, we really get optimistic, like all stock markets. And that's what is happening today. The worst is over. No, the worst is not over. The worst is still to come. As the cost starts to percolate through the system, the uncertainty in the system, the inflation rate, the interest rate is still to percolate to the system. So celebrations happen because lack of selling at this point of time, because the FI is selling kind of pared down and even PMS selling pared down. So we had a good amount of rise because It's not because people were buying bulks. It is also because people just stopped selling.
So therefore the question is, what do you do right now? Do you continue to keep powder dry and, as you pointed out, book profits, right? So there will be ample opportunities for stocks that have gone up between 8 and 12 and possibly even 15% over the course of the last couple of weeks. Would you take money off the table selectively?
You know, I love when you say 8, 12, 15%. The dialogue a few years back or 1 year back, 30, 40, 50%. So I think we've come.
But I'm talking about a couple of weeks, Ajay. A couple of weeks.
Oh, you know that. Alex, you know that stock used to go 30% in a good old time. So I think the fact we're talking of 10, 12%, I think is greatly encouraging. You know, it's like this. It's not about percentages. It's about the stock stories. Some stock stories you need to hold for some time. Some stock stories you need to get off when the valuation goes high. And I'll give you an example. Power is an industry which is going to grow. Okay, it's been lackluster, but it's give you steady return. It's given steady return for last 3 months. We have put a call on power, and it's done steady. It will do well over a period of time. Nothing to worry about there. But when you look at retail of India, that's ridiculous. That's stupid. 80 P's of stocks at P's of 80. I will not. You know, people are not paying Nvidia 80p, and I am paying a kapde wala dukan 80p. Something is not right in this country, and investors love to lose money. So I think the question is not 8-12. Question is which is the theme you're catching on. How much you have the ability to keep consolidating even if the price goes down. And you see at the end of the 2-year, 3-year time frame that you've done a decent rate of return over your debt rate of return, given the risk that you take in equity. It's not about making 8-12%. You can make 12% in debt today. So if your target should be 20-25% annualized minimum if you want to be in equity market, and therefore latch onto sectors, buy on correction, and see when it goes overboard, you need to book profits. I think, so it's not about 8-12. I think some stocks just need to be sold whenever you can get a chance to sell them.
Ajay, hi, Tamanna here. I'm very tempted to ask which kapde wala dukan?
You should know better than anybody. There's only one stock with a P of 19, a kapde wala dukan. What else can I say about it? You know, So can you imagine investing in money in a kapde ka dukan? I just don't believe it. In today's day and world, we're talking of AI, we're talking of BYD, we're talking of Korea, TSMC, and here are investors saying, you know, let's allocate money to the guy who sells clothes. Are you serious?
What about the guy who sends your food in 10 minutes, 20 minutes, 25 minutes, and your groceries in 10 minutes?
Look at his valuation. What else does he want? All the people who set up the company enjoyed the money. Investors enjoyed the money. Look at the today. Look at the amount of market cap is created for itself. It's the greatest reward I've ever seen for a new initiative, given the fact that profitability dynamics could be shaky and remain shaky at this point of time. But still, the market has rewarded those promoters and investors very handsomely. So if you're coming late to the party, I think you have to wait a while to get the return at this point of time for those kind of stocks. But people who invested early, and even at IPO and around the correction which happened post IPO, you made good money above that. The question is, did you book a profit, or are you still sitting with high price entry? That's the key. Book your profits, guys. This is a market which will be volatile. Technology is changing, competition is changing, and some funny country like Iran can just take you off the rails.
So I'm wondering if you are then as excited about financials as many are.
I was till I read the results of last two banks. I was promised you I had a lot of holdings. And today I just told my team to pare down the holdings everywhere. You know, if you look at the performance of these banks, just look at intrinsically the business volumes, almost flat. There's nothing there. You know, at the end of all said and done, if you make a profit growth of one bank is 8% and other is 11%, and why am I going to put money in these businesses which are going to give me 8 and 11% return at the end of the day? Sure, long term, I think there'll be great buys not because business will go up, but because their cost structure will collapse with AI. I think the cost structure will give you the returns. But they are like just not moving. Can you imagine I'm paying an EM premium for a stock, a profit growth of 11 and 8%? I can feel enthusiastic about the share price was 1,200 rupees, it becomes 700 rupees, and therefore I should be great. But no, look at the dynamics. Look at the corporate lending. Look at the retail lending of the two banks. Look at last Q4 and this Q4. You see it's minuscule growth. You know, I'm a buyer of growth stocks. I don't believe anything else. If you're not growing, I don't want to be there with you at the end of the day, you know. And only the stars in a company get promoted to CEOs. The laggards don't get promoted to CEOs. So in my portfolios, I want the stars, not the laggards. Those are laggards. The performance is just shocking if you look at intrinsically what these two banks have done.
Well, Ajay, the argument therefore is that, and I want to ask you a subsequent question. Since you're negative on so many things, where is it that you're constructive on? But the argument for banks might be or is that at 1.5, 1.6 price to book for that growth of 13, 14, 15, 16% that they're giving, they are not a bad bet.
Where is the 13%? I did not see 13 anywhere. At the end of the day, I wish I could see 13 anywhere. And the path to 13% also. I didn't see that, 13%. I think, if I'm not wrong, ICICI Bank at 6 or 8% growth over profit over last year, consolidated, that's what it was at the end of the day. Again, back to the point.
Loan growth.
A very valid question.
I mean,
loan growth, what will I do? I want profit growth. I want profit growth. Okay, I don't want loan growth. I want profit growth. At the end of the day, my money is for earning profits.
Okay,
you're right. It may go up. We all have limited capital, unlike some of our fellows who may have unlimited. Therefore, I need to find appropriate ways to allocate capital to get return in excess of my risk I take for this market. That's my theory. Everything may go up theoretically, but the fact is,
that's actually a perfect 20%? Theory, Ajay. That's a perfect theory simply because, yes, you are right. A lot of people who are watching this as well don't have unlimited capital. So therefore, I'm inclined to ask you, you don't like a lot of frontline things, but you want that growth number which is northwards of 20, 25, 30% because that's the risk commensurate return. Where is it that you can find that return?
See, I can tell you what we have done.
Models, etc. One is the power stocks. Okay, we have been very heavy on power and we continue to load up power stocks. I think the great story building there at the end of the day. The second big element is our gold loan companies. I think there we see a lot of traction, continued and so on and so forth. A lot of legacy companies, we are focused on legacy companies in auto ancillaries. Those are our two big bets at this point of time.
I think Ajay, maybe just losing you, but if not, I'm inclined to ask you a follow-up there. Power is a very wide theme, right? Where within this energy space are you finding the biggest bang for the buck?
It's thermal energies at that point of time. Okay. Thermal is great, renewable is great. And in fact, it's a beauty is I can't name it, but there's an ETF which gives you a beautiful exposure to all your power companies. You don't have to worry about stocks. It's a brilliant ETF by a new guy and, just load up the power stocks and you're done. If AI has to come in the country, power is going to be the gainer. So, I'm not all pessimistic. Gold loan companies, I love them. I love two auto companies. I love auto ancillaries. Great stuff coming there. I have a select CDMO portfolio, but very select at this point of time. I've got capital market stocks because those are monopolies. So it's not all negative, but I certainly don't like anything of north of 50 Ps at this point of time.
On the power theme, I'm wondering whether you've studied the possibility of nuclear being taken up selectively, particularly because of the inclination that the government has shown to rapidly increase the capacity from around 8 gigawatts to 100 gigawatts. That throws up opportunities for large conglomerates. So are you studying that and the value chain and whether opportunities exist there?
Of course not, because I think nuclear is going to be it's like a nuclear option at the end of the day. India to get a nuclear thing going, you just saw Kalpakam just became, after 20 years, it became supercritical. I think it's a very long shot. There's some much simpler ways India will kind of now has got down back to the path of saying thermal is okay, we are going to be okay with thermal power. Nuclear, yes, if you're able to import plants, etc., I think we'll go through that. But I doubt it is going to be in the investment horizon of most people. And conglomerates of India, no way. They will not invest in nuclear power because it's much cheaper to make money from renewable under government control or thermal, which has a link to coal power and is the cheapest way. So I'm not even sure whether I think it's a government, NTPC, who will do the nuclear power or nuclear power corporation. I don't think any Indian corporate will have big commitments to make on capital on nuclear power. Also, risk of the company goes up, the accident risk goes up, the insurance risk goes up. So, the whole dynamics changes for a company as a whole, even if you have a small nuclear power sitting there. So I doubt it, nuclear for us as investors is a great option at this point of time. But I look at immediately and say, next 3 years, if AI comes in, thermal power and renewable power is the only way.
Okay, Ajay, just trying to understand where you are constructive. You said a few minutes ago, I want the stars. I don't want the laggards and the also-rans. You've talked about some stars maybe in the power sector that you're constructive. Where are the other stars that you see? And is it more in the broader market space?
You look at go industry by industry, and you'll find, if you look at aerospace, there's a beautiful company out there in Hyderabad, which is there. Now it becomes expensive. So you wait and watch till you can enter it. So we have aerospace, we have component industry, which is engineering industry, which is very good. We have a couple of autos, which have done remarkably well. And even in finance, the old promoter legacy companies, I think they have been the stars, absolute stars consistently. And if you look at one company, India only one company has been able to get into chip production, but did a beautiful job of restructuring. So there are stars in every industry, and good part, that legacy of these promoters tells you that they have given growth and investor returns for 25, 30 years. That's not the Tata Group which did, that's not any other group. These are South Indian based, most of them are South India based groups, which have given beautiful returns to investors over years. Whether you look at finance, auto, engineering, three big segments, these guys have done an amazing job. Absolutely. So go for legacy companies. You'll have a star in every industry, has one or two stars in India. And I think you'll have to just back the stars and give the promoters who have given good returns, back them up. Don't expect a promoter who's not given return to give you a return because his low valuation can give you a trigger. Value trap can be the biggest trap of performance, as history has shown in 30 years.
Your responses are like a quiz. Our viewers are possibly very quickly listening to you and trying to wonder which, put their ideas together with the clues that you're giving.
You can have a trivia quiz, and I can promise you a lot of good investors will guess it right in first time.
Okay. Now, having said that, I just want to come to the part about good promoters. Are you seeing maybe the IPO rush, which is going to now squeeze down, and that becomes a cold storage kind of situation for the next few months till things settle?
It's a good question, very good question, that the liquidity is going to be impacted in India because three things are happening. One, slowly and steadily, people are realizing that we need to move out of India investment. So whether you look at mutual fund customers, including ours, I think we're allocating more and more capital to foreign schemes. I think that's where the underlying theme is going to happen next 12 months. Allocation to India equity will be a lot less than what will be to global equities. I think in spite of the run of global equities, people are now beginning to understand what is the meaning of diversification. It's not about buying only one market, geography, and different sectors. It's about different geographies. So yes, you're right. I think we will wait and see what happens when these big giant IPOs come to the table. I think the only perhaps relief to my mind is that having sold so much out of India, some foreign investors will eventually turn to India if our valuations make sense on the IPO and other platforms. If we continue to be, ridiculously priced as what we are even today, I think it's going to be crazy. Just give an example, Tamanna. Your Magnificent Seven in the US are all priced at, I think, average of 24 PE multiple, trailing earning PE multiple. Trailing. You don't buy stocks unless you are that much of a correction, and when correction, they were 20 PE multiple. Why would I be paying 40, 50 in India? Every stock is 40, 50 when the growth is local market and the growth is 7, 8% or 10%. I think we have gone down on valuation path. Lot more to happen in mid caps. I think a lot more will happen in corrections, and therefore be careful where you invest, because global opportunities will oversee India opportunities.
I'm very tempted to quickly ask you about how you're looking at IT companies now that valuations have come off, Indian IT companies.
Those are dividend guys. So you might as well, the one guy wants to run airlines, second guy is promoters want to run resorts. Just one CFO of a major leading company said, we are proud to tell you that 88% of free cash flows we have dividend out in last 3 years. Slow clap for you, lady, because you've done a great job for India's technology and India's sector. It's just incredible that US 3 companies are going to invest $680 billion this year in capex. And I have a CFO of my IT company deserving a slow clap saying, I dividend out 88% of my free cash flows. Would you buy that stock? Sometime I want to ask you guys, would you buy somebody like that who wants to give 88% dividend in tech when the world over investments are running at $680 billion in 3 companies? Would you buy the guy's stock?
Yeah. We can't answer that, Ajay, as much as
No, you can.
we can't answer those questions as financial journalists at all, as much as you can't name names. But I think ishara hi kafi hai. Ajay, we've run right out of time.
Thank you so much for your time.
This was a fantastic conversation. Ajay Srivastava.
Thank you very much.
As always, all guns blazing. These are so our sense over here, and our job is to get you all kinds of views, and then you decide what you want to do. Huh?
Yeah. On that note.
On that note. On that note, that's all the time we have. Thank you for all of us here on the table and all of those who helped put the show together. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
and welcome back to NDTV Profit. You're watching Ask Profit, a show that answers all your stock-related queries. My name is Puneet Zaveri. With me today, as always, is Mahima, and over the next hour or so, we'll try and solve all those stock-related queries. So do start sending them on the numbers that is flashing on the top of the screen. You can also call us, speak to us directly, as well as to our guests on the stock-related queries as well. But before we do that, it's a very quick check of the markets, because an interesting session today. We started off mildly in the red and then bounced back and now back in the green. So the Nifty at 24,400 odd levels, just about an 83 to 90 point uptick. So the implied open, while not all as accurate, it is at this point of time at least. It showed an 80 point uptick in the implied open today in the morning. So that level has now come back yet again. In the heat map, of course, the banking names continue to dominate the news flow today. ICICI Bank, stellar results over the weekend. You had brokerages continuing to maintain their positive view on the stock, and it's now one of the top 3 gainers in the Nifty 50 trend, buzzing on the back of a bonus issue potentially on April 22nd. And so is SBI, possibly expecting some better performance given now results of ICICI Bank visible now. Axis also is one of those candidates that starts to see an up move based on what's been the news flow on ICICI Bank. But definitely HDFC Bank, while the results were all okay, not the greatest, but nothing too bad, is also another stock that's in focus today. Jio Financial down, the top Nifty loser today on the back of earnings as well. But largely 30 stocks in the Nifty 50. HDFC Bank, that's the only one you can see in blue today. Almost flat at this point of time on the Nifty 50, but started off in the red for this counter. In terms of the sectoral heat map as well, we continue to monitor Nifty Metal as the key basket. Nifty Energy is also the other one that's been continuously showing positive trends. But the PSU Bank and the Nifty Bank are the top gainers for today. Realty seeing some profit booking of what we've seen in the last few days, but a very interesting session nonetheless. Finally, the advanced decline ratio is also the other one that we continue to monitor. The broader markets are showing strength, and that has been the case. It's been a crisscross kind of a pattern. From the day's low, we've started to see some recovery yet again on the broader market index, and Mahima, that is visible in the mid cap and the small cap ones, but there's a lot of interest coming in on the micro cap names as well. And I think in the morning, a view from Gautam Shah told us that it's been almost a 15% run up on that index, but a very interesting session just before the earnings starts.
Absolutely, and I think the point that he made with regards to metal is that he still remains bullish on metal. I think he said the same thing a year ago to NDTV Profit, and that has kind of shown the ways, all of these counters in the metal space have gone up. Hindustan Copper, Nalco, etc. Right? Zinc, Hindustan Zinc as well. But talking about the broader end of spectrum, right now slightly moving towards the bearish momentum as per what the charts were indicating for the advanced decline ratio. The mid cap 150 is still mirroring the benchmarks right now, but the small cap 250 is almost flat as we speak, but recovered a lot from its day's low point. Let's quickly pull up the BSE 500 and then start taking your stock related questions, because there's a lot of stock specific action happening in that space. SW Solar, of course, on the back of the order win, coming in a huge order win on the back of, I'm sure Samir would be really happy today, up 13%. Prism Johnson up 10% as well. Triveni Turbine, VMart, BHEL are some of the names which are seeing strong gains. IEX on the on the news flow coming in on market coupling down by about 6% Embassy Developers, Mastec are some of the other names which are seeing that downtick of in the range of 3 to 4%. But let's start welcoming our guest for the day. We're joined by Tapan Doshi, research analyst at CATapan.in, and Gaurav Sharma, associate VP and head of research at Globe Capital, joining us now. Welcome to both of you, gentlemen. Thank you so much for taking out the time. The first question that we have, I think, is a caller. Anjali is calling us from Hyderabad. Anjali, a very good morning to you. What's your query about?
Yeah, hi ma'am. Good morning. Thanks for taking my call.
Go ahead, ask your question, Anjali.
Okay, sir. Okay, ma'am. I'm having Ashok Leyland shares at the 2000 shares at the price of 154. So, shall I hold, or what is the target price to exit? Both short term and long term view, I want to know this.
So, Anjali, when you bought this, did you see the charts while buying the counter?
Yes, ma'am. Yes.
Okay, all right. Then I'll take this up with Gaurav. Gaurav, very good morning to you. Your view on the charts for Ashok Leyland?
Hi, Mahima. Very good morning to you as well, and thanks for having me on the show. Stock is looking upbeat. Only a breakout above 180 is pretty much warranted here for a smooth sail towards 190, 195 odd level. I'll advise the viewer to hold on to a position, take a stop at 165.
That view, Gaurav, and welcome to the show. The next question coming in now is from a viewer on SBI holding roughly about 100 shares bought at 805. So definitely sitting in a lot of profits right now. Stocks up crossed above the 1100 mark as well for the first time post this correction that we've seen also nonetheless. So SBI up today 3.2%. Now our viewer largely asking if she should continue to hold this counter or book profit. Not mentioned the time frame, but Tapan, good morning, welcome to the show. What would you recommend on SBI after ICICI earnings? You would be positive, right? Should she continue to hold?
Yeah, good morning, Puneet. Yes, of course, she should hold now because if you see the bank's results are coming out, even the PSU also from last few quarters are doing well, and among them now SBI is the top contender. I think this quarter also they will do well. Their credit growth is good, so I'm quite positive. Please hold this stock at this level, and at dips she can buy more.
Okay, all right. So that's the view coming in on SBI. I think we've got our next caller. Aruna is calling us from Bengaluru. Aruna, very good morning to you. What's your query about?
Yeah, very good morning, ma'am, and all of you. Thanks for taking my call. I'm having Oracle Financial Services shares of 100 quantity with the price of 8,200.
Okay.
So basically this IT, I bought almost 8 months back, ma'am. So by the time the IT issues are not there. So now if my price comes, shall I exit my shares or hold at least for next 6 months? What is at least can I get 10% return?
Got it, Aruna. Got your query, and I understand your concern as well. I'll take this up with Gaurav then. Gaurav, she's sitting on a loss of 17,000 rupees. Wants to know if she can at least recover and maybe see some upside post recovering those losses in the next 6 months. Do you think that's possible?
Mahima, OFSS has performed exceptionally well in the past 1 month. Just to share some data with the viewer, this stock has rallied nearly 20% in the past 1 month against a 9-10% up move in Nifty IT index. So this clearly goes to show the kind of outperformance the stock has posted. Going ahead too, I expect the stock to sail up towards 9,500 mark in the next 2 to 3 quarters. So the advice would be to sit tight. If at all to contain some risk, she can take a stop at 7,200 now.
7,200 could be a level, but 9,000 overall is what Gaurav is watching on OFSS. The next counter coming in now from Kalyan Jewellers. Lalita from Bangalore, who's a regular viewer of the show, is holding shares at 415. Now, currently sitting, let's pull up the counter now. Stock's trading at 421. Now her question largely being, what should she continue to hold this particular counter or buy or sell? Gaurav, on the charts, because we've seen fundamentally Q4 very strong positive update. We're still awaiting results, but anything on the charts? Is there any up move there in the near term?
Charts are not moving in tandem with the kind of results the company has posted. Rightly pointed out, it has posted a decent quarter, December quarter. Charts suggest that it will resist somewhere around 450, 460 zone. I would suggest booking some profits around the higher points, 460, 470 odd levels, and switching over to positions in Thangamalai. This is something really very better placed.
Interesting. Both fundamentally as well as technically, we've been talking to Kush about this counter. Both analysts seems to be positive on Thangamayal coming in, and look at the way it's moved in the past 1 year, right? Over 120% of gains is what we've seen on this counter. But moving on to the next one, and this is an interesting one because Raghuram from Bhubaneswar is asking this question, wants to know if this is the right time to enter Sterling and Wilson from the next 3 to 6 months perspective. Gaurav, today, of course, it's buzzing on the back of the big order win that's come in its way. A 4,000 odd crore market cap company has gotten an order win of around 3,500 odd crore. But overall, from a charts perspective, because this stock has seen a lot of beaten down, do you think that now there's chances of bounce back coming in?
Yes, Mahima. Inevitable signs of a upside reversals are there. The stock is looking upbeat. The only resistance lies that it is still trading below its 200 period exponential moving average. I think this should be crossed very soon. 237 is the price point. Once that is taken out, it will rush up towards 260 and higher levels. Hold and add is a suggestion that I'll put up for our viewers.
Got that view, Gaurav. But let's go across, take another query now from Jaipur. And Yogesh actually is calling us now. Yogesh, good morning. Welcome to the show. What's your query?
Good morning. Good morning. Good morning, sir. Actually, my query is I buy a Hyundai motor share, 1,648 rates, 500 shares.
Okay.
And I'm not a short-term investor, but it's a give a hint of return in a very short term. So what I do for that?
And
Yogesh, I want to anyone.
Yogesh, on Hyundai, did you buy it in the recent fall or have you been holding it for the last?
Recent fall.
Recent fall. Then you bought it at a very attractive rate of 1648 and got your view as well. But Tapan, on Hyundai, we've seen 2 years of consistent degrowth in the domestic market. Should Yogesh book his profit or wait for Q4 earnings, see what the trajectory is for next year in terms of launches and then take a call?
No, he entered at a very good point. No, I think he should hold on the stock, wait for 1 or 2 quarter results. The reason is I think the company will be doing well. Even the monthly updates are okay. I think the margin may increase over the time. So better to hold for 1 or 2 quarters than only do something on this one.
Okay, so that's the view coming in on Hyundai, but the next one is coming on Sky Gold. Utkarsh is asking this question. He wants to know whether he can continue to hold this from a long-term perspective of 1 to 2 years. His buying price is 370 and 10,500 shares is what he's holding in his portfolio. Tapan, I'll stick with you for this one. Your view on Sky Gold, because he's sitting on handsome profits right now considering the quantity that he's purchased.
Yeah, first of all, congratulations to him. And of course, this counter looks good. If you see the business updates, even if you see the quarterly result, it is good. And I think the valuation is also okay, not so expensive compared to the counterparts. Please hold on to the stock. I think this will do well in next few quarters.
Okay. 5,35,000 is the profit. I was just trying to calculate as to what profits he's sitting on. But continue to hold is the view, of course, coming in. I think
it's also interesting on Sky Gold because you spoke about Thangamalai also, and it's also because the larger player Titan has also started to outperform so well.
And it has, right?
And it has in terms of numbers. So you're seeing the valuations on the bottom end of those players also starting to show such strong growth.
Yeah.
So definitely it's going to be a busy quarter for you in this one. But go across, take the next query. Now we spoke about Hyundai, which was a query from Yogesh to Tapan. But Tapan, on from Nagababu from Andhra Pradesh also, he wants to enter Mahindra & Mahindra for the next 3 to 5 years. Now there's largely a positive consensus buy on this particular counter. But what is your view now? Because we've seen, the EV portfolio do very well in the last 1 year. They've jumped now to number 3 position there, and the number 2 position also not too far away. How are you viewing this counter now, and what are some of the key triggers?
Yeah, of course, this counter will do well, and if he is holding for 5 years, he is going to hold for 5 years, then I think it's a no-brainer. I think for Mahindra & Mahindra, their EV, you can say segment is doing well, and the new models also having a good lineup. So I think he can hold on to his stock. Even the margin improvement will be there over the time. So I am positive. I think hold on for next 5 years, no problem.
Okay, all right. So that's the view coming in with regards to where M&M goes. The next one that we have is coming in on Geo Financial. Our viewer Sivakumar from Bengaluru has bought 40 shares at the levels of 365. Says that overall he's incurring a loss of around 34% on this counter. Wants to know if he can go ahead, sell this and shift to something like a Bharti Airtel. Gaurav, I'll come to you on this one. Today, of course, on the back of the weak Q4 numbers coming in, overall this stock is seeing a downtake. But from a chart's point of view, would you recommend him to book his losses and shift to something like a Bharti Airtel? He's also mentioned that if not Bharti Airtel, any hospital stock that you like.
Yes, certainly GF Financial has been an underperformer since its listing. No doubt on that part. All recent attempts of recovery have failed. Still, it is consolidating in a range. What I can see is a break above 250 can take the stock toward 260, 263. Then again, some resistances are placed around 270. So it won't be a smooth sailing anytime soon. Therefore, shifting towards a Bharti Airtel, yes, it is a very good choice. My personal favorite, no brainer at all. Apart from that, he has also asked for some of the hospital stocks. So we track only the two of them, that is Apollo Hospitals and Fortis, and we remain bullish on both of them. So he can partially add up towards a Bharti Airtel and Fortis for that.
Got that view, Gaurav. And this was also another question from Akshay as well, similar on Geofinance. And I think hopefully this question, this response from Gaurav helps you as well, Akshay. But time now to dive into the BSE F&O setup, and Sharad is joining us exactly to do the same. Sharad, good morning. What are you picking up?
Good morning. We see largely a very range-bound day of trade happening, and of course we are seeing the developments in the geopolitical space as well. The VIX also has jumped up almost 5%, but largely earnings-driven movement is there. Trent, SBI and Asian Paints also holding the fort. Important news flows coming in. Reliance is in the green as well, but what's not working is Infosys, Titan, HCL Tech. That's where a little bit of sell-off is there. But remember, the markets are likely to be in a very tight range, at least in this today's trading session as well. Let's see how BankX is panning out, and largely we see ICICI Bank is holding the fort. HDFC Bank is largely unchanged, very volatile, but SBI is doing well. It's up 3%. Let's see where the long build-up is there. To give you more clarity about the stocks, which should be on your radar, BHEL and Torrent Power, these are the defense and the power related companies which are doing well in trade. And if you look at the short covering candidates also, we have Trent, the stock is up 4%, important corporate development coming in. And the summer theme which we are talking about, Voltas is also seeing good buying, stock is up more than 2%. Long unwinding for Hindalco and KPIT Tech. And let's look at the short build-up, where the action is in India Energy Exchange. That is where a big short build-up is there. Volumes also picked up. The stock is down 7% in the trade, followed by Geo Financial. Also, the stock is down 2%. So these are the stocks which are buzzing in the F&O space.
Okay, all right, Sharad, thank you so much for getting us those details with regards to where the F&O setup goes. But we've got our next caller. I think Anita is calling us from Hyderabad. Anita, very good morning to you. What's your query about?
Yeah, very good morning, ma'am, and all of you. Thanks for taking my query. I'm having Bajaj Finance shares of 400 quantity, price of 1015 average, 1015.
Okay.
So, shall I hold in the short term? My price will come, or exit? How exactly the plan, or should I average more? Just wanted to know, ma'am.
Okay, 6 months is the time horizon, right?
Yes, ma'am.
Okay, Anita, got your question. I'll take this up with Gaurav then. Gaurav, the stock is currently trading at 914. She wants to know if in the 6 months she can get back to her price at least, that is 1015. Do you think that's achievable on the charts?
Yeah, 10-15% move in Bajaj Finance in the next 6 months. Yes, it is possible. Still, considering the chart pattern, the stock seems a little struggling around these levels. 940 adds up to the confluence zone of its medium and long-term moving averages. That's the only concern. So, as far as averaging is concerned, I'll suggest her to average at 960 odd levels. As of now, take a stop at 860, hold your position. Your levels are pretty much achievable in the next 6 months.
Got the view, Gaurav. But viewers as well as Tapan and Gaurav, it's now time for the rapid fire round in this edition of Fast Profit. You both know the drill. The first question coming in from Sunil Kumar. He is holding shares of JSW Energy, bought at 533. Gaurav asking, should he continue to wait? He bought it a year ago, or should he exit now?
Wait, stock is likely to go up towards 600 anytime soon.
Okay, the next one is on Enviro Infra. This is from Lakshmi Narayan, who's writing us from Vijayawada. Wants to know if this is the right time to buy from a long-term perspective. Tapan, your view?
Well, the stock has run up a lot, so wait for the dip. At least around 180 something he can enter.
On Embassy Development, also the other counter, our viewer has bought shares at elevated levels of almost 100. What would you recommend, Tapan, here?
Do not enter now. Wait for the consolidation.
Someone already holding, Tapan?
Holding, then just hold currently.
Okay, Apex Frozen Food is the other one. 1,000 shares bought at the levels of 378. James want to know if he can continue to hold or sell from a short-term perspective. Gaurav, your view on the charts?
At least 60% of your position remaining hold. Take a stop at 440.
For Electra Green Tech, Gaurav, Soumya from Bangalore holds 10 shares at 1023. Should she book her profit now?
No, I think she should hold on to a position. A bright future lies ahead. Levels close to 1350 to 1400 zone are pretty much available in the near term.
Okay, Bellrise Industries bought at the levels of 177. 600 shares, 1600 shares is what Ashwini from Chennai is holding. Wants to know the short-term target on this one. Gaurav, on the charts?
Clearly, it is on a very strong upward move. Take a stop at 210. Hold your position. Keep trailing with every rise.
Jeff from Goa holds 129 shares of Premier Energies at 801. What would you recommend here, Tapan? Should he continue to hold?
Yeah, currently hold it.
Canara Bank is the other one. Arvind from Mumbai wants to know whether the price can touch 185 or 200 by the end of 2026 or early 2027. Gaurav, possible on the charts?
And it's better to go step by step. As of now, I can see 160, 170 zone.
Okay.
So that is achievable.
Srinivas from Hyderabad actually holds 500 shares of PNB bought at 67. Now, Tapan, he's bought it for the long term. He's asking if he should continue to hold or book his profit now.
Well, congratulations for the profit. No, hold for 1 or 2 quarter more.
Tapan, good time to enter IRCTC from a long-term perspective?
No.
G. Varnova, Tapan, a good time to enter for the next 1 year is what Jeet is asking. We also had a initiating coverage note from Motilal, but what's your view?
Yeah, it's a good stock. You can enter.
MRPL or Chennai Petroleum, which one is better from a 1 year perspective where charts are concerned? Sabu from Kerala wants to know. Gaurav, which one of these are you liking? MRPL and Chennai Petroleum?
The neck-to-neck competition. Any of those, very difficult choice to make.
Sanofi Consumer Healthcare, Gaurav, what are our viewers Sunny at 4,200? What would be your view on the stock now in the short term?
You should consider switching it over. I don't see any good value coming in soon. Dr. Reddy's and Cipla, Lupin, they are better placed.
Okay, sticking to the healthcare space, Tapan, this one's for you. Good to make fresh entry in Max Health or Narayana Hrudayalaya or Apollo Hospital? Which one of these are you liking?
I think Narayana Hrudayalaya.
NTPC Green, Abdul Rashid wants to know if it's a good time to enter for the next 1 year, Tapan?
No, better to go for NTPC.
KRN Heat, 25 shares bought at the levels of 928. Kishore from Chennai wants a 6 months view on this one. Gaurav?
Some dip is pretty much possible. 1150 to 1100 is a better entry zone for this stock.
Okay.
Muralidhar has bought into Aisha Motors at 7128. He's holding 44 shares, Tapan. He's asking if this is a good buy and should he continue to hold?
Yeah, please hold this stock.
Well, that's the end of the first round of the rapid fire in this edition of Ask Profit. Tapan, stay with us. Gaurav, thanks so much for joining in, giving us your views over the last half an hour or so. Appreciate your time here. But viewers, time for a very short break. A lot more stock related queries on the other side. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New Year, new power panel.
Right, welcome back viewers. You're watching Ask Profit here at NDTV Profit. For viewers who just tuned in, you can either give us a call or send us a WhatsApp message related to all your stock related questions, and we'll be more than happy to answer them. The next question is coming in from Priyanka, who's writing us from Mumbai. She's bought 450 shares of Hindalco, bought at the levels of 1032, wants to know as to what should be the next course of action for her. She's not mentioned the time period here, but from her previous chats, I'm understanding that she's a long-term investor. So Tapan, I'll stick with you for this one. Hindalco, what's the view like?
Yeah, if you see the stock has gone up again, and but the overall the financials looks okay. Even the margin, yeah, I think that there will be improvement in next 1 or 2 quarters. Talking about the metal sector is doing good, so better to hold this stock for 1 or 2 quarter more.
Tapan, let me also welcome Ajit Mishra, SVP Research at Railcare Broking on the technical side. Now, Ajit, very good morning. Welcome to Ask Profit. Just a quick first question coming in from Priyanka from Mumbai. She's holding 450 shares of Hindalco at 1032. Now asking, okay, sure, just take this question. Let me go actually take the other one now. This one's coming in on Yes Bank. Krishnan actually is holding 10,000 shares at 20.9 and he's from Chennai. Now, Ajit, what's your opinion now? Because we've seen the results largely being okay. Stocks not reacting too much. Brokerage is not increasing too much in terms of target prices. A new CEO at the helm. On the fundamentals, on the charts though, this one's a better question to ask you, right? What's your view now?
Yeah, good morning, Puneet. So, Puneet, what we are seeing is that it's been almost like several years now. That to be precise, means since 2022, we are seeing this band continuing in Yes Bank largely, like 25 to 16 is what it's been hovering in. Currently, we are in the middle of the band, but the underperformance, if you compare it with the other private banking majors and PSU counters, it's a clear, decision that in case if somebody is sticking his guns to an underperforming name, we may see a rebound every now and then, but a sustained recovery or up move is missing. So my opinion, since he have bought it at very close to the current levels, the prudent approach is to exit from this and look for buying opportunity in ICICI or Axis Bank.
Okay, all right. So that's the view coming in on Yes Bank. The next one is coming in from Biju, who's writing us from Chennai, asking about the pharma space. He says that he has 40,000 to invest in, wants to know whether to invest in Dr. Reddy's, Cipla or any good pharma counter that you're liking. Tapan, your view on this one?
I think Cipla will be a better counter to invest now, because if you see the stock has already come down a little bit, and if you see the valuation looks okay compared to the counterparts, and their US sales and Europe sales are going up, some patents are also coming. So just go for Cipla.
That view, Tapan, but the next question coming in now from Sameer from Srinagar. Sameer, good morning. Welcome to Ask Profit. What's your query?
Morning, sir. Morning, sir. Sir, I have got Thyrocare Technologies, 1,500 shares. 1,500 shares at the rate of 440.
Okay.
440.
And did you buy this for the long term, Sameer?
No.
Short term. Okay.
For short to medium term.
Got it. Ajit, on Thyrocare, another very volatile counter in that sense. What's your view now for Sameer? He's bought it at 440.
So as you rightly mentioned, Puneet, it's a very volatile stock. Means in past also we have seen the stock witnessing volatile swings both on positive and during the reactive side as well. Now we are seeing a recovery phase. Means the stock is hovering around its long-term averages. So probably a break above 410 can help the stock to trigger further recovery towards 440, 460, his buying area. So around that area, he should review his position. Largely, it looks okay to us, but upside, from short to medium term perspective seems capped. So around 420, 440, he should review his position. And in the interim, 370 should be his stop loss as well.
Okay, all right. So that's the view coming in on Thyrocare. The next one is directed towards you, Ajit. This is a viewer query from Prashant, who's writing us from Bengaluru, asking about the charts for BSE. He says that, in fact, let me take his entire question. It's on capital markets. I'll give him that leeway. Puneet here is laughing, but basically he's saying that he does not have any position in capital markets portfolio. He wants to know as to what is the best bet right now from a charts point of view and what is the best entry point. He's talked about BSE, CDSL, MCX as well as HDFC AMC. Wants to know which one is better amongst this. Ajit, I know you'll take time to pull these charts up. But if you've already seen charts for any of these counters that you like right now, which makes sense to make an entry?
So all these counters, Mahima, they have done exceptionally well in this recent leg of rebound. We are seeing that BSE is quoting at the record highs. CDSL is slightly on the back foot, but yes, we are seeing gradual recovery from CDSL as well. HDFC AMC also inching towards record high zone. So this entire theme, MCX is anyways trading at the record high. So the entire theme is participating in this recovery, which is a good part. BSE is outperforming at present, means we are seeing every passing day helping the stock to inch towards a newer high. For fresh buying, short-term buying, HDFC AMC looks comparatively better because we still have room on the further upside, means the stock has reclaimed the long-term averages of late. Candles are decisive, volumes are very strong. So all this indicates this momentum is here to stay. So 3,000 is what we are eyeing in the near future, record high area as an immediate target, and 2650 zone is the buying area. So he can look for fresh long position even at current levels and add more in case if it witnesses any dip towards 2700 mark. For the entire position, his stop should be at 2600 and 3,000 is the immediate target.
Well, thanks so much for that, Ajit, giving us a detailed view across the whole bunch of space. And the reason I was laughing because you're a taskmaster in that sense. You cut down the stocks only one at a time in that sense. So that's the reason I was laughing.
You have to be fair to all our viewers.
Fair to all, yes, you're right. And that's why we started a second edition also of Ask Profit at 2 p.m. But go across to, actually, let's take our next caller query from Bengaluru. And this is also Prashant dialing in from IDFC First Bank. Prashant, welcome to the show. What's your query?
Hi, hello everyone. Good morning. I hold about 500 shares of IDFC First Bank at 70.50. Should I hold it for long term or should I stick to short term? What's the prospects of this?
And Prashant, do you have any other banking names in your portfolio or is it only IDFC?
This is the only one.
This is the only one. Got it. Tapan, stock's been, post what we saw some issues propping up in this quarter in that range only, right? It's not recovered. Would you recommend, Prashant, to continue holding IDFC or move to a better banking name?
No, my take will be better to move. The reason is whatever in last 1 or 2 quarters happened with IDFC First Bank, of course, the governance issue also. So it's not so great. Again, a lot of talk is there from the IDFC First Bank management, but they are not able to deliver. Many good private banks are there, they are able to deliver. So I think better to move around 70 if its price comes and go to better private bank or even PSU banks. I think that will be good.
Okay, all right. So that's the view coming in on IDFC First Bank. The next one that we have, and this is a query that I'm sure Samir would have loved to answer again. But I mean, I just can't think about SW Solar and not think about Samir, right? But this is from Satyan, who is writing in, and he says that he's got Apollo Microsystems holding since when it was 260. Wants to know if there is further upside for this one, or profit booking makes sense on this one from a medium term perspective, or switch to something like an SW Solar. Ajit, I'll stick with you for this one as well. Your view on SW Solar versus Apollo Microsystems that he's holding right now.
So in my opinion, Mahima, he should stick his guns with Apollo. Means for the obvious reason, because when it comes to the outperformance during the recovery phase, herein the stock is showing noticeable momentum with volumes, and we are just like 5 to 6% away from these recent highs as well. So this clearly shows momentum is in the favor, and what he can do is he can maintain a trailing stop loss now. Means 270 is something that he can maintain as a trailing stop loss for this position, and 330, 340 is something that he can consider as the targets. SW Solar is also witnessing traction, very strong traction rather in today's session. The stock is up roughly around 15%. Volumes are almost 5 times of the average volume, but it's still trading below its all long-term averages. So we have hurdle at 230, and once we surpass this, then probably this recovery may further extend. But comparatively, if somebody has to hold it for a medium-term perspective, Apollo Microsystems looks comparatively better.
Stocks also up almost 24-25%. Apollo Microsystems got that approval for ammunition manufacturing in India, has sizzled through in that sense over the last 2 days. But let's go across, take another caller now from Vijayawada. Balaji has a stock query for us. Balaji, good morning. Welcome to the show. What's your query?
Good morning. Good morning. Thank you. Actually, I have exited Interglobe Aviation recently at 4,100 rupees per share.
Okay.
Actually, I was a long-term holder for Interglobe Aviation, but after the recent news and other things, I have exited. I wanted to enter it again, but I couldn't. The price has rapidly
kept rising, correct. Balaji, do you want to enter the stock now yet again for the long term or for the short term?
Yeah, for long term only. Should I wait for dips, or should I buy it at the present price?
Well, it's a very fair question, Balaji. Tapan, what would you recommend to Balaji? Is it a good time to enter Indigo? Probably just put your feet in the water, or wait for some more time, see some correction and then buy in?
No, my take will be better to avoid Indigo. No, lot of if whatever thing is happened in last 1 quarter is not going for Indigo. Again, margin pressures will be there. Again, flight operations slowly and gradually coming up, but it will take time. Again, the government is behind Indigo somehow, so operation costs will go up. So, might be better to have a lot of uncertainty. I think better to avoid complete aviation sector, if I want to say.
Okay, all right. So that's the view coming in on Interglobe as well as the entire aviation space. The next one is from Sneha, who's asking about City Union Bank. She's bought 20 shares at the levels of 129 and wants to know from a short-term perspective whether to hold or sell. Ajit, your view on this one? She's sitting on a mild profit of around 2,800 rupees.
Yes, Mahima, but on a very limited quantity. So she has done exceptionally well, and now the stock is set for the next leg of the year move after this marginal retracement towards long-term averages. So this recovery followed by the continuation of this move with volumes indicates a gradual up move towards 300, 310. So that's the immediate target. So if the view is short term, now since she has already invested decent amount of time in this stock, she can consider booking profit around the record highs area and switch to the private banking majors like Axis and ICICI once she books the profit.
Got your view, Ajit, but let's go across, take another caller now from Karnataka, and Venkatesh has a stock query for us. Venkatesh, good morning, welcome to the show. What's your query?
Good morning, sir. Good morning. Sir, my query is on Oswal pumps.
Okay.
I have holding of 1 lakh investment in Oswal pumps.
Okay.
I have corrected nearly 40 to 50%, sir. 40%. That's why I want to query about it.
And Venkatesh,
I have bought on IPO, sir.
Okay, you bought in the IPO, got it. But Venkatesh, this position itself is almost 6.2 crores in one stock. Is that your whole portfolio, or do you have some other stocks also in your portfolio?
No, sir. Other also is there, sir. Oswal Pumps is ज़्यादा है.
Okay, Oswal Pumps ही ज़्यादा है, got it. Well, Venkatesh जी, पहले तो आपका पोजीशन इतना बड़ा है, उसके लिए congratulations. But please एक स्टॉक में इतना वेट मत रखिए, स्पेशली क्योंकि वो काफ़ी स्मॉल कैप, मिड कैप्स में वो एक हो सकती है दिक्कत. बट तपन, ओसवाल पंप्स पे आपका क्या व्यू है? बिकॉज वेंकटेश की क्वांटिटी बहुत ज़्यादा है. ही इज बॉट इट एट 625. स्टॉक ने रिकवर किया है 290 से 420. बट क्या व्यू रहेगी आपकी?
नहीं, फर्स्ट ऑफ पुणे, जैसे आपने बताया कि पोजीशन कुछ ज्यादा ही बड़ी है, आई थिंक उनको रिस्ट्रिक्ट करनी पड़ेगी. आई थिंक ऊपर आता है तो प्लीज थोड़ा पोजीशन कम कीजिए. इट विल बी अ मार्केट परफॉर्मर. ऐसा नहीं है कि सडनली भागेंगे. क्वार्टर टू क्वार्टर रिजल्ट देखिए आप. एंड मेरे हिसाब से आई थिंक मोर देन 50% पोजीशन कम करके किसी और स्टॉक्स में जाए तो बेटर रहेगा. काफी सारे हम लोग सेगमेंट बात करें, लेकिन अभी होल्ड कीजिए, लेकिन धीरे धीरे डिक्रीज करते जाइए आप पोजीशन अपनी.
Okay, so that's the view coming in on Oswal Pumps. I think what Puneet said, just for the sake of repeating it, it's very important for our viewers to understand that, concentration in that one mid cap or small cap stock, is not advisable. You should diversify your portfolio and not just hold one portfolio with a big amount going forward as well. So keep that in mind, because 6 crores, right, is the overall position that he has.
2 crores right
and
now,
loss is already 2 crore rupees. So keep that in mind, Venkatesh, going forward as well. But moving on to the next one, I think Raju from Tirupati wants to know about Godfrey Phillips, wants to know as to what will the right entry levels from a slightly long-term perspective. Ajit, what are you seeing on the charts?
So Mahima, correction seems over now, means we are seeing a phase of consolidation after this retracement from the record highs from 3,800 to 1,800 mark. But the momentum is still missing. So in case if he's planning to accumulate, let's say from medium to long-term perspective, the range could be close to around, let's say 1,900 to 2,200, the current price area. And for fresh momentum, this once this stock surpasses this 2,450, 2,500 levels, then probably we will see the next leg of the up move towards 2,800, 3,000 levels in the coming months. So as of now, he can start accumulating, but wait for any dip towards 1,900 to add more.
Also, Ajit, before we move on, just your quick view also on Oswal Pumps, because just the position itself of Venkatesh was so big. On that counter, if you can give some view, because I know it's a very recent listing. IPO is also very recent, so there wouldn't be too many historical evidence, and it's been so volatile also, right? Went till 800, corrected to 290. Any view on the stock?
So Puneet, first that he said that he bought it in IPO.
Yeah.
So such quantity in IPO, it seems slightly off. But having said that, the kind of decline that stock has experienced post the initial up move, post the IPO, it's a very volatile stocks to be in. So let's say in case if we manage to hold this area close to around 420, 25, then probably 475, 500 is something that the stock might attempt. On the downsides, the support comes around 370, 365 area. So still 50 points down. So still we have 1:2 kind of a ratio, when it comes to the holding the current position at current levels. So he can continue to do so, but around 500, definitely he should revisit his position.
Most certainly. And so 4,780 crore market cap, that's almost 11.3 crore shares in terms of the overall the current number of shares that are listed. So, and a lot of positioning. So Ajit, point well made. Probably, I think what we were discussing, that could have bought on the first day of the listing around that price, but most certainly a key one. And hopefully, Venkatesh, this helps you a little bit more. This view coming in from Ajit. The next one also coming in from Murli from Bangalore. He's holding shares of Gen Resource Recycling. It's a counter that's done well for investors. He's bought it at 410. Asking, if it's good enough because of the ROE profile as well. Should he continue to hold this particular counter? Tapan, what would be your view on the stock now? Is it better to hold this or switch to Gravita in the same sector?
I think hold this stock currently as is already at a position. If you see the quarterly results are okay, coming okay from last 1 or 2 quarters, and I think the demand will be there. So yes, currently you hold it, but revisit in 1 or 2 quarter results what is happening, then you can take a decision.
Okay, all right. The next, I think we've got a caller. Pawan is calling us from Karnataka. Pawan, a very good morning to you. What's your query about?
Yes, I have shares of PMM of 830 quantities, and currently it is running with 20% loss. So, do you ask me to wait or hold it or sell it?
Sorry, can you repeat the stock name for me?
VMM.
Okay,
Vishal Mega Mart.
Okay, got it. Okay, and you are looking at this from a long-term perspective, or did you see the charts while buying?
Yes, long term.
Long term. Okay,
Long
then
term.
I'll stick with Tapan. Tapan, right now he's sitting on a loss of around 21,000 rupees. You know, these tier 2, tier 3 players, retail players have done exceedingly well, sitting on a very high base of growth. But yet, as per the business update coming in, they are still doing well on a high base. Would you recommend him to continue to hold this one?
So the valuation is quite high for this company, and if you see, they are facing a tough competition from quick commerce and all that. I think in future, maybe after 6 year, no, they'll not able to maintain this type of margin. So my take is that once it comes on, better to get out from this sector, because they are much more on offline stores. So better to go to the other sector, because there the competition will be bigger in future.
Got the view, Tapan. The next query, and it's about time we get a question on HDFC Bank. Our viewer Vicky is holding shares at 910, holding 500 shares, asking if he should hold on to this counter or sell. Tapan, how did you view the results? Is it largely that continuation of the strategy that the management mentioned in the last quarter, and are you convinced that FY27 will be a better year compared to 26?
I think better options are available, Puneet, here in the private banks, particularly ICICI Bank. If you see this, even though the HDFC Bank has come up little bit after the recent whatever take was there from the management, but I feel that in future the credit growth for like ICICI and Axis will be much better than HDFC, and even the NPA control and all that. So yeah, better to switch compared to HDFC Bank.
Okay, the next one is on data patterns. This is from Ronak Jain, who's writing us from Udaipur. He's got 912 in quantity of data patterns at the levels of 3310. Wants to know a 3 months view on this one. Ajit, your view on the charts?
So, Mahima, in fact, the entire defense basket is doing well. Data pattern is trading at record high, so you can continue to stay put. It's just that we are retesting the record high area, so we may see a bit of a consolidation. So his trading stop should now be at 3300 mark, the short-term moving average area. And once, let's say, we cross this hurdle at 3600, then 3900 is probably the target area. So with the short-term view, you can consider booking profit around 39 mark.
Got your view, Ajit. The next question now coming in, it's from Baswaraj from Bangalore. He's purchased into Associate Alcohol shares at roughly around 932 rupees. Let's pull up that counter now, and he's holding roughly 141 shares. So he's currently sitting on a loss. Asking what he should do with this counter now. Ajit, should he continue to hold on or exit this counter now?
So see, short-term view looks sideways to slightly bearish. So in case if the view is short-term, he can consider exiting.
Okay, all right. So that's the view coming in on Associated Alcohols. The next one is on TCS. This is from Jeevan, who's writing us from Hyderabad. He says he's bought 70 odd shares at the levels of 2,900. Wants to know if this is the right time to average and wanted to check if worst is behind for the IT now. Tapan, I'll stick with you for this one. TCS, what's the view and overall perspective on IT?
No, I'm in a camp where I think IT will take time to recover. So at this level also, I feel, even if you see the guidance also, it's not so encouraging. Even the dollar-rupee revenue also, it's not so great. So my take is better to avoid this stock. Once it comes up, then you better exit and go to other sector.
Got the view. Well, it's time now for the rapid fire round. Viewers as well as Tapan and Ajit, you both know the drill. The first question coming in on Dixon Tech. Harsha from Vijayawada is holding shares at 15,000 and 135 shares. So she's invested 20 lakh rupees, currently at a loss of 20%. Tapan, should she continue to hold? And I know the Vivo JV, of course, on the anvil, but what should she watch out for in Q4?
Yeah, better to hold. If she is a long-term investor, better to hold.
Okay, Mukka Protein is the next one. Arni Agnihotri from Pune is holding 3,500 shares. What are the levels of 30? From a short-term perspective, what are the charts indicating, Ajit?
hold with stop at 22 and use recovery to reduce around 28-30 zone.
Got it.
Irita bought at 125 by Shobha from Bangalore, asking should he just sell this counter at the current juncture, Ajit? Would that be your recommendation?
So seeing rebound, but upside still seem capped. So yeah, she can consider exiting.
Okay, Scient and Scient DLM, does it make sense to enter these at the current market price? Mari from Hyderabad is asking. Tapan?
I think Scient DLM, he can enter.
The next question coming in is from Kishore from Hyderabad, holding 49 shares of Siemens Energy at 2,700. Tapan, he's asking if he should add some more shares at this point of time. Can you do that?
Yeah, he can add. No, I think better future is there for Siemens Energy.
HDFC Life, from a long-term perspective, Narendra wants to know if you can continue to hold his buying levels to 90. So attractive levels for sure. Tapan, your view on this one?
Yeah, please hold it.
Paras Defense bought at 350-300 shares in April 2024. Tapan, it's almost doubled from there. Should he continue to hold or book some profits?
Congratulations to him. No, please hold this stock.
The next one is on Vintage Coffee. 300 shares bought at the levels of 130. Sunita from Hyderabad wants to know if she can continue to hold from a short-term perspective. Ajit?
Vintage Coffee looks sideways to me, so better exit.
Savita from Hyderabad is asking a question on PFC. She's holding shares at 396 and also holding REC at 320, both 100 shares. Tapan, should she just switch to PFC for both these holdings, and what's your view now on the counter?
Yeah, she can switch to PFC, but keep PFC for long term. It will do well.
Okay. Buy Crompton Greaves Consumer at the current price levels from a short-term perspective, and what could be the target, Ajit?
Upside seems capped. 275 is the hurdle. So very short-term 256 with SL one can consider, but around 275 276 one should book profits.
Okay.
Vijay from Chennai wants to know a short-term target of HDFC Bank, Ajit.
Upside seems capped because it's underperforming, still hovering in a very tight band around 20 EMA mark. So better avoid, switch to ICICI rather.
Okay, the correct price to enter Reddington from a short-term perspective. Ajit, your view on the chart?
Reddington is still struggling below the long-term averages. Wait for a close-up of 250 to enter.
Next question is on NLC India, bought at 56. Ajit, what should Vishwanathan do with his 600 shares?
He should definitely stay put. NLC has witnessed a multi-year consolidation range breakout, trading at the record high. So 285 should be the stop. 345, 360 positionally should be the target zone.
Okay, HAL 200 shares bought at the levels of 416. Should I hold or sell? Rajiv from Pune wants to know. So significant profits is what he's sitting at. Tapan, your view?
Yeah, congratulations. Yes, hold for long term.
Manoj Ahuja from Dubai holds BSC at almost 2,140. What's your view, Ajit, now on this counter? Should he book profit?
At least book partial profit and maintain a trailing stop at 3,200.
Okay, HDFC Engineering bought at the levels of 678. Kumar from Hyderabad wants to know if you can continue to hold or not. Ajit, your view on the charts?
Hold with 740 as a stop loss, around 900 reevaluate.
Okay, all right. So that brings us to the end of course, this edition of Rapid Fire Round for Ask Profit. But just a slight correction. I think the HAL query that we asked, the buying price was not 416. I don't think it ever went to that. It was 4162. So that's just a correction from my end. But Tapan as well as Ajit, thank you so much for helping us answer all those 60 stock-related questions that we managed to answer in the last 1 hour. And of course, taking out the time and helping us answer all those queries. But viewers, completely out of time on this edition of Ask Profit. Thank you so much for joining in, but do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest companies in KYC, and whether any alpha is to be made to stay with the company or sell it off. All these important decisions is something which you can gather in from the inputs in our special KYC show. But let's give you a hint for which company is there today in KYC, and it's an interesting name. Indore based company it is, but it is having global footprint as well. The second hint I would like to give you, the company deals with the water infrastructure and the solutions and the equipment segment. Remember the water theme which was very strong 2 years ago? Of course, that company is one of the beneficiaries from that as well. But the company is already up 6 times in the last 5 years. It's already a multi-bagger if you have been holding it for a long time. Interesting company, but company is which one? That's the most important one. The company in focus in KYC today is Jash Engineering. This is the company which we are talking about right now. Definitely it's out of favor in the markets. I'll get you the reasons why it is, and there might be some silver lining at play as well. But why are we calling this company? That's the main question to be asked. The first one is definitely going to be on the FY26 revenue. That has missed its guidance. Will there be more pain? Will we see that in the first half of FY27? The key FY27 targets and the rationale behind that. Remember, the company has given at least a 19% revenue growth coming in. Also, let's look at the third important question. That's the March order, current order book and the outlook going ahead, especially on the global front. There are lots of misses rather than hits when it comes to the exports for the company. The US tariff situation, what's the progress coming, especially regarding its refund? 15%, 50%, and now the backlog which is there, that is where the refund comes in for the company. And the key updates for the manufacturing facilities in US and Saudi Arabia. Is there a pause here? Is it a long pause? Is it a short pause? Or will the company change its business strategy? The new inquiries coming in from the other nations, that's where the focus is. And recently they acquired a UK company as well. So we'll be understanding everything about Jash Engineering here. And of course, this UK acquisition is also very much important. When does the incremental benefit starts coming in? And to be honest, if everything is wrong, there must be some silver lining in the medium term, and that is where we will be asking this question. And joining in will be Prateek Patel. He is the CMD at Jash Engineering, where Prateek will help us decode the important updates and the outlook ahead for the company. It'll be a very interesting conversation, but let's see about the company. What are the key details which you should be knowing about Jash Engineering? Once it was the favorite of the markets, and remember, it's an Indore-based water solutions company. There's a lot of products also which company has regarding this water infra theme. I'm just giving you a revision. 827 crore order book, out of which 255 crore rupees is from the Indian market. So definitely the orders are skewed towards the international market. Penstock UK, they have acquired this, and the completion will happen by March 26. So the benefits of these acquisitions will play out, but at a later stage. Let's also talk about the growth strategy. They are eyeing almost 100 crore plus revenue from this region by 2030. I'm talking about the new GCC region. The SEZ expansion is going on for the Indore plant, the Pithampur, which we talk about. So that's what we will be talking about. Also, let's see the product revenue by composition, and the water control gates. That's the most important one. 61% of revenue comes from this segment, the water control segment. Also, the remaining 16% comes in from the screening equipments, valves and hydropower. That's the balanced numbers you're looking at. But to be honest, अगर simplify करें तो water segment, water infra segment की company है और उनके अलग-अलग products हैं. But revenue composition, let's see what's happening here. India, it's 46% and US is 37%. That is where the concern lies, the way there has been a confusion in the tariffs and the way the growth outlook has been derailed for the company, especially for US markets and now even Saudi Arabia markets. That's what we'll try to get into the management's head on that. Recent updates, FY26 revenue was at 736 crore. The guidance came in at 775 to 800 crores. That means there is a miss in the estimate. Now they have initiated steps to claim the refund, and of course this will take time. This is not going to be easy because the tariff numbers, they are fluctuating as Donald Trump talks about them. There is a deferred investments plan playing out in both the US and Saudi Arabian markets, and this is because of the geopolitical tension. So this is one of the key overhangs for the stock. But the question remains is the worst over for Jash Engineering? First question is, the selling pressures seen is largely over for the DIs. We have seen a complete exit, we could say, almost coming in for the DIs. There is a lack of analyst coverage here. The interest is not there, and that is where I mean to say that smart money might be accumulating in certain current levels. So you should be watching out at Jash Engineering in this current scenario as well. There is action happening, but of course we do not know the news flow yet. The valuations are almost below 60% from its 5-year peak, and despite that, it's a high ROCE business model. So that is where we feel that Jash Engineering might create alpha from the current levels as well. The US tariff stability from FY27 onwards, when it will come we don't know, but hopefully it can come in the first half of financial 27. So that's the entire thesis. Is the worst over for Jash Engineering? But let's give you more details about how we judge a company in the KYC show. And largely we talk about the key numbers, which is very much important, where we check the income statement, balance sheet and cash flow. And also we get you the ROCE numbers here. In this case, that's the return ratios as well. But shareholding is important. Has the promoter sold? Is the FIs or DIs exiting this counter? And of course the street trade, कितना पैसा बना, 5 साल में कितना बना, 1 साल में कितना बना, या इस साल में कितना पैसा बना. Valuations, will get some interesting names which have been buzzing recently as well. All of them are in this water infra space. And lastly, outlook. Already we have shared that with the management, but the industry, where does the story lie? So these are the important operational parameters where we'll be judging the company. The first one, let's talk about it. That's the income statement. And the income statement, last 3 years, company has done really well. Revenue 3-year CAGR is up 26%. EBITDA, look at that, 39%, 40%. So there is a very good strength when it comes to the financials as well in the past. But the Q3 numbers have seen a bigger impact, and we can see that in the Q4 numbers also, as the management has already come out with its update, especially on the revenue front, and that is where a little bit of concern comes last 3 months and in this current 3 months as well. Because of that, I'm going to give this a neutral rating, and look at that, the margins has also come down from that 15%, 16% average, it's down at 11%. So a little bit of concern is definitely there when it comes to financials, and that is why the EPS is getting impacted and we are seeing an overhang in the stock as well. So net income statement, we talk about it, is largely neutral. But let's look at the balance sheet. In these trying situations, a company, when it maintains its balance sheet, that is where the strength comes in. Reserves are strong at 420 crore rupees, no major deployment, and that's a healthy strategy as well. Looking at the current market scenario, and seems like there is a pause. But net, let's look at the borrowings and the cash balances also. The borrowings are at the lower level and they have maintained that. There's no concern about it. And the cash balances also stand at roughly around 103 odd crore rupees for FY25. So the balance sheet management is strong. So I've given this a strong thumbs up for this. But let's talk about cash flows, how things have moved around. Is there any lumpiness? Yes, it's an infra related company. Lumpiness would be there in its cash flows. So we have to keep a very balanced perspective in judging this company. It's been on the lower side for FY25, but the operational to the PAT flow, that has largely been neutral. And I've been giving this a neutral rating as well for the cash flow segment. But one thing is very much important, and that's the return ratio I'm talking about. The ROC numbers from FY22, it has actually held its ground from 17%. It's gone up to 23% and it's maintaining that ratio, and it's near that 25% mark. That means it's a healthy ROC business. Of course, the timing is wrong and the global exposure is giving an overhang in the stock. But net, the return ratios are strong for Jash Engineering. So I'll be giving this a strong thumbs up as well. But let's talk about the shareholding, and that's where my concern comes. Promoters had roughly 49% stake in March 24. That has come down to 43% in the month of December. Now the concern is there for DIs also. The ones who were there with the stock in the 2024 highs, they have all exited. Even FIs, there's not major change. This is a concern for me. This is a concern for me. So shareholding, I have given this a strong thumbs down. Let's talk about the street cred. How much money has been actually made? In the short term, nothing much has come in, to be honest. Let's just pull out the numbers. Last 1 month stock is up 6%. 6 months down, it's 22%. And this year itself, the stock is 11% down. Let's see how things have worked out over the last 1 year or so. Last 1 year, the stock is down 42%, and that's where the concern comes. But if you're a long-term investor, the stock has still made 6 times of the return, and congratulations to you if you are still holding the stock. But in the medium-term basis, it has disappointed investors. So net, in the street cred, I would like to give this a neutral rating. Let's talk about the valuations, and let's get you the key global peers or the Indian peers to judge this company. We have EMS and Vartek Wabag. I'll be taking the 5-year peak numbers where this theme was very much important. Look at that, 60 times P. Now it has come down to 28 times. The 5-year peak was 32 times for EMS. It's at 10 times. So you can see there is a big re-rating, I could say, in this industry as well. So net, the valuations, they seem decent, but is the street not factoring in what should have been there for the water infra companies? So net, it's a neutral rating coming ahead. Let's also talk about the outlook, how things have moved. They have missed the revenue estimates for FY26. That's a concern coming in. But going ahead, they are targeting a 19% revenue growth. And the biggest impact is coming for the geopolitical tensions. If they start easing, there will be some action in this company. Apart from this, let's look at the other key outlooks also, which should be on your radar. And definitely they have given a revenue target of 875 crore for the next fiscal. Remember, the Q4 numbers are not out yet. Now they have also initiated steps for the tax refunds for US tariff issue, but when it will come, only time will tell that. And they have deferred their investment plans in US and Saudi Arabia, stating current geopolitical tensions. Also, there is an increased presence seen in the non-US markets such as UK, where there's an important acquisition at play as well. But let me give you the final rating for the company. And interestingly, I would like to point out that most of the parameters are pretty much decent, but the return ratios and the balance sheet, that is where the strength is coming. It's a high ROC business, but shareholding, no major support coming in from DIs, and even promoters have sold their stake. Largely, we see the valuations are neutral going ahead, and outlook also neutral to good. So net, the final rating for Jash Engineering right now, I would like to point out, is 4.5 out of 8, which is largely, we could say, a neutral rating. But time for a quick break right now, and on the other side we'll be speaking to Pratik Patel. He is the CMD of Jash Engineering. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Right, we are joined in by Mr. Pratik Patel. He's the chairman and MD of Jash Engineering. He's having over 30 years experience in the industry, and he joined the company as just as a graduating fellow as an estimation engineer, and he was inducted into the company's leadership team in 1996. And to get in more details about it, we are joined in by him. Pratik, good afternoon. It's always a pleasure to have you with us. There was a dip in the revenue for FY26 as we compare that with the guidance given. What's the impact and the guidance for Q1? Is the pain still persisting, and execution issues, will they likely to continue going ahead?
Nothing to do with execution. The two main reasons were the tariff in US, and another, when the tariff got resolved, the other issue was the Middle East war, which ensured that much of the products which were ready could not be shipped to Middle East, also to Southeast Asia because of lack of container availability or lack of enough number of shipping during the end of March. So I believe this is a pain, which is one-time pain until the war is resolved, and also based on the tariff issue getting resolved in America.
Right, Pratik. And what would be the key FY27 targets going ahead? Any rationale you're giving in and you're factoring in whatever is happening globally, especially for the revenue and margins?
See, internally, we have a target in excess of 900 crores. However, looking to uncertainty, the tariff issue, I would say, is still not fully resolved. The war, we do not know what is going to happen. And so we had kept for the public a target of 875 crore for our revenue. Our order booking is already close to 830 odd crores. So I believe this is easily achievable. And if everything stabilizes globally, then this is something we can surpass as well.
Right, and Pratik ji, if I'd like to point out the entire order book status, what's there in the March, how's the order book outlook looking like, especially if you divide it between domestic and the non-domestic areas, what's your view on that?
Our order book is quite strong. As I said, it is in excess of 830 crores. So based on these 830 crores, we are quite confident to achieve this year revenue target of 875. As I said, our internal target is above 900, and we are quite confident if there is good stability in the world, it is possible to achieve that as well.
Well, there seems to be some kind of a clarity coming in the US tariff segment. Once now it's imposed 50%, earlier it was 50%. So is there any chance for the company to get the refund? And if yes, any timelines have been initiated here?
So first of all, just to understand what is the US tariff. The first tariff increase was to 25% in January, which was subsequently increased to 50% in June. Now, we do not have such margins to absorb 50%, and so we had curtailed our production for America. Finally, in February 2026, because of Supreme Court intervention in America, the tariff is scaled back, and now the tariff applicable to us as of today is 10%. If this is continued, I have my doubts about this, but if this is continued, then the tariff is resolved. However, when we talk about the other question you asked was what about the future outlook of tariff? I believe that the Trump administration still is finding ways to impose further tariffs. And if they are successful with that, then again it would look that India would have a tough time with higher tariff. The thing which we have to understand is tariff as such does not affect our business. It is imposition of tariff midway. So if the government decides, US government decides that the tariff of 50% is going to be there throughout the year, then we will do our costing according to that and build up margins on the tariff. However, what is happening is, if you see the last year, from 0 it went to 25, from 25 it went to 50, and Mr. President was still saying that we will impose further penalties. So in such an uncertain environment, it is very difficult to do business for any company. And same is true for us as well. So if there is a sustained tariff throughout the year, then it is not a problem for us, and we don't see any problem in achieving our targets whatsoever.
That means, just to put that in perspective for viewers, the medium term and the long term targets for Jash Engineering doesn't change, and that's what's being factored in. Quite an honest way of talking about it, especially coming in from the management. But let's talk about one more update which has come in recently, especially on the manufacturing facilities, US and Saudi Arabia. There seems like there's a deferment of plans at play. Pratik, if you just give us more light on this.
As of today, because of the war, everything in Saudi Arabia is stopped. Same because of the war and inflation in America, we have put on hold our investment plan for the second plant in America. I am going there in May, and thereafter we'll take a call how to go ahead. However, the investment in India is going full stream, and by end of May, we would have invested close to 70 crores in Indian operations to expand our facility so that we can do 1200 crore revenue from the current facility. Once the Saudi Arabian and new plant in America is set up, then we are going to be in a position to deliver up to 1500 crore worth of revenue from our facilities worldwide.
Right, that's an important update coming in from the global perspective. But yes, the domestic investments, they are going at 100% and that is something which is giving a clarity to the overall stakeholders who are listening and viewing KYC. But Pratik, has there any new inquiries come from the other nations? And recently there was a rationale for a UK-based acquisition as well. That's called Pen Stocks. Needed your view on this. Are you diversifying now?
Yes, we are supplying to 45 countries and we are opening up new countries. This year we are entering into Vietnam, we are entering into Indonesia. So every year we are adding new countries. But as I said, we already have 45 countries on board. And we did an acquisition in 2 weeks back in UK. So now we have two companies in UK which we aim to merge and have a single company in UK. But because of these two acquisitions in UK, we are looking at scaling up the UK business in a big way. Presently, it is at 3 million pounds a year, and which we plan to scale up to 12 million pounds in 3 years' time. So our business elsewhere other than UK, US and India is also growing.
Pratik, definitely a very conservative tone in our conversations, but nevertheless, that is something what everybody expects in a show like KYC. I just want to understand, every cloud has a silver lining. Does Jash Engineering have any kind of a silver lining, at least in the medium term?
See, it is little bit difficult looking to the current scenario to give very strong and positive opinion on what the company will achieve. As I said, we are looking for eventually, even at 875 crore, which is our projected revenue, we are looking at PAT in excess of 12%. And we also hope to have the growth continue and achieve double the revenue. So from 875 crore, close to 1600 crore revenue in 5 years' time with a PAT in excess of 200 crores.
Right. So PAT in excess of 200 crores, 1600 crore plus revenue. Next 5 years target remains the same. So that's a very interesting take coming in. But Pratik ji, it's always a pleasure to have a company like yours and you giving views on the industry and the company's growth prospects as well. It's always a pleasure to have you. It's a very interesting company, Jash Engineering. It was the darling on that water infra theme if you talk about it, and there is a case for a re-rating. Of course, it's been a big sell-off over the last 1 year, 1.5 years, but there are certain data points, despite a very cautious tone coming from the management, there is some kind of a smart money accumulation happening at these levels as well. And by chance, if the tariffs issues get reversed, they get the refunds and the global plays start working out, company starts diversifying actually from the new areas, that is where alpha can be made, and that's what the outlook is also looking like for Jash Engineering. If you would just pull out the key reasons why the stock might be coming up for an up move going ahead, and then you'll get a clarity on why there's a good move expected in this stock. And remember, the valuations are almost below 60% from its 5-year peak, and it's a high ROCE model. So this is very much important. Is the worst over for Jash Engineering as not? And these are the key reasons which are flashing on your screen, and this is why we point out important companies in KYC to discover alpha only for you. So that's all, folks. Thanks for tuning into KYC, and only on NDTV Profit you're going to get these interesting companies where even if they are beaten down, we might find some reasons for their alpha. So stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On
Benchmarks start the week on decent footing. Nifty nears the day's highs. Sensex jumps more than 300 points. PSU banks, energy lead the gains. Metals and real estate on the back foot today. Energy markets jolted by fresh escalation at sea, with Brent soaring as much as 8%. War premium returns to the barrel after US Navy seizes an Iranian-linked ship, while Tehran fired at vessels and reimposed controls on the Strait of Hormuz. HDFC Bank reported a stronger than expected rise in the fourth quarter profit, helped by a pickup in the lending to consumers. Though lending margins remained weak for the bank, ICICI Bank too reported a beat in Q4 profits, led by robust loan growth and lower provisions for bad loans. IEX is in the spotlight after CERC released its draft power market regulations. The proposal on market coupling could reshape price discovery across exchanges, raising questions on liquidity, volumes, and the competitive landscape. Asian Paints is turning up the price dial again. The company has announced a second 3 to 5% price hike effective from 5th of May, pushing cumulative increases into high single to double digits, underscoring the persistent cost pressure and strong confidence in pricing power. The visiting South Korean President Lee Jae-myung will meet the Prime Minister Narendra Modi today to discuss trade and ties. Yesterday, External Affairs Minister S. Jaishankar called on President Lee as he kicked off his visit to India. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Poddar. And let's take a quick look at the market. And yes, after an initial lackluster opening, but then today, by the middle of the trading session, the market is looking very healthy, almost 0.5% up by the middle of the trading session and at the high point of the trade as well. In fact, the large companies and the big boys like ICICI Bank, HDFC Bank, Reliance Power, Reliance Industries, these are the companies which actually sprung back, and SBI, the largest banker, is the one which is showing the maximum amount of contribution. When we talk about the draggers are Larsen and Toubro, and from the metal pack, Hindalco, as well as some of the others like Titan from consumption, are the ones which are really dragging in trade at the particular moment. Also take a look at the sectors really which are doing well. Almost a majority of the sectors really in the green and only a handful in the red. We are talking about metal as well as real estate, which are the draggers in trade. But if you really take a look, energy, power banks, media, these are the ones really doing well in trade. Also to focus would be on the oil market, and crude oil prices are a worry once again because of the flip-flop in the negotiations, and with the news of also another round of negotiations coming in. All right, let's take it straight to some of the news that are really developing, and let's take it to Danish, my colleague, who's joining in with more details coming in on a developing story. Danish?
The Ministry of Petroleum and Natural Gas has called for an important meeting today, which is supposed to take place at 3:30. And the Additional Secretary of the Ministry of Petroleum will be chairing this meeting. And this meeting has been called to chart the next roadmap for India's flexi fuel engine. And this meeting will be attended by various stakeholders, which will involve many OMCs as well as a few auto companies. And together, they will be deliberating that how ethanol blending can be brought up a notch as far as the E20 is concerned. Because currently, we're seeing that the government mandate for ethanol blending currently stands at 20%. But we are in the middle of the West Asia crisis, and we are seeing the way the crude oil prices have been really volatile over the past few weeks. So because of that, the government feels that they must now start looking and exploring that how ethanol blending can be further enhanced. And over a few months back, when the E20 mandate was there, we also saw that the government took a bit of backlash from people because there were certain people that claimed that the E20 petrol is impacting their engines and the vehicle quality. So now we'll have to really wait and watch that what is the next ethanol blending target that the government comes out with. So all if we see, a big meeting has been called today, and at 3:30 p.m., what should be India's flexi fuel roadmap, that will be decided by the government.
All right, some important developments there, and Danish there reporting on the latest. Thank you so much, Danish, for joining in. Let's take it straight across on the market momentum. Sachin Jasuja, who's the head of equities and founder partner at Centricity Wealth Tech, joins in now. Sachin, pleasure welcoming you on NDTV Profit. What do you make of the flip-flop in the war situation and therefore the market, which has clearly put it behind us?
Good afternoon, Nisha. Yes, I think the flip-flop will continue to happen in coming days also. But what market is looking at is the crude price. So even again we have seen escalation in the war situation. First on the weekend, on the Friday evening, we saw that there is some relief and some kind of deal can happen. And now again the situation has got worsened, but still. The crude is at a stable, situation at around $95 per barrel. Even the forward contracts are happening at around $85 per barrel. That is the thing, and that remains a key concern. Even the inflation for next maybe 3 months to 4 months, we will see that there is some uptick in the inflation on account of crude, as it was higher for last few months. But see, the markets are always forward-looking. If the market is convinced that the situation will improve after 3 months, 6 months. Then the market will not wait till that time. It will bounce back. And when we look at the corporate earnings side, so far the earnings have been fine. The margins are holding. The balance sheets are okay. I mean, these are strong balance sheets now. So the corporates can take risk whenever the situation stabilizes. So looking at that thing, we remain, fairly constructive, fairly positive on the market.
Fairly positive. How do you play the banks now? They have gained quite a bit of momentum, Sachin, and banks have been the worst, hit when it comes to volatility. The big top 5 banks have been either seeing down days or good days basis the overall market jitteriness, and it is also a lot to do with the FII inflow and outflow and trade off that is being seen as a reversal and a rotation globally. Now, putting all that into perspective, how would you play the big banks, especially SBI, HDFC Bank, ICICI and Axis?
So I think for the full year, the banks did fairly well last financial year. But yes, it was a March month where like FIs were like, they had to sell something. And so I think it was a bank which took the most beating in March month. So the bank likes of even ICICI Bank, HDFC Bank corrected very heavily in March month. But now once the results are out, everybody is looking at the situation that they're still maintaining their net interest margin. ROAs are really healthy. Larger banks, and when we look at their gross NPA ratio, so still, safest to have these larger banks, and we are positive on the larger bank side. Even once the situation improves, I think the flow will even go for the smaller banks, or you can say mid-sized bank. There the valuations have really become attractive, where the price to book value is between 1 to 1.5. And for this larger bank, I think it is hovering around 2. So overall, looking at 10-year median average valuations and looking at the picture of their corporate balance sheets at overall India basis. So now, today we have received the results for these larger banks. And one common theme when you look at for ICICI, HDFC or even Yes Bank, once they reported, so the provisions have gone down. So it also tells us that the balance sheets are stronger for the corporates. And even on the retail side, there has not been any concerns. So looking at that picture, I think the overall the financial system scenario looks positive.
All right, positive so far. But now that, Sachin, we are sure that, of course, some part of earnings could get impacted by the crude and crude derivatives and other inflation pressures coming in. Second bit is that we are expecting a lower than expected monsoon, and also the war situation will be at least trickling in for a couple of more months. How do you assess this? How much of it is baked in, and what will be your view?
Yeah, again, I think selective buying will be only the key, and wherever we find good combination between earning durability and, concern is right. So there will be some impact on the earning side, at least for 1 or 2 quarters. I think market has baked that really well. We have seen massive correction in many of the mid cap, small cap stock, even in the large cap stocks. And wherever the earnings will surprise on the positive side. Even now, so there was a time in Feb or March, even if there was positive news, stocks were going down. And now when we look at, even if there is a slight negative news, stocks are not going down because the valuations have already corrected, right? So looking at that perspective, again, we have to be selective in buying where there is a good combination of earning, management quality, and there is a good growth also on the corporate, business side. But yes, overall, things are looking okay. And but this is the market. This is not the time where you step back. I think this is a market where you go in the market, you evaluate companies. Wherever you find the odds of winning is more, you can bet on those kind of companies or sectors. So good time to go for some high quality business picks.
All right, Sachin, thanks so much for joining in with all your views and perspective on the market. Thank you so much. All right, shifting gears to one particular company, Zentech from the defense space has got an order of cannons from the government, and that stock is on a tear. In fact, if you take a look at 5-day chart of Zentech, and it has gained over $100 in the last 2 trading sessions, and that's like a big bump up coming in on Zentech. We are joined by the management, Ashok Atluri, who's the managing director of Zen Technologies, joins in. Ashok, pleasure having you on NDTV Profit. And of course, your stock is really zooming in trade on the back of the order win from the government. It's from the hardware side where you're now also venturing in. Give us a sense on the order dynamics in terms of how large an order, when are you going to complete it, and when will those revenues as well as profits really be part of your balance sheet?
I
Actually, what we have got is the license from the government to manufacture 12.7, 20, 23, and 30 and 40 cannons. So, we think that this was, kind of a missing piece in our hard kill portfolio. We have integrated like L70 and, Zu-23, but having these licenses will now give us the power to bundle these hard kill solutions along with our anti-drone systems, which is the need of the hour. We have seen that these some of the calibers were used effectively against Iran attacks by Middle East. When they were able to neutralize Shahed drones, as they're commonly being said, it is Shahed drone that won the war more than anything else. So these things fit into the portfolio very well. But we also see that the weapon platform that we will be building will also accommodate by independently. Also, they can be sold. They can be sold on naval craft. They can be sold on land systems. And another thing is that with the threat to human life, because this will be an automated AI-based system, the human threat to life is completely eliminated, because this there will be human in the loop for overriding decisions, but this will be almost an automated kind of system. So I think overall, this is a very big license addition to our portfolio, and we expect that the next 2 years we will be launching them, and our size of the market estimate is a couple of $1 billion for this.
Right. So next 2 years you'll be building it, Ashok. In terms of the capabilities of these cannons, how ready are you already in terms of technology capability, and will it also require investment, and it will take 2 years? So what will be the path ahead for this?
So in terms of capability, we already have a lot of the designs and all that we are trying to do, and we are trying to collaborate where required, including manufacturing. So what we are trying to do is, as has been always the strategy, that do the critical and crucial components and parts inside, subsystems inside the company, while outsource 80-85% of the thing outside, because there is a lot of manufacturing and capable supply chain that we have. So they will do the manufacturing. Final integration will be done by us under quality control, and then we'll sell it. So to go to the next point, which is, what is the capex required? The capex will be minimal, and whatever is required will be met through internal resources and the cash that is sitting on the balance sheet. So I think that's the short of it.
So Ashok, clearly, you are saying that it will be through internal accruals that you will manage the capability and the capex for this particular license that you're getting. 2 years time, you are going to build this capability. When it comes to the order outlook, will you also start pitching for the order outlook? And you already are sitting with 1,427 crore rupees of order book. Will it add to the order book while you are also building the capability and getting ready for that commercialization?
So yes, we have started offering these products along with the anti-drone systems, and some of them have shown interest to be done. So what happens is, even if they, one thing very good about Zen investing in their anti-drone system is they immediately start using the anti-drone systems, and the weapon system can be added as and when they require, and as and when they become available. So I think this is the complete package that we offer to the customers, to our armed forces, both in India and our allies, and that's what they like. That that we have a system that's exceptionally future-proof.
Right. So this also adds in terms of combination in your offerings. And you said it's a 2 billion opportunity, but of course it's a longer period of time. In the short period, how do you see the visibility in terms of your order book from the present a little under 1,500 crore rupees?
Yeah, so from this, what we have been feeling confident about is that the next 2 years, FY27 and FY28, we should be able to do cumulative revenues of about 4,000 crores. So that is what we have been projecting, and we feel confident that the 4,000 crore target will be reached in the next 2 years.
In terms of EBITDA margins, between FY25 and 26, there has been a huge amount of bump up in your EBITDA margins. How do you see, Ashok, this particular year's run rate? Of course, it's almost priced in, but how do you see the sustainability of the last EBITDA margins of close to 45%?
So, I think we have been assuring our investors that the EBITDA margin will be at the rate of 35%. And we think that there's going to be a huge increase in the R&D expenditure because we are trying to do a lot of R&D ourselves and through our subsidiaries. And the expenditure is going up. And we think the opportunities that the design, development, and manufacturing, the IDDM category, which India is talking about, that is being made default in the upcoming 2026 defense acquisition procedure. If the draft is anything to go by, IDDM will very much become very important, and people who have been doing TOTs and trying to get the technology from outside and manufacturing here will be left in the lurch. But companies that have actually built the capability within India for designing, developing, and having the manufacturing facility, they will definitely have a big lead in this with the new thing, a new DAP coming in. So I think, yes, we are very, very advantageously positioned because we always believe that, it should be design and development. Manufacturing is just a very, very small part of the whole value add system.
All right, but Ashok, when we look at this particular capability and many aspects that are really developing for the company, last year in the calendar year, of course, delays, deferments, and also the risk of government orders sometimes has been plaguing the sector, not as much sentimentally the stock in a war situation. How do you read into that particular part and also allay fears of the risks coming in from the government orders and delays and deferments as you have seen in the past?
Yeah, so what had happened last year was that the regular because of the Operation Sindoor, lot of regular procurement that were happening in a normal pace and normal phase, they got impacted, and government started buying for the crisis, and because of that the few orders were placed, but the regular thing got delayed. But now everything is on track, and we expect that again, that's why we set up an ambitious target that we should be able to achieve 4,000 crores. So with this, I think that I think of the past that defense companies within India will not get orders, especially those who do IDDM. I think the space is set now for the second good. I call it the .com 2 version of companies like the Googles and etc. coming up. I think these companies will really come up. And especially the companies that have actually believed that we should not just get technology and manufacture here, but have design developed from India with the capability to do the world's best. Again, India is, we in Zen Technologies have always believed that you just can't give the best in India to the Indian Armed Forces. It has to be best in the world, because in the war, there are no runners-up, and we have to ensure that what they have is the best. And that's why we are able to export from India too. I think we are all set. Government is all set. I think this is going to be a fantastic time ahead.
That's right, Ashok, you mentioned exports, and a lot of, defense-based companies are also gaining momentum, and the stakeholders as well as shareholders are very positive about the export momentum as well. For you, the product, the export mix is minuscule in single digit. How are you looking at ramping it up, and what's the visibility over there?
So, 25, we did almost 30% of our revenue was from exports, but this calendar, it kind of slowed down. But based on what we have been having the conversations with various allies, Indian allies, I mean the countries that are friendly with India, what we see is that two things they are really seized off. One, they used to think that war is not going to happen, no need to prepare, no need to train, no need to have the equipment. But now they know that war can happen anytime. If Cambodia and Thailand can fight, there is no country on which war may not come. So they are suddenly getting ready. Preparedness has become the key word. So that is where Zen's training simulators and training solutions will play a major part. So they are getting ready for the war. And second is, of course, the drones have played a major role in the whether it's Armenia, Azerbaijan, Ukraine, Russia, or the recent Israel. They keep saying that Shahid drone won the war. So how do you really neutralize those threats? So that is where anti-drone systems comes. And the recent licenses that we got are the kind of some of the calibers were actually used when Shahid drones were fired on these countries, and they
indigenous capability. Yes, Ashok, we are developing indigenous capability, learning from the war strategies currently as well. And you touched upon a very important point. Iran has shown us that whether war or not, we have to be prepared. And that's what is also helping the defense sector. All the best, Ashok, and thanks so much for joining us right here on NDTV Profit. That stock really gaining momentum, over 2.5% gain and over 120 rupees gain in the last 2 trading sessions. Keep an eye on that. Now, IEX is in focus on the back of the latest release by the Central Electricity Regulatory Commission on the power market regulations. Now, what are the potential changes? Varsha, my colleague, is really digging all that out for all our understanding. Varsha, tell us.
Well, CERC has issued new draft rules for market coupling, for market power regulations. Now, CERC is looking to introduce a formal framework for market coupling in power market. Now, what will change under new system? A single central body will decide the price versus currently, if you see, each exchange decides its own price. Now, market coupling will be applicable for day-ahead market, real-time market and other market segments. And who will decide the electricity price? If I were to talk about, Grid India will become a market coupling operator and will aggregate bids from all the exchanges. Now, what will exchanges do like IEX? So, power exchanges will collect bids from buyers and sellers and will send the bids to grid controller. Now, how will power prices be decided? So, Grid India will combine bids from all the exchanges and one uniform price will be calculated. If transmission is congested, prices may differ by region. Now, when will these CERC rules be applicable? Public comments on the new rules are still invited till 16th May 2026 and detailed market coupling procedures will be issued within the next 6 months. Now, of all this, how this will impact IEX? Of course, a negative one. This will reduces IEX pricing power and IEX will to rotate as a market coupling operator with other exchanges. The moat for IEX will actually vanish. Volumes may shift to rival exchanges because 80% share of spot power market is with IEX and the core revenue from transaction fees and price discovery will vanish and market coupling can pressure margins and overall financials for IEX. So yes, a negative one, but do remember these are just draft rules.
All right, these are draft rules at the moment, but yeah, that will also lead to price discovery. Thank you so much, Varsha. Jasmeet is joining in with all the stocks to watch. Jasmeet, what makes to your list today?
Well, thank you for that. If you look at the 3 counters that I'm targeting today's trade, would be first one is Mastag. While the stock is buzzing on the back of the weak Q4 numbers and the stock is tanking in today's trade. Now, if you look at the overall key numbers, the overall CC growth did see an uptick of 1.48%, which is a positive for the company given the last quarter was a negative degrowth. But apart from that, the margins and the EBIT has contracted for the company and even the profits got impacted. While the profits were impacted on the back of that one-time labor code, which we saw some part in Q3 and some part got spilled over in Q4 as well. And that's why we see a degrowth in profits as well. Apart from that, company did see a good signing of AI deal wins, roughly 28 in this particular quarter. And for the annual year, it makes roughly 85 deals in the AI space, which is creating a good momentum for the company. Lastly, if you look at the overall FY26, we could see a good growth coming from the UK geography, given almost 50% of the revenue of the company comes from the UK geography, so that's playing well for the company. Apart from that, the numbers are weak, that's why the stock is standing in today's trade. If you look at the next counter, I have Sterling and Wilson. Well, this particular counter is buzzing into it on the back of that order they have won as an L1 bidder tender under the Coal India, while the particular order is to supply the overall EPC package for the turnkey, and the order is valued at rupees 3,500 odd crores. That's why the overall buzz in the particular stock is up about 50%. Well, lastly is Judging Corp, where the stock is buzzing again on the big back of that MOU they signed with IOCL, roughly for 2,100 odd crores.
All right, Jasmeet, thank you so much for getting us all the details of the stock on your list today. Keep an eye out on Nifty 50, 24,456 odd levels. It's 0.4% up in trade, given some bit of momentum, all right, picking up in trade at the current moment. That's all for markets at 12, but keep it with NDTV Profit. Thank you so much.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है। केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia and Sharad Dubey, who's standing at the NDTV Profit market pit with all the action. Sharad, good afternoon. An interesting day of trade is what you're seeing, because the kind of reaction that was expected post what happened on Friday with commentary coming in from Iran and Trump, you know, in less than 48 hours, the shift in terms of stance was absolutely very relevant. And with that, if you see in terms of what markets have done, we've stayed in a pretty range-bound mode now.
Correct. Good afternoon, Hiral, for that. But definitely we are seeing a good recovery coming in from the day's low. It's almost a 200-point recovery. And Hiral, we are near the day's high level in the day's trade as well. Nifty Bank also, the story remains the same. Nifty giving almost a 100-point up move already in the green. And now you see Nifty Bank, much better technical placement. That's also up 0.73%. Remember, ICICI Bank came out with a decent set of numbers also. That's also aiding the Nifty Bank. But what are the key triggers to watch out for right now? You had mentioned earlier that the cues were range bound, but interestingly, I would like to say that the Iran-US ceasefire uncertainty is still remaining there. We are 48 hours before the deadline, but in case if any movement changes, then there will be a change in the Nifty Bank as well. Nifty's key resistance levels 24,500 to 700. That's where the capping options data is suggesting. Let's look at the Nifty Bank's resistance. Where is the numbers looking like? It's around 56,900 to 57,200. These are the important levels to actually look out for. Apart from that, let's also look at the key triggers to watch out for. Right now, the advanced decline ratio is still even Stevens at 1:1. In certain counters in the small cap, still the value buying is continuing. And the buying is seen at least in the PSU banking, in the auto space and certain BFSI names. Selling, but slight selling is there in the IT and the realty space. But largely it is a narrow range of trade when it comes to equity or even other major asset classes as well. Remember, it's a wait and watch right now happening, especially with the global triggers which are happening. So largely this is how the markets are placed, but nevertheless the technicals are pretty strong when it comes to both the benchmark indices and also at least the mid-cap index.
regards to where markets are concerned. Thank you, Sharad, for that. Very quickly, let's look at the watch list. IEX is in focus, where CERC power market norms, that is what they have drafted. A new draft has come in, and that's what is putting pressure when it comes to IEX in trade. Geo Financial Services is another one where the profit degrowth is what has led to the kind of correction that we're seeing in terms of Geo Financial Services. You have Sterling and Wilson buzzing on the back of an order win. BHEL, interesting revenue growth, and the book to bill is pretty strong, and that's the reason why you're seeing a positive reaction there. ICICI Bank, HDFC Bank, both reacting to numbers along with the Yes Bank. Mastek has reported a weak set of numbers where the margins have contracted. Hyundai is also in focus because 162.5 million lock-in shares open up, and it's mainly the promoter shareholding which opens up to trade. But the reason why this is important is because the stock has clearly underperformed and is trading below its IPO price. Interarch is also in focus on the back of an order win, and Trent will be considering its first ever bonus issue. Hardwin again is in focus on the back of an order win along with the Dredging Corp, which has signed a MOU with IOC. EMS again, a 200 crore order win is what they're looking at. And Bharat Wire, where Lloyds Group has bought around over 5% stake in the company. Asian Paints, a second round of price hike, and that's the reason why that stock is in focus. So these are the ones that we're watching out for. But Sharad, over to you to take the rapid fire with Kunal Rambia of The Street.
Well, thanks a lot, Hiral, for that. Good afternoon, Kunal. It's always a pleasure to have you. We'll start a rapid fire segment. I just want to get in the stock Sterling and Wilson. Of course, on the order win, the stock has been buzzing in trade. Volumes also picking up. Is the medium-term setup looking good, or is a good time to partially book the profits for this counter?
Good afternoon, Sharad. Good afternoon to all our viewers. So, in fact, the Sterling Wilson has corrected from 850 levels to as low as 150. I mean, hardly anything was left on the downside, and now this counter has given a sharp breakout, and that breakout was at actually 185, 190 levels. Right now, it's trading at 225. This upswift actually is the breakout of the falling wedge, so it looks very pretty and very strong. With the stop loss of 210, one can think of buying this counter. Targets can be 260 to 265.
And Kunal, your view on Hyundai, today is a lock-in also coming in. A little bit of selling pressure was there, at least in the initial hour of trade. Your views for Hyundai?
Absolutely negative counter. The trend is clearly bearish, but the interesting observation is that this counter reached the levels of April 2025, near those 1600 to 1700 levels. So by any chance, if this level is held on for next 10 to 15 days, one can consider the consolidation and think of accumulating, but otherwise it's a big no as well.
Right, and the next stock is Interarc Building Products. Once the darling of the markets last year, but there was a big correction coming in. A minor positive news flow of a 60 crore order win. Anything here, or you'd like to stay away from this counter, Kunal?
No, Sharad. So since listing this counter is, though it's volatile, but it's making higher top, higher bottom formation. And in fact, the recently made bottom is also looking pretty strong at 1700. The consolidation and the volume is good, supporting the trend. So with the stop loss of 1700, one can think of buying. Though it's far away from that level, one can consider this to be like buying on dip counter.
Okay, buy on dip for Interarc. What about Hardwin here? Positive corporate development coming in. Interesting levels to watch out for?
This counter overall, see again that if we talk about the trend, it's making a decent curve formation, and the movement has been really strong. Today's gap up opening is adding the strength into it. So with the stop of I think around 21, one can think of buying this. Though the risk reward ratio is unfavorable, but the strength is really good. Counter might show us the levels of 35 very soon.
Right, and a big MOU signed by Dredging Corp, and after a long time we are seeing a positive news flow coming in this counter. Is there a trade to be made here?
Overall formation is being curved. The counter is near to the previous highs of around 1100 to 1150. Though after that hitting the highs, the counter has also shown some kind of correction. So I'll stay away from this. By any chance, if we get the opportunity to buy near 950 to 975, definitely one can consider. But for now, it's an avoid.
Right, it's an avoid. Water infra space, that's also been buzzing of late, and EMS has come out with its order wins. Stock has seen a good jump as well. And how's the charts looking like for EMS right now? Of course, it was battered down from its highs, which we had seen 18 to 20 months earlier.
Certainly good bounce from the extreme low levels and from the previous bottom of 2023. But this trend is still not confirmed. It still failed to make the higher top, higher bottoms. So a bit of consolidation will add more confirmation or say more confidence onto it. Levels to watch out will be 350 as a support, and the breakout should be placed at around 390. Above that, the targets can be 430.
Right, Kunal, Mastech is also reacting on back of its earnings as well. Any risk-reward ratio here for this counter? Would like to stay away from it, or it's going under a consolidation now?
See, again, good strong bounce back from 1300 levels, but the trend is certainly negative on the weekly chart. So if at all there is a consolidation going forward, yes, one can consider, otherwise it's an avoid.
Right, and ICICI Bank, your views? Numbers were promising, and of course we saw the stock also doing well. Will we see this momentum continue, at least on a positional setup?
To be very honest on this, weekly chart is looking a bit scary as of now because of this spike from the low levels. I'll stay away from this. Breakout level can be at around 1400. Above that, one should consider for trading. Otherwise, it's an avoid.
All right, that's pretty much interesting. But that's all for the rapid fire. Thanks a lot, Kunal, for that. And Hiral, what are you picking up in the Google Trends?
Thank you, Sharath, for that. It's going to be interesting names, I'm sure, because it's the power sector that has been hogging the limelight so far. But I think today we're not only going to hit on the Google Trends, because another important story which is brewing is HDFC Bank, where the board of management is rooting for KK Mistry as the new board's chairman. However, the onboarding process is likely to take time, and that's the word coming in from the bank's MD and CEO Shashidhar Jagdishan. Let's quickly first listen into that.
As regards the chairman appointment, is that, of course, as I had mentioned in the previous, calls, both Kaizad and I were there. We are all rooting for Mr. Mistry for the post, but of course, we do believe that there are certain processes that we need to conclude or before we can even put forth for the deliberations in the NRC and at the board, and before we can provide recommendations to the regulator. I think that process, we do have sufficient time for that, but it's in progress, and the board, as Kaizad was mentioning, like in my matter, they're seized of this matter, and this will be taken up in due course.
Okay, so that's the word coming in there. But let's actually understand, what do these earnings actually mean? If you have to look at HDFC and ICICI Bank, both the biggest ones in the private banking space, with the way earnings have come in terms of the fourth quarter, what are the key highlights and trends one should be looking at? Piyush Shukla joins in with all the details. Piyush, what are you picking up? Because I'm sure you've analyzed both of these earnings pretty closely. And are you picking up any trends on that aspect?
Absolutely, Hiral. We have actually compiled and jotted down all the key metrics for the Q4 results for India's top two private banks. We can see that, if you can move ahead, we can see that ICICI Bank's overall advances jumped quite high by 16% to 15.53 lakh crore rupees. HDFC Bank has maintained a cautious stance of growing their advances on a slower pace than the industry, at least in FY26. The loans jumped around 12% to 29.60 lakh crore. Q4 is the busiest quarter for banks. In terms of deposit growth also, if we see, HDFC Bank has continued to report higher deposit growth than credit of 14% YOY growth, around 31.05 lakh crore, whereas ICICI Bank's deposits grew 11% in Q4. We can see the net interest income. ICICI Bank has done well on this front. The NII has grown 8%, and HDFC Bank's NII has grown by just 3% in the reporting quarter. We can see the margin-wise, both the banks are more or less have posted decent gains. ICICI Bank's NIM was up 3% quarter-on-quarter, and HDFC Bank's NIM also was up 3% Q-on-Q. Moving on, we can see that HDFC Bank has posted a net profit of 19,221 crore, 9% rise YOY. Same goes with ICICI. The PAT is again up 9% to 13,702 crore rupees. And in terms of return on asset as well, HDFC's ROA stands at 1.96%, whereas ICICI Bank's ROA stands at 2.4%. credit cost, ICICI Bank does not give specific figures, but HDFC Bank's credit cost actually has come down by a large degree of 20 basis point quarter on quarter to 0.35% in Q4. In terms of asset quality, both the banks have reported a fall in their GNPA ratio. ICICI Bank's Q4 GNPA ratio stood at 1.4%, down 13 basis point Q on Q, while HDFC Bank's GNPA also was down around 10 to 12 basis points. Yeah, around 10 basis points. In terms of net NPA ratio, ICICI's NNPA ratio is down 4 bips quarter on quarter, and HDFC Bank's net NPA ratio is also down by 4 basis points in Q4.
So interesting takeaways coming in when you talk about HDFC Bank and ICICI Bank. Thank you, Piyush, for that. But let's also look at stocks which are trending on Google currently, because last week it was a week where power sector stocks were actually buzzing on every single day. Let's see what comes up in today's session as we speak right now. So, in terms of Google trends, if you can just have those ones on the screens, Apollo Micro, again, IEX has been a new addition today, BHEL, and ICICI Bank and Geo Financial Services. So these are the ones which are seeing some good volumes and good searches as well in terms of trends. We know the reasons for all of these counters which are up on your screens. But moving on. Marine exports have surged 14% in FY26. That has been led by recovery in the shrimp demand across the globe. To discuss in detail on the data and its impact on the shrimp stocks, Nitin Avasthi, analyst at InCred, joins in. Nitin, welcome to the show. Always a pleasure to speak to you and have you. Overall, let's understand in terms of FY26, if you have to look at the marine exports, a growth of around 14% that has come in. If you have to look at everything that's going around, from the US tariffs to the West Asia crisis, how would you decode this 14% for the industry? Good, bad, ugly? And if any of this was missing, are you expecting a good surge to come in FY27?
I think the most important question you have asked is at the end of all the questions you've asked. So yes, we are expecting calendar year 26 and financial year 27 to again be record numbers, both on the volume and value front. So what we have actually seen, or what the data currently reflects in a financial year basis, we actually saw the first 6 months of the last financial year do very well in the core markets that India normally exports to, which is predominantly the US. However, in the later part of the year, the second half of the year, we saw a drastic reduction in our traditional markets. So US itself, which was our main market when it comes to value of exports, had actually come down and only started to pick up in February and March. So despite that, these numbers have been achieved because of diversification to other markets such as UK and EU because of the trade deals that were signed. What I want to clarify here is those rates have not yet kicked in. So all these exports that have been done in anticipation.
Right. Right, Nitin. Good afternoon. Sharad here. There's an interesting note you posted today morning as well on the El Nino impact. One is on the Ecuador, and one is on Indian markets, especially on the rising cost. If you could just give us the perspective for both Ecuador and India and what it means for our companies in the aquaculture segment, then we'll get entire clarity on that.
Okay. So firstly, on the Indian perspective, what has happened is fish meal prices are higher by, at absolute rates would be about 175 to 180 rupees a kg. And about 3-4 months ago, these were at 100 rupees a kg. Now, this is something which is very important to the whole shrimp value chain because this is a core feed ingredient in shrimp feed. Of course, if standalone, this would be problematic. But given that we are rising from a bottom market and our biggest competitor, the largest exporter in the world, which is Ecuador, is going through supply shocks while demand still holds. What we see is this rise in feed prices will be absorbed given that the pie of Indian exports is increasing, which had shrunk previously. So that increase which is happening in the pie should be very comforting to all the rising costs, specifically the fish meal one.
Right. Thanks a lot, Nitin, for giving us the entire views on India's growing marine exports and also important channel check which you had given out today morning itself. It's always a pleasure to talk to you, Nitin. But joining us, we have Mahesh Oza as well. Good afternoon, Mahesh. We are just talking about aquaculture stocks. They seem to have got a good impetus on the global macro data and how the pricing is going on. There were some concerns on that. How do you see this aquaculture play? And do you think any risk-reward ratio is favorable for a medium or a large cap company in this space?
I think it's a positive things are going on for our sector. I think Apex Frozen can do well in upcoming time. I think 570, 580 largely can come in the stocks price. So it's a overall positive for Apex Frozen and other companies. So hope Apex Frozen can do well in upcoming time.
So that's with regards to Apex Frozen, Coastal Corp, few of the names that one should be watching out for. From the IT packet, Mastech also, which reported numbers. Let's pull up that counter on the screens and see what a Mastech has done when trade. In fact, if we can just have a comparative of a Mastech to the Nifty IT index from a 3-month perspective, and that will tell you if Mastech has been able to outperform or underperform the industry as well, because that is going to be an interesting comparison. But today that stock is down 3.5%, and we'll have Jasmeet to tell us more in terms of how has the quarter been and anything in terms of outlook that the management would have spoken about for FY27. Jasmeet, over to you, and then we look at the comparative charts as well.
Well, thank you for that. We see a weak set of number coming in for the particular count, and that's why the stock is banging in today's trade. If you look at the overall key numbers, we do see that the overall dollar term, the revenue has gone up by 1.4%, is better than the previous quarter, and in the previous quarter the revenue was down 5.6%. That's a positive there. But apart from that, the margins and overall EBIT has contracted for the management, given on the back of that heavy expenses. Now, if you look at the other key counters and how the company has performed, the overall UK geography has done really well for the company, given that it has grown nearly 21%, contributing to the overall growth in FY26. And apart from that, the order book also has a healthy growth on the Q-on-Q basis. While the important aspect to note will be the overall AI deal the company has done. The company has nearly signed 27 AI clients in this particular quarter, and over the last 1 year, the company has closed almost 83 odd deals in terms of AI, which is a key positive. Now, if you look at the key numbers, you look at the overall revenues is an uptick by 3 odd %, but when you look at the overall EBIT is down to 1.3 odd %, while the margins have contracted by 70 basis points and have tanked down to that 14% range of earlier 14.8, which is creating the overall trouble and why the street is being worried. Apart from that, the net profit is down 2 odd %, and net profit is also getting impacted on the back of that one-time labor code impact we saw in the Q3. It got spilled over for this particular counter in Q4 as well, which is not common for IT names. So all in all, we do see the company stocks tanking in today's trade. But apart from that, the management remains pretty constructive about the future, and they see good order in terms of government orders as well as the UK geography.
Okay, thank you so much for that, Jasmeet. Let's just pull up the 3-month chart of Mastech as well as the IT index, and that tells you in terms of IT, Mastech has categorically underperformed Nifty IT as well. We are seeing cuts of 24-25% coming in on a Mastech. Mahesh, your view when it comes to Mastech, because the kind of underperformance that we've seen versus the IT index as well, there is almost a gap of around 8-10%, but how are you looking at it?
I think if any downside in Mastech could be a buying opportunity. In a medium to longer term, if you're looking 1,850, 1,900 level can come, and in future order pipeline is good, and I think management commentary is also good. So we are tracking from long in Mastech, but yes, stock has beaten down largely in last few months. So I think if any downside from these level, that is a buying opportunity.
Okay, so that's with regards to Mastech. But moving on, you have another stock which has been trading under pressure on the back of Q4 earnings, which is a Geo Financial Services. Let's pull up that one on the screens. It's a lackluster Q4, and it's going to be interesting to understand what has really not worked. If you see the stock down almost nearly 2%, my colleague Shivam is standing by to tell us more. Shivam, what is it that has not worked for a Geo Financial Services, because the stock is under pressure?
So yes, Jio Financials have posted their Q4 earnings, starting with the revenue from operations, which has gone up by more than 2x and currently stands at 1019 crores. The total net interest income of the company has also gone up by 28% to stand at 344 crores. Looking at the finance cost, it has also seen a increase of 40% on quarter-on-quarter basis to 298 crores, and pre-provision operating profit has seen a decline of around 13% in this quarter to 327 crores, and all of this has resulted in a decline of 14% in the net income of the company. Now let's look at few key reasons what went wrong in Jio Financial's result. So first is the bottom line, with the net income of the company, which has fallen by 14%, and the pre-provision operating profit, which has also declined by 13%, and this decline was mainly due to the operational expense, which has increased 5 times on YOY basis. Second is the share of income from the non-core operating activities, which is still at a high of 46% when seen as a percentage of the consolidated total income. Now these non-core activities include gains from investments and treasuries, which are less predictable and recurring in nature. Also, profit degrowth on higher operational expenses has been seen, and despite the revenue from the operations, which has increased more than 2x to 1019 crores on YOY basis. Also, as the Jio Financial Services has bought SBI stake in Jio Payment Business Limited, and now this will be a 100% subsidiary of the company with effective date from June 18, 2025. And so, this time, under the pre-provisioning operating profit, the operating loss of Jio Payment Business Limited has also been considered, and that's why we see a decline in the operating profit. Lastly, it is the elevated yields, which is due to the geopolitical tension, and it has resulted in an increase in the cost of borrowings for their Jio Credit, which is their lending business, and it has seen a marginal increase from 6.99% in previous quarter to 7% in current quarter. But this may rise above. If the geopolitical tensions and war situations persist.
Thanks a lot, Shivam, for that analysis. But Mahesh, a quick view on Jio Financial Services, at least on the medium term to long term basis.
Sir, if you're looking Jio Financial perspective, the numbers are largely in line or above estimates, because AUM has increased largely, and Jio Finance is currently working on increase in AUM. Numbers, operating profit, operating expenses are largely due to business expenses, which is for longer time that is providing growth. So I think it's a in line number, and in medium to longer term, still we are positive on Jio Finance, because AUM is growing and their working nature of Reliance Group is these type activity also. So I think still we have optimistic for upside, at least 275, 300 range can come in 1 year horizon easily.
Right. So optimism is there for Jio Financial Services, but there's one stock where optimism seems to be not there. That's BHEL. Concerns are coming in and couple of news flows coming in. That's on the negative side. Puneet, how negative it is?
Well, the order inflow part is slightly negative, where it has fallen by 19%. But the stocks are 4% today, largely seeming to be that the street is more looking at the provisional numbers for revenue, and hence that would be something that it's not as bad as it was expected. So the provisional numbers show that FY26 revenue is up 18%. That's just a 4% miss in terms of revenue estimates according to brokerage from Incred, and hence that is the view possibly leading to a 4% up move today. Now, because of the provision update, we also see that Q4 revenue could improve by almost 32% on a YOY basis, and hence that could be something that the street's looking at. The other aspect has been that Incred also says that the timely as well as profitable execution will unlock the next leg of growth. So something to watch from the management commentary in Q4. Finally, in terms of order inflows, is down 19% on a YOY basis to 75,000 crores. But the book-to-bill ratio is still stable at almost 7 to 7.5. So while there might be near-term headwinds on order inflow, I think streets looking at just a mere miss in terms of revenue versus analyst estimates.
Right, market is a forward discounting machine. Thank you very much, Puneet, for that. But Mahesh, just a quick view. We are running almost out of time. Good time to get into this dip for BHEL?
I think already we have seen 260 to 330 levels. So it's a limited upside in the counter. So I think we are neutral to a small upside. That could be 360, 375. So if anyone bought in lower level, they can book on the higher side. And I think it's a limited upside from these level.
All right, so limited upside potential coming in for BHEL at the current levels. But we are running out of time now. That's all from me, Hiral, and the entire team which have put together trending stocks. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver.
Benchmarks start the week on decent footing. Nifty near day's high. Sensex as well jumps more than 380 points. PSU Bank's energy lead gains. And energy markets jolted by fresh escalation at sea, with Brent soaring as much as 8%. War premium returns to the barrel after US Navy seizes an Iranian-linked ship, while Tehran fires at vessels and reimposes controls on the Strait of Hormuz. HDFC Bank reported a stronger than expected rise in fourth quarter profit, helped by a pickup in lending to consumers. Though lending margins remain weak, ICICI Bank too reported a beat in the fourth quarter profit, led by robust loan growth and lower provisions for bad loans. IEX is in the spotlight after CERC released its draft power market regulations. The proposal on market coupling could reshape price discovery across exchanges, raising questions on liquidity volumes and the competitive landscape. And Asian Paints is turning up the price dial yet again. The company has announced a second 3 to 5% price hike effective May 5th, pushing cumulative increases into high single to double digits, underscoring persistent cost pressures and strong confidence in pricing power. The visiting South Korean President
is going to be meeting PM Modi to discuss trade and ties. Yesterday, External Affairs Minister called on President Lee as he kicked off his visit to India. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets. And when you take a look at Nifty, it's actually hovering close to the day's high right now. And that's the kind of setup that you're seeing, just a little bit of recovery, if you will, that you've seen, or uptick rather, that you've seen in just the last few minutes, as you can see, when it comes to Nifty 50 as well, but it's in decent shape. Sensex as well, with that 270 odd point uptick also coming in. So decent strength emerging as far as Sensex is also concerned. But let's take a look at the sectoral picture. And it's actually tilted in the favor of green right now. So there's actually Nifty PSU banks leading the gains, energy, media, rural, oil and gas, Nifty bank as well in decent shape right now. So IT, realty as well on the back foot. So that's the little bit of weakness that you're seeing coming in for both of those indices, as you can see in terms of the major indices. Now, when you talk about your top gainers, you have something like a Triveni turbine that stands out, or even Quality Wars, Jyoti CNC. Now, that's the entire broader universe as well. But when you talk about the Nifty 50 as well, you do have a bunch of counters that are holding up in good shape. So it's actually SBI that's eking out quite the gain. Asian Paints after that price hike, second price hike also coming in. And Adani Enterprises, Adani Ports, NTPC and Grasim also in great shape right now from within the Nifty 50 pack. And on the flip side, something like a Hindalco is under pressure with a cut of about 2%. Jio Financial Services, L&T, Kotak Bank, HDFC Life and Wipro, some of the other losers as well from within the Nifty 50 pack as well. But let's also try and take a look at HDFC and ICICI Bank. Now, those are the two counters that are in focus. It's the entire banking pack that's trading quite interestingly right now, with Kotak Bank with that little bit of downtick coming in. On the flip side, something like an SBI that's holding up in decent shape as well. But you know what really is important to take a look at is HDFC Bank as well as ICICI Bank. After that decent set of numbers largely, let's also take a closer look. Now, the stocks are not doing much, but it's very important to take a look at the trajectory that they're shaping right now in terms of those banking heavyweights, because the question that still remains is which bank came out ahead on the key metrics, and how do the valuations then really stack up at this point in time. In fact, Piyush is standing by with just that lowdown.
We have actually compiled and jotted down all the key metrics for the Q4 results for India's top two private banks. We can see that if you can move ahead, we can see that ICICI Bank's overall advances jumped quite high by 16% to 15.53 lakh crore rupees. HDFC Bank has maintained a cautious stance of growing their advances on a slower pace than the industry, at least in FY26. The loans jumped around 12% to 29.60 lakh crore. Q4 is the busiest quarter for banks. In terms of deposit growth also, if we see, HDFC Bank has continued to report higher deposit growth than credit of 14% YOY growth, around 31.05 lakh crore, whereas ICICI Bank's deposits grew 11% in Q4. We can see the net interest income. ICICI Bank has done well on this front. The NII has grown 8% and HDFC Bank's NII has grown by just 3% in the reporting quarter. We can see the margin wise, both the banks are more or less have posted decent gains. ICICI Bank's NIM was up 3% quarter on quarter, and HDFC Bank's NIM also was up 3% Q on Q. Moving on, we can see that HDFC Bank has posted a net profit of 19,221 crore, 9% rise YOY. Same goes with ICICI. The PAT is again up 9% to 13,702 crore rupees. And in terms of return on asset as well, HDFC's ROA stands at 1.96%, whereas ICICI Bank's ROA stands at 2.4%. Credit cost, ICICI Bank does not give specific figures, but HDFC Bank's credit cost actually has come down by a large degree of 20 basis point quarter on quarter to 0.35% in Q4. In terms of asset quality, both the banks have reported a fall in their GNPA ratio. ICICI Bank's Q4 GNPA ratio stood at 1.4%, down 13 basis point Q on Q, while HDFC Bank's GNPA also was down around 10 to 12 basis points. Yeah, around 10 basis points. In terms of net NPA ratio, ICICI's NNPA ratio is down 4 bips quarter on quarter, and HDFC Bank's net NPA ratio is also down by 4 basis points in Q4.
No, absolutely, and that really sets the tone when it comes to both of your banking heavyweights in terms of what's going to be happening going forward as well. Thank you so much, Piyush, for getting us that entire roundup. But let's also quickly take a look at commodity prices right now and get you the word going as far as gold as well as oil are concerned. Firstly, when you take a look at oil prices, they're actually soaring right now, and you do have that 5% uptick, as you can very clearly see on your screens, with WTI, and about a 5% uptick for Brent as well. So holding up at least above $90 a barrel level. That's Brent for you right now, and WTI crude also just about edging closer to that $90 a barrel level as well. That's quite important. But when you talk about the factors as well, you do have the Hormuz gridlock right now that is raising all of these supply concerns, and that's something that you're looking at. So the war premium, if you will, is really returning to the barrel right now. And why this is important is because a fifth of the world's oil flows through the Hormuz. So everything and anything in terms of the information coming out for Hormuz is very important to take a look at right now. When you talk about oil, lastly, when you talk about gold as well, before we get you some more insights on both of these commodities, when you talk about gold, you do have that stronger dollar really dragging bullion right now. So that strength really returning back to the greenback in terms of the latest movements right now with the Hormuz disruption and renewed inflation risks, also something that you're definitely keeping on your radars for gold prices as well. But Anuj Gupta, commodity expert, is joining us right now. Thank you so much, Mr. Gupta. And a very good afternoon. It doesn't seem like it's a very good afternoon, at least for gold prices, right now. But seems like a decent one for oil. Let's start there. Let's talk about oil prices in terms of the key triggers right now. And it is really Hormuz that is the keyword here.
Definitely the only one, the Hormuz, the uncertainty, putting pressure on gold prices. On Friday, we saw when Donald Trump said that, the Hormuz is open, we saw a sharp rally in the gold price and sharp correction in the crude prices. But after that, Iran clarified that it will not happen. And after that, we saw a, 360 kind of turnaround in both the prices. Currently, we have seen gold is trading almost below 4,800, and crude is increased by almost 4-5%. So the main concern only on the Hormuz unclarity. Whenever we saw any clarity on Hormuz, we will see a positive trend in the gold prices. But right now there is no clarity on Hormuz.
No, absolutely. Clarity, none, but commentary, plenty right now. When you talk about commentary coming in from Trump as well this morning, overnight for them and this morning for us. But when you talk about all of this commentary, are you at all worried about all of the damage that has been done thus far to oil infrastructure? Is that something that you think is going to be helping underpinning prices as well going forward?
Definitely, we have seen that Donald Trump always talking about the power stations and oil stations. He's saying that if Iran will not stop the war, they will damage their powerhouses and the oil segment. So that will impact on crude oil and natural gas as a product, because if they hurt these oil supplies, so definitely price will increase from here, and that will negative for the other asset class, because due to this we are the inflation will increase, and central banks will do definitely the monetary tightening. So that will impact negative on the other asset class, just like a gold.
No, absolutely. And thank you so much for helping us out with all of those insights as well. But when you talk about gold prices as well, I wanted to get a sense of what you think about the stronger dollar impact right now. Do you see that continuing going forward?
See, currently dollar index is trading around almost 98, and in last 2-3 weeks we saw very mixed data in the US economy. We have saw a sharp correction in GDP on the US. However, in last week we noticed the unemployment rate, the decrease, and that will come on that came on a positive note. So we are expecting some kind of range bound momentum in dollar index. But yes, safe haven demand may be there in gold prices, and we are expecting that buy on dip strategy may be seen in the gold.
No, No, absolutely, and that makes a lot of sense in terms of how you should be approaching this also. Is that the same way that you're looking at silver as well?
Yes, even though we have seen the silver demand is not so much as compared to the gold prices, because due to this escalation or due to this Hormuz disruption, we saw a less, the industrial activity, and due to this, we saw that no, sharp run up in the industrial metal. So we are not expecting so much kind of rally in the silver prices, but yes, as silver is following the gold prices or silver is trading as tandem with the gold, so we are expecting also a positive trend may be seen in the silver prices. But yes, the $85, which is a very tight range for the silver prices, if silver even to breach $85, then we will see a sharp rally in the silver price.
Right, and that really sums it up in terms of how you should be looking at silver as well. But and you've already alluded to this as well in your previous answer, but when you talk about investors who are looking to make fresh buys right now or who have chips on the table, what is the exact strategy that they should be getting back to then?
See, for the investor kind of thing, I think one should wait for that, because the Hormuz unclarity is there, and that will impact on the gold and silver prices. So investors who are looking for longer term, perspective for, let's say, 3 to 5 years, definitely they will go on buy on dip strategy in the gold and silver prices. Currently, we are expecting that almost $47-50 kind of levels are very supportive level for the gold, and almost $75 in the silver prices. So if it came at that level, then one can start buying in the gold and silver.
No, absolutely, and thank you so much for joining us with all of those insights. So there you go, that's the exact strategy that you should be employing as well if you're looking at gold and silver, and that's if you are looking to make fresh buys or if you already have chips on the table. But let's also talk about one counter that's really in focus in the spotlight, that's Premier Explosives. The company is in focus after DRDO is set to hand over full missile production to private companies. In fact, my colleague Varsha caught up with the management as well. Sharad in fact caught up with the management as well. Let's also go across and listen in to that bit of commentary really coming out in terms of synergies from this particular license.
Well, the entire defense industry is buzzing in trade, and to understand a little bit more about the key announcements and what it impacts for Premier Explosives, we are joined in by TV Chaudhary. He's the Deputy MD at Premier Explosives. Good morning, sir. It's always a pleasure to have you, and a very important announcement coming in as DRDO is pushing the private sector in missile production. Now, for this industry as a whole, what does this mean?
Yeah, thank you, and good morning to everybody. Yeah, it definitely means a lot to the industry, because in olden days, DRDO was developing technologies. They were taking for full development of technology almost 10 years or more than 10 years, and then transfer the technology to private sector industry or public sector, which was taking another 4 or 5 years to absorb the technology. Now, by bringing in the DCPP program, the industry is involved right from the beginning of the development R&D stage. So this process, this time taken for the old process is cut short, and now it's being absorbed faster, and then private sector industries are able to do it even with the support from right from the beginning.
Right, and Mr. Chaudhary, let's get into the details about this. Under this DCPP model, private companies are expected to be involved from the development till delivery. So in this entire process, where does Premier Explosives fit in?
See, Premier Explosives has already absorbed several technologies, and in this case, in DCPP programs, Premier Explosives is a very important player in terms of energetic materials, that is the propellants and explosives and pyrotechnics, other things. So even though the DCPP partner is one of the big corporates who is absorbing the technology from DRDO, but the technology for the energetic materials, which is our so that they are naming Premier Explosives, in this case, eligible candidate to participate. And we are able to do that along with multiple players who are actually DCPP receivers, and then we are a subcontractor to them.
Right. And Mr. Chaudhary, you have spoken about being the key supplier and an exporter for rocket motors. Now, does this DRDO push accelerate the indigenous sourcing in this segment?
Yes. The DRDO, in the sense, DRDO is a developing agency, but the other public sector undertakings like BDL BHEL, they are taking the lead in absorbing these technologies and then getting the orders for exports and all those. And what we are doing are other rocket motors, not part of DRDO, but the others for export, for the other export market, which is coming. The specs are given by the customers.
Sure, fair enough. Specs are given by the customers, but the indigenous element in this manufacturing is definitely going up. But as the missile technologies improve going ahead, how important is the exports for premier explosives, along with, of course, the domestic demand, which you spoke about? But the export market, how does this open up?
The exports are very important for us because the 100% rocket motors are made by us for the export purpose. We are not dependent on any hardware supplier or any. We are the sole manufacturers of rocket motors. And if you look at the past 5 years export business we have done, you will realize the contribution made by the export market.
Right, and of course the export market is something which we'll watch out for. But in the Telangana, Hyderabad region, there is of course talks of a defense corridor. We have seen your peers also applying for a lot of land. Is the company also looking for an extension in this area, in this defense corridor in Hyderabad, Telangana area?
We have already started working in Andhra Pradesh, where the land values are lower and incentives are more. And our industry being a high energy material land, so our requirement of land is very large, and the value price of land is very important for us. And Telangana, the land values are very high. So we are going to AP, where the land is available at a cheaper price.
Right, so that means some expansion we can expect in this cheaper areas as well. But just a query, just to put a little bit of perspective in place, just some buzz in the street definitely is there that there might be a promoter block, in the street for a kind of a sell-off. Some bids are also talking, but this is just a buzz. Just wanted to get your final clarity on this. What's actually happening? Is the promoter stake in the block in the street, or is the talks are happening?
No, like you rightly said, it is only buzz what we hear, which are spread. As far as I know, there is no such activity going on at present.
Anothan, there you go. So that's the word coming in from the management of Premier Explosives as well. But let's also move on. And amid the continuing crisis in the Strait of Hormuz and disruptions in global energy and shipping routes, a key Indian port is emerging as a major maritime alternative right now. You do have Kerala's Vizhinjam port in Thiruvananthapuram that is witnessing an unprecedented surge when it comes to vessel movement, with over 100 ships currently in queue or seeking berthing calls. In fact, Ashwin Nandakumar brings us this particular report.
As tensions continue to choke shipping movement through the Strait of Hormuz, the ripple effect is now being felt across global trade routes. But on India's southern coast, Kerala's Vizhinjam port is fast emerging as a critical maritime lifeline. More than 100 vessels are in queue or seeking calls for berthing rights, underlining the port's growing strategic importance.
I'm standing outside the Vizhinjam International Seaport, which is known to be the country's one of the most strategic ports that has ever been developed in the peninsula. So the world is right now talking about the Vizhinjam port as requests are coming in from multiple companies stating that they would like to berth in this port, thanks to its natural depth and also its strategic location, because 10 nautical miles is the international shipping route. Certainly, this has become one of the most important strategic maritime point for the country.
Positioned close to one of the world's busiest east-west international shipping corridors, Vizhinjam's deep water advantage is proving crucial. The port, opened by Adani Ports and Special Economic Zone, is India's first deep water transshipment hub and is now being seen as a viable alternative amid the Gulf crisis.
Because of the crisis, over 100 ships have asked for berthing rights in Vizhinjam. We're still a small port. We're developing. Our second phase is still being constructed. It'll only be ready by 2028. But suddenly people have begun to see what a gold mine, what a gem we have on the southwest coast of India. In my constituency, Thiruvananthapuram, and I had something to do with it. I'm very, very pleased to see it coming to such global prominence. And what is very important is that India should realize how important this is for us. For the longest time, we've had no world-class transshipment port in India.
With berthing space running short, sources indicate several cargo vessels have had to be deferred. That is now accelerated Phase 2 expansion, which is expected to significantly boost docking capacity over the next 2.5 years. Once completed, the port will be able to accommodate up to 5 motherships simultaneously, placing it in direct competition with major global transshipment hubs such as Colombo and Singapore.
A couple of the world's largest ships had already docked there in the course of the last year or so. But suddenly with the Straits of Hormuz, the attention has multiplied exponentially. We're not talking about 5 or 6 ships coming. We're talking about 100 ships coming, of which we've had to turn away 60 because we just don't have enough room. But we're also telling them, don't worry, in 2 years' time, we're going to have Phase 2 completed. There's going to be a much, much larger docking facility, 2,000 meters long, and you'll be most welcome to come. And we'll have the capacity to take 5 huge motherships at the same time, all of that.
At a time when global supply chains are under stress and maritime routes remain uncertain, Vizhinjam's strategic location in the Indian Ocean is emerging as India's big advantage. What began as an ambitious infrastructure project is now becoming a global necessity. With Ashwin Nandkumar, Bureau Report, NDTV.
Alright, and there you go. So that's an important update coming in as far as one important port is also concerned. But let's also talk about BHEL that is buzzing away with that 4% uptick as well. The company, of course, has order inflows in FY26 that have fallen. But let's also zoom in on the commentary coming in from Incred. In fact, Puneet is standing by with that highlight.
Well, thank you for that. Well, definitely the order inflow number down 19% for the year is a key negative, but overall I think the market is looking at just a mere miss in terms of the revenue provision number. So FY26 turnover, at almost 32,000 odd crores, it's up 18% on a YY basis, but versus the estimates that analysts had, it's just a mere 4% miss, and I think the estimation was a lot worse in terms of revenue profile growth, and hence the stock is holding up at this point of time. This also implies that the Q4 revenue growth will be around almost 32% given what is given for FY26. Execution pace has improved in the final quarter is what Incred has also highlighted on BHEL. They've also mentioned that commissioning of the 8.9 megawatt power capacity during FY26 was a good execution order. But Incred says that timely as well as profitable execution will unlock the next leg of growth for the counter. Now, when you also look at the order inflows, as we discussed, it was almost about 75,000 odd crores, but it's down 19% compared to FY25. When you also look at the outstanding order book, it's almost at 2.4 lakh crore, and given the revenue profile that we've discussed of almost 32,000 crores, the book to bill ratio at 7.5 times gives some visibility of order inflows and the execution of the same over the next 4 to 5 years. Finally, in terms of what you will have to look out for in terms of commentary for Q4 will be execution for FY27. You want to get the book to bill ratio a little lower than this. And also, in terms of the order inflows for FY27, given the expectations for FY26, what could that be? Are some of the key highlights that we should watch out for?
No, absolutely, and thank you so much, Puneet, for getting us a snapshot in terms of what Incred then also had to say about something like a BHEL. Let's also add another counter to the list of stocks that you should be looking at right now. Asian Paints, about 1.7% uptake also coming in on this particular counter. And it's buzzing away in trade after, they stepped up pricing to protect margins. The company has announced a second round of price hikes of 3 to 5% effective May 5th, taking cumulative increases into high single-digit to double-digit territory as well, following an earlier hike in April, signaling continued cost pressures and confidence in pricing power. So that's the latest update that you're looking at there. The stock, of course, cheering that, but with that, we're completely out of time on this edition of Lunchtime Trades. Thank you so much for tuning in.
KP Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the
Afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today, either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of India Pesticides. Now, the stock is up nearly 15% in the last 1 month. We need to decode what's the impact of the Middle East war that had happened, what is the status of the company's CDMO and CRAMS business, and is the company on track to achieve its FY27 guidance of 20% revenue growth, is something that we'll get to know from the management today on the show. Apart from that, we'll be also speaking about Sterling and Wilson and EMS. Now, both these companies have announced order wins. The stocks have been gaining. For Sterling and Wilson, the order win is from Coal India of close to around 3,490 odd crore rupees. While when it comes to EMS, the order size is quite smaller. Couple of highway projects, couple of construction orders that they have won, and the value of these orders stand at close to 208 crore rupees. Apart from that, it's Popular Vehicle, the dealer of Maruti Suzuki cars. Now, the Q4 update has come in quite strong. In fact, the revenue they are looking at on a YY basis is nearly 69% up in the fourth quarter, and for FY26, they are seeing a growth of nearly 5% on a YY basis. And lastly, when it comes to Bharat Wire Ropes, this counter was also buzzing on Friday. Lloyd Metals was one of the buyers in trade, and they have acquired shares worth nearly 193 crore rupees. So what could be the potential reason behind this acquisition coming in from Lloyd's Metal is something that we'll try to get an answer from our fundamental analyst as well on the show. Now, if you look at the market, it has been quite a dull trade. We were managing to hold on to about the 24,400 level for better part of the trade, but right now we are 15 points below that, close to 24,385. If you look at the sectoral indices, it's the Nifty Real Estate and Nifty IT,
which are trading in red, down around 0.5%. On the gaining side, it's Nifty Energy and the Nifty PSU Bank Index, which is largely led by the gains that we are seeing in SBI. Even when it comes to small cap, after multiple days of gains, some kind of profit booking is something that we are seeing in trade today, and largely this has happened in the last half an hour of trade. But what are the key stocks that are buzzing here, Varsha?
Some of the stocks are actually buzzing on the back of news flow and of course, high volume. You have STL Networks, which is buzzing again on the back of high volumes. Volumes are at 4 times of its 30-day average. There you go, the stock is up 20% in trade. You have Hardwin also, buzzing in trade on the back of higher volumes. That is, the stock is up almost 12%. Deccan Gold is buzzing. The news over here is that India's first private gold mine project in Andhra is set to go live in May, and hence, you're seeing Deccan Gold is up almost 12% in trade. Also, Kolte Patil is also buzzing. Then you have GK Energy. Volumes over here are 2 times of its 30-day average, and GK Energy is also up. There you go, the stock is up almost 8% in trade. On the losers side, let's see which are the stocks which are on the losing trend. You have Birla Cable and Gayatri Projects, which are losing when it comes to a small cap 250. Not much action when it comes to on the losers, but you do have gainers. But moving on, one stock which is in focus, lots of triggers when it comes to India pesticides. You have CDMO, CRDO. Company was expecting 20% for FY27. Let's see what are the growth prospects for the next 2 years, and for that I'm here joined by Mr. DK Jain, who's CEO at India Pesticides. Mr. Jain, welcome at NDTV Profit, and always pleasure to have you. My first question would be, of course, the ongoing war situation in Middle East. If you see, what's impact on raw material for India Pesticides, and overall how this is going to impact your financials?
Good afternoon. Thank you very much for giving this opportunity. Good afternoon to you and to the viewers. You rightly said the war in the Middle East has impacted a lot of raw materials and the inputs, especially the sulfur-based compounds. And for us also, we use a lot of sulfur-based compounds, though prices have gone up and the availability has also become difficult. But we have been fortunate enough to discuss with our customers, and we are able to pass on the cost differential to our customers.
So, sir, a lot of companies are expecting the impact of Middle East situation in FY27, basically in Q1 FY27. With the ongoing war situation, are you do investors still expect the 20% growth in FY27 with 18 to 20% of margin still on track?
Yeah, we are still on track. We are still on track. We have been successful in passing on the price increase to our customers, and we feel that we should be able to maintain the guidance what we have given earlier.
FY26 also, so the TTM numbers stand at around 1,000 crores. Will you be able to par 1,000 crores with EBITDA margin 18 to 20%, or 1,000 crores is the number that investors should expect for FY26?
FY26, we will be crossing 1,000 crores because already we have given a guidance in that direction, and we have already surpassed that. And the margin also would be in the same range as expected, around 18%.
And sir, any range or any guidance or any internal targets that you have for FY27 on the revenue and the margin front?
Sir, revenue we are expecting to increase by almost about 20% minimum, and similarly margins would be in the same range what we are having today.
And what would be the factors that would lead to this incremental 200 crore in FY27?
Sir, number one is that our subsidiary Shalby Specialities have already started operation. We have the formulation unit already in operation, and one technical grade block is already in operation, and 2 more blocks are under construction now, which will be operational by the end of this year. So we feel that it will add substantial amount, almost about 80 to 100 crores from Shalby's Specialities. And another 100 crores we are expecting from our existing products at our existing plant at Sandila, where we are going to add one more product this year. The work is going on.
I believe you are already in mid of some capital expenditure plan. Any guidance for FY27 on capex front?
Capex, sir, we are already doing almost about 90 to 100 crores in Shalby's and around 30 crores in Sandila plant.
And any fundraise that you would require or any debt raise that you would require for this capex, or will it be completely funded by internal accruals?
Mostly it will be by internal accrual. We may take very small loan for our subsidiary Shalby's. We may take a small loan for that.
And sir, how are the realizations trending when it comes to domestic and export market? If you could also share a little bit on that, the prices of the end product that you sell.
Prices more or less because we have to modify the prices because of the recent geopolitical situation around the world, and this we have been able to do even for our domestic customer as well as for exports.
And sir, what is the export contribution currently?
Currently, it is about 40% of our revenues.
Okay, and any target for next 2 years? Where do you want to take this export contribution? Will it be, higher than 40%, or you want to, more concentrate on your domestic market?
Ma'am, actually, we are working on both the fronts. Few products we have selected which are export oriented, and few products we have selected which are domestic oriented. So it will be a mix of both so that we are able to sustain. And it will be in the range of 40 to 50% export and remaining domestic.
And sir, also wanted to have an update on your CDMO business. You were working with couple of clients. So any update on that?
Yeah, we are still working on them. We have already sent samples to them. The samples have been, in one case, the sample is approved. In another case, there is some small problem in the sample, so we have reworked on the sample and we have already sent them the revised sample. And we hope that this year it should materialize, and maybe from next year onwards it can start giving some revenue to us.
Okay, just one thing that I wanted to understand. Earlier, I believe higher working capital was one of the issues that analysts had pointed out. Anything that has improved on that front?
Sir, working capital, because of these geopolitical situations, we may need to store a little more stocks. The stock levels are slightly higher. So for that, we may be requiring little more working capital. So maybe by the end of this year, FY27, it may improve upon.
Right.
But and presently, it is slightly more because we had to keep sufficient stock so that our plants can get running.
Right. And sir, also wanted to understand about the volume, volume growth that you're expecting for 27. You said that the prices are stable. What about volumes?
Volume will also be growing because of the new products what we are adding, number one. And number two, because of the increased demand of our existing products. So on both the fronts, we are increasing the volumes.
And sir, the B2C, if you see the revenue contribution of B2C is around 20%. Do you want to inch that up in the next 2 years? Where do you see that contribution go to?
We are maintaining between 20 to 25% of the B2C component, and B2B is the remaining around 75%.
Right, understood. Well, thank you so much, Mr. Jain, for answering all the questions, and it was a pleasure speaking to you. Thank you so much.
Thank you. Thank you so much. Have a nice day.
Thank you. Well, with that, let's also invite our guest for the day, Gaurang Shah, who's Senior Vice President at Geojit Investments. Gaurang, welcome at NDTV Profit. You heard the management of India Pesticides expecting 20% of growth over FY26 with 18 to 20% of EBITDA margin. What would you advise to investors when it comes to this counter?
Thank you, Varsha, for having me on the show. Good afternoon to all the viewers of NDTV Profit, and to you and to Somit as well. A small disclosure, all recommendations that I'll be sharing with you on your show, Varsha, they are a part of our fundamental research team recommendation. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So I think I was just listening to the verbatim that the management was giving. The outlook for business looks quite promising, as elaborated by the management in the interview that you just concluded with. There are only two things that I'm worried about. One is the dependency on export, and second is the dependency on input raw material. Any kind of hindrance could create some issue till the time there is a decisive resolution. I won't give any specific buy, sell, and hold on India Pest because we don't have any specific coverage. But yeah, I mean, whatever capex and additional capacity that the management has spoken about, I think this should add to the overall performance of the company.
Before we move on to our next small cap stock, let's get in Sharat to understand what's been buzzing on the F&O side.
Well, thanks a lot for that, Somit. And largely, we have seen a positive move coming in the markets of both Sensex and Bankex. But remember, it's in a very tight, narrow range as we are seeing the implications of the geopolitical development. Interestingly, you see Reliance is holding the fort. It's in the green. And of course, the top gainers include Trend, SBI, Asian Paints as well, some consumption names and some defense names as well. But what's not working is definitely BHEL, Kotak Mahindra, Titan and L&T. That's where the sell-off is happening. But we could say the markets is even Stevens if you look at the broader indices. Also, let's point out the key long build-up of the stocks which are happening to see where the action is. And now there's a new entrant. Adani Green makes it to the list. The stock is up 4%. Volumes are also showing good strength. Also, BHEL would be in focus, and that stock is also seeing a reversal, and we're seeing a long build-up here. The stock is up 4% as well. Also looking at the short covering candidates, we have Trent on the basis of a positive corporate development and Adani Group stocks. Adani Enterprises also makes it to the list. These Adani Group of stocks were not there at 1045, but now we are seeing a good buying and interest in the markets for them. Also looking at the long unwinding, we have Tata Tech and KPIT Tech. 1045 update, KPIT Tech was there at that time also. And let's lastly look at the key short build-up which is happening across IEX. That's where the selling has intensified. Stock is down 7%, and Geo Financial also selling is there. That stock is also down 2%. So these are the important stocks which should be on your radar.
Well, thank you, Sharat, for that. Let's slip into a short break and we'll get to more stocks, small cap stocks on the other side.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracked.
Let's cut across to the fresh visuals coming in from the exchange of MOUs between India and South Korea.
भले ही यह उनकी पहली भारत यात्रा हो, लेकिन भारत के प्रति उनकी आत्मीयता हमारी पहली मुलाकात से ही स्पष्ट रही है। फ्रेंड्स, 8 वर्ष बाद कोरिया के राष्ट्रपति की यह भारत यात्रा अत्यंत महत्वपूर्ण है। डेमोक्रेटिक वैल्यूज, मार्केट इकोनॉमी और रिस्पेक्ट फॉर रूल ऑफ लॉ हम दोनों देशों के डीएनए में है। इंडो पैसिफिक क्षेत्र में भी हमारा कॉमन आउटलुक है। इन सब के आधार पर पिछले एक दशक में हमारे संबंध अधिक गतिशील और व्यापक हुए हैं और आज प्रेसिडेंट ली की यात्रा से हम इस ट्रस्टेड पार्टनरशिप को फ्यूचरिस्टिक पार्टनरशिप में ट्रांसफॉर्म करने जा रहे हैं। हम चिप्स से लेकर शिप्स, टैलेंट से लेकर टेक्नोलॉजी, एनवायरमेंट से लेकर एनर्जी, हर क्षेत्र में सहयोग के नए अवसरों को साकार करेंगे और साथ मिलकर दोनों देशों की प्रोग्रेस और प्रॉस्पेरिटी सुनिश्चित करेंगे। फ्रेंड्स, भारत और कोरिया का बायलैटरल ट्रेड आज $27 बिलियन तक पहुंच चुका है। 2030 तक इसे $50 बिलियन तक पहुंचाने के लिए हमने आज कई महत्वपूर्ण निर्णय लिए हैं। दोनों देशों के बीच फाइनेंशियल फ्लोस को सुगम बनाने के लिए हमने भारत कोरिया फाइनेंशियल फोरम की शुरुआत की है। बिजनेस सहयोग को बल देने के लिए हमने एक इंडस्ट्रियल कोऑपरेशन कमेटी का गठन किया है। क्रिटिकल टेक्नोलॉजी और सप्लाई चेन में सहयोग बढ़ाने के लिए हम इकोनॉमिक सिक्योरिटी डायलॉग शुरू कर रहे हैं। कोरिया की कंपनीज, खासकर एसएमईज की भारत में एंट्री सहज करने के लिए हम कोरियन इंडस्ट्रियल टाउनशिप भी स्थापित करेंगे और अगले 1 वर्ष के अंदर हम भारत कोरिया ट्रेड एग्रीमेंट को अपग्रेड भी करेंगे। फ्रेंड्स, आज हम अगले दशक की सक्सेस स्टोरीज की नींव रख रहे हैं। एआई, सेमीकंडक्टर और इंफॉर्मेशन टेक्नोलॉजी में साझेदारी और प्रगाढ़ करने के लिए हम इंडिया कोरिया डिजिटल ब्रिज लॉन्च कर रहे हैं। शिप बिल्डिंग, सस्टेनेबिलिटी, स्टील और पोर्ट जैसे क्षेत्रों में हम एमओयू कर रहे हैं। कल्चर और क्रिएटिव इंडस्ट्री में आपसी सहयोग से हम फिल्म, एनिमेशन और गेमिंग में भी नए आयाम स्थापित करेंगे। आज का बिजनेस फोरम इन अवसरों को ठोस परिणामों में बदलने का मंच बनेगा। फ्रेंड, भारत और कोरिया के बीच हजारों वर्ष पुराने सांस्कृतिक संबंध है। 2000 साल पहले अयोध्या की राजकुमारी सूरीरत्ना और कोरिया के राजा किम सुरो की कहानी हमारी साझा विरासत है। आज भारत में के पॉप, के ड्रामा बहुत ही पॉपुलर हो रहे हैं। उसी तरह कोरिया में भी भारतीय सिनेमा और संस्कृति की पहचान बढ़ रही है। हमें बहुत खुशी है कि प्रेसिडेंट ली खुद भारतीय सिनेमा के प्रशंसक है। इस कल्चरल कनेक्ट को मजबूत करने के लिए हम 2028 में भारत कोरिया फ्रेंडशिप फेस्टिवल आयोजित करेंगे। इसके साथ साथ पीपल टू पीपल कांटेक्ट मजबूत करने के लिए हम एजुकेशन, रिसर्च सहयोग और टूरिज्म को भी बढ़ावा देंगे। फ्रेंड्स, वैश्विक तनाव के इस दौर में भारत और कोरिया मिलकर शांति और स्थिरता का संदेश देते हैं। हमें बहुत खुशी है कि आज कोरिया इंटरनेशनल सोलर अलायंस और इंडो पैसिफिक ओशंस इनिशिएटिव से जुड़ रहा है। हम अपने साझा प्रयासों से एक पीसफुल, प्रोग्रेसिव और इंक्लूसिव इंडो पैसिफिक के लिए योगदान देते रहेंगे। हम इस बात पर भी सहमत है कि वैश्विक चुनौतियों के समाधान के लिए ग्लोबल इंस्टीट्यूशंस में सुधार आवश्यक है। योर एक्सेलेंसी, लगभग 100 वर्ष पहले भारत के महान कवि गुरुदेव रविंद्रनाथ टैगोर ने कोरिया को लैम्प ऑफ द ईस्ट कहा था और आज विकसित भारत 2047 के हमारे संकल्प को साकार करने के लिए कोरिया एक महत्वपूर्ण साझेदार है। आइए हम अपनी पार्टनरशिप से दोनों देशों के साथ साथ पूरे विश्व की प्रगति और समृद्धि का रास्ता बनाएं। बहुत बहुत धन्यवाद। खमसा हमनिदा।
Thank you. Well, moving on to our next small cap stock. In fact, couple of them that we'll be discussing today. EMS and the other one is Sterling and Wilson. Both the companies have announced big order wins, big stock moves coming in. Let's get in part with more details on why, what are these orders that Sterling and Wilson and EMS have won today.
Thanks a lot, Somit. So you're right, there are two companies that are buzzing on the back of order win, and the first one is Sterling and Wilson, which is a pure play renewable EPC solutions provider with a presence in over 28 countries across the globe. Now the reason why the stock is in focus today is because they have been declared the L1 bidder for a big Coal India EPC project that is worth around 3,500 crores. The company also received an AC project order in Maharashtra, which was worth around 60 crores. And with these couple of orders, the total EPC order inflow of the company in FY26 has crossed above 10,000 crores. This is the main reason why the stock has gained over 15% today. In fact, in the last 1 month, the stock has gained over 30%. But in the last 1 year, the stock is still down 20%, showing the underperformance that is still continuing in the longer term. The second company is EMS, which also provides EPC services, but they specialize in water and wastewater solutions. Now the company has received two big orders from UP Jal Nigam in Varanasi. The first order that they have won is worth 143 crores, which is executable in the next 2 years, and the second order which they have won is worth 64 crores, which is executable in the next 18 months. This is the main reason why the stock has gained 10% today. In the last 1 month, the stock is up around 35%, but still same in the last 1 year, the stock has lost over 40% of its value. So two big order wins coming in today.
Gaurang, any view on Sterling and Wilson and EMS?
Also, we are positive on the sector, Somit. Unfortunately, we don't have coverage on Sterling and Wilson and EMS, so I won't be able to give specifics, but both of them have a decent balance sheet and the business outlook is quite strong.
Right, got that view. Well, onto the EMS, which is a water EPC company. Gaurang, just wanted to understand, because of this, all the Jal Jeevan, the companies who have faced issues, but now Jal Jeevan 2.0 coming into picture. Which are some of those EPC companies that you would, want to explore, considering the Jal Jeevan mission is back 2.0?
So, Varsha, I would link this not only to water treatment or affluent treatment kind of sectors, but also complementing that will be pipes and fittings, because Jal Jeevan 2.0 is now, but before that, Varsha, the government has spoken about Har Ghar Mein Jal or Har Nal Se Jal. So we have positive coverage on a company called Vatek Vabag, however you want to pronounce it. In the ancillary theme that I was talking about, pipes and fittings, Astra Limited is the other stock, because when you are talking about Har Nal Mein Jal or Har Ghar Mein Jal or Har Nal Se Jal, then I think this complements. As a disclosure, Varsha, on Astral Limited, we have given recommendation this morning itself for investment from a long-term point of view. And my sense is that then related companies, companies which are into submersible pumps or above surface pumps for irrigation, for enabling transportation of water to reach to the farthest house in a particular locality.
Right.
And more importantly, I think all those companies which are into creating water storage also.
Right. Got that view. Well, thank you so much, Gaurang, for joining us and having a conversation with us. Always pleasure to have you. Thank you. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Thank you so much for watching. Stay tuned to NDTV Profit.
KP Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me as always is Puneet Zaveri. And Puneet, as far as the markets go, I think we've come off from the day's high points for the benchmarks. So not much of a movement there, but right now for the Nifty 50, we're above the 24,395 odd levels. So we've come down when it comes to the 24,400 levels is what we've seen. But right now trading around a 0.16% higher for the benchmarks. Let's try to put up the heat map and see as to what's changed in the past half an hour, right? When we talk about some specific names, you have Trent now, which is topping the chart, up 3.5%. At the start today, it was not expected to see these gains coming in, but I think the entire fundraise bonus issue announcement coming in, has turned out to be positive. You have SBI, Asian Paints, NTPC as well as Adani Enterprises seeing good gains coming in, as well as JSW Steel. From the flip side, on the back of earnings, Jio Finance is taking a hit, down 2%. Hindalco seeing profit booking, L&T as well as Tata Motors, PV and Kotak Mahindra Bank, Titan seeing that downtick of around 1 to 2% each. Let's try to pull up the sectoral heat map and see as to how sectors are faring in trade right now. You have your Nifty Energy, which is seeing the highest gains, up 1%, followed by PSU banks and oil and gas. But Nifty IT today is the top loser out there, but not losing grounds to that extent, just down by about 0.6 odd %, followed by Nifty Realty, which is also down by 0.6 odd %. Let's quickly pull up the advanced decline ratio and see as to how that is looking like. The chart when we were doing 10:30, the morning edition of Fast Profit, we were seeing a crisscross movement, and right now also it's the same. Tides have turned at least thrice or four times during day to day, and right now you have more declines, almost 1500 odd declines versus that of 900 odd advances. So clearly the broad end of spectrum is right now in the favor of the bears, slightly in the favor of the bears.
In the last
Let's
hour
put it
also,
that way.
because we've seen a crisscross happen, but then since then selling happening, so almost 200 to 300 stocks more have actually declined in the last 3 to 4 hours, and that's visible on the screen right now as well. But also the mid cap and the small cap, very quickly before we start taking all your stock related queries for today. Mid cap slipped in red now. While very barely, it has, and so has the small cap 250 as well, down 0.3%. But the BSE 500 talks about the individual movers in trade today gaining. Prevailing turbine, SW Solar continues to be up in trade today, so is graphite and CESC. Apart from that though, IEX taken a tumble down, both down 5% in the morning, is now down 7.4% as we speak. So is Cohance, Chemplast, Sanmar, as well as Tata Tele and Mastek on the back of Q3 results. But let me welcome in Lancelot Dikuna. He's the CIO Value X Wealth Connect at this time of the show. Well, Lancelot, good afternoon. Thanks so much for joining in today. Let me go across, pose the first query to you. This one's coming in on HEG from Sri Kumar from Hyderabad. He's holding shares at roughly around 655 rupees per share and holding 300 shares. Should he still continue to hold, Lancelot, according to you?
So, HEG has had a very good run over the last year or so, Puneet. And if you look at it, it's currently trading about 32 times, earnings, despite the fall in the market price for the last, from its peak. So it does still look expensive. And if you look at the various, tracking parameters, its return on equity is very low. It's just 2.59%. And so margins are also low. While yes, it has seen good profit growth and sales growth. It's a low margin business and requires huge investment. So I think it's better to book profits at this point in time and wait for a correction in price to look at re-entering it for a longer term perspective.
Okay. The next one is coming in from Dr. Piyush Patel, who's asking about Container Corp. He's bought 107 shares at the levels of 686. Says he's sitting on a loss of around 19,000 rupees. Wants to know whether he can continue to hold or what should he do. Akshay, I'll come to you on this one. Okay, I think Akshay is still not with us, but Lancelot, then I'll stick with you for this one as well. Container Corp, what's the view like?
So, even if you look at Container Corp, business has been growing, but it's a commodity business. At the end of the day, they are trading in, containers and transportation of goods through containers, especially on the rail freight segment side. So that is a good business margin, good this thing, but it's a low margin business. The company has been generating almost 10 return of equity about 10 times. And sales growth has been also muted over the last year, and profit growth has been actually also flat. So given that the stock is trading at 30 times, I think it's a bit expensive and one should look at, booking profits or exiting for the time being.
Exiting for the time being could be something that Lancelot is recommending on Concor. But taking the next query on Geo Financial, now our viewer has bought almost 35,000 shares of the counter, and this is Vijay Pratap Singh, at 246. Now he is telling us, Lancelot, that he can hold for the next 2 to 3 years. Would you advise that? What do you make of the Q4 numbers?
I think the Q4 numbers were encouraging, although profits were a little bit flat. I mean, they did make a profit of 339 crores as compared to previous quarter of 371 crores. And if you look at it from a valuation perspective, the stock is trading at almost 100 times its earnings. So it is rather expensive, and maybe going forward, if you see a couple of negative or slow growth quarters, then that could lead to a re-rating in the stock. So I think one should probably book profits if you can, and wait for price to correct. At that time, one should be able to get in at a reasonable valuation.
Okay, all right. So that's the view coming in on Geo Financial. The next one is on BHEL. This is a viewer query that's coming in from Satyen, and he's asking about this counter, wants to know whether he can sell or buy at the current levels. His purchase price is 53 rupees. So he's bought at attractive levels for sure. Lancelot, your view on BHEL?
BHEL is trading in 140 times earnings. It has risen in line with, most of the stocks which were engaged in defense space and has got a significant amount of traction based on the fact that it's one of the companies providing defense services as well as heavy engineering. But when you look at a company which is trading at 140 times earnings, I think you're paying a lot more for growth than possibly you can see in the near term. So given that risk reward ratio is a little bit on the higher side, one should avoid, or if he has already bought it at 53 rupees, I think some amount of profit booking is warranted at these levels.
Profit booking warranted at these levels. Now it's very interesting for BHEL also, why there has been a 19% drop in order inflows. I think estimates from analysts were of revenue growth, essentially what they've reported in the provisional update of 32,000 crores is not as bad as expected, and hence stocks up 3.5% and has continued to maintain so as well. So that could be something to watch on BHEL. But let's go across, take the next caller from Delhi. And Gary is now joining us for a stock-related query for the first time, I've been told. Gary, good morning, good afternoon. Welcome to Ask Profit. What's your query?
Hi, good afternoon to everyone over there.
Good afternoon, Gary. Go ahead.
I just wanted to check. I'm holding 5,000 shares of SCILAL, that is Shipping Corporation of India, Land and Assets, at 65 rupees. So shall I hold it? Shall I accumulate more, or shall I just book the losses?
Got it. And how long have you been holding on to these counter, Gary?
About a year.
About a year. Okay, so probably
it's Shipping Corporation of India, Land and Assets.
Land and Assets.
Yeah.
Yeah, got it.
So now you got the right one.
Got it. So it's land assets particularly. Got your view. Let me actually go to Lancelot then. Lancelot, what would you recommend on the land assets company of Shipping Corporation? Because it's become largely an annuity business, right? In that sense, what would be your recommendation to Gary?
So, the Shipping Corporation Land and Assets was formed as a subsidiary with the object of holding and disposing of the non-core assets of Shipping Corporation. And currently the stock has a book value of 64 rupees while it's trading below its book value. But the entire upside is possible only when there is a liquidation of those assets. Otherwise, till that time, the company is not going to earn any significant profits. Neither are you going to see any significant growth in revenues. And if one is tracking it and you see that whenever, the disposing of the assets comes up and then returns get passed on to the investors or shareholders, that's when this company really will move. Otherwise, till that time, it's trading below its book value. So from a value perspective, it's very low. But when this is likely to happen is still not clear, from the company as well as the government as to when they will dispose of, because they will have to go through various processes in terms of disposition and whether they will get the best prices. I think these are all question marks that are weighing on the stock at the moment. So it maybe you can wait for another 6 months if that's possible, or a year. Give it some time. If an event does take place, you will see a spike in the price. That could be the time to exit. Otherwise, it may be just worthwhile exiting.
Okay, all right. So that's the view coming in. And this side of the show, we're also joined by Akshay P. Bhagwat. Akshay, the next query is coming in on BSC. A very good afternoon to you, first of all. And this is from Kameshwara Rao, who wants to know whether is it advisable to purchase BSC at the current levels? Would you go ahead and do that?
Yeah. First of all, good afternoon to all. See, at the current levels, from a short-term perspective, the stock is a bit overbought on the technical price charts. There is a good chance you might have a slight short-term cool-off in the stock. So I would suggest wait for a cool-off till 3350 to 3400 zone. That's a slight dip of 50 to 70 rupees from current market price before you commit on the buy side.
Got that view. Also on, let's take the next question now. This one's coming in from Chandra from Hyderabad. He's holding shares of Tarrell, bought at 260. That's Transformers and Rectifier Limited. He's holding 500 shares, so he is in the profit. asking what he should continue to hold it for the long term. Lancelot, we've seen the challenges over the last couple of quarters. What would be your view now on this counter?
I think this counter is also trading at an expensive valuation. While there could be good growth in the business going forward, there are a lot of downside risks to this company as well. So given that background, maybe worthwhile at this point in time to take some profits off the table and stay out, and maybe when the stock corrects, you can re-enter.
Okay, so that's the view coming in on Trail. The next one is from, do we have the name of this? I think it's BB Gupta. He's asking about SBI. He's purchased 2,000 shares at an average price of 265. Wants to know as to for how long can he continue to hold this. He's sitting on significant profits for sure. Lancelot, I'll stick with you for this one. Your view on SBI, whether they should continue to hold, book partial profits?
So I think SBI is trading at about 1.7 times its book value. And if you look at the business of the bank, it has transformed itself into a mainly digital banking company. And you are seeing significant growth coming in from the digital space as far as SBI is concerned. This has helped improve its various operating parameters, like cost to income ratio has declined and it's reducing. And going forward with the extent of reach that it has in rural areas, you will see significant growth also coming ahead in the near future. So I think one should just hold on to it. It's still not expensive when compared to the private sector banks. It's still trading at lower than that valuation. So one should look at holding on to the stock.
Got the view, Lancelot. The next question coming from Shankar from Bangalore. He wants a view on TVS supply chains, bought at 101. And holding 500 shares. Now, Akshay's question largely being if he should continue to hold this counter at this point of time.
Yeah, so if you look at the volume action, I think in the last 3 weeks, there has been a burst of volumes, significant volumes than the normal, and that is seen around the levels of 100. The trend is down, but the stock is attempting a support and a recovery kind of a scenario. That's what is evident on the charts. So the suggestion is 90 is the support. Continue to hold. There is a very good chance that the pullback rally can extend till 145.
The next one is on KSB Pump. This is from Rajesh Maheshwari, who's writing us from Indore. He's got 100 shares of this counter bought at the levels of 768. Wants to know from a short-term perspective, can he stay invested or exit at the current levels? Akshay, your view on this one?
Yeah. Can you please repeat the name of the stock?
KSB Pump is the counter that we're talking about here, and his buying average price is 768.
So for the stock KSB Pumps, I think the overall technical structure is more neutral. And looking at the structure, I would suggest that for short term, it's still a hold. Try to book around targets of 1025 to 1040 on the upside.
Got the view, Akshay. The next one coming in on Sign Life Sciences, and KP has written to us, Kumar has written to us from Hyderabad asking if it's a good buy for the long term. Lancelot, would you agree with him on this point?
So, Sai Life Sciences is an integrated contract research development manufacturing company, and that is seeing a lot of competition. And there's also a threat of, AI-based solutions entering that space and disrupting that space. So if you look at the stock, it's trading at almost 60 times its earnings. And given that, this particular threat is appearing as in terms of disruption, I think it's always risky to buy a stock at a high multiple. So better to wait out and probably either, if you're already holding, look at exiting at this point in time. Or if you want to buy, then wait for some serious correction to buy.
Okay, all right. So that's the view coming in on Sai Life Sciences. The next one is coming in on IEX. Our viewer, do we have the name of this one? Okay, we don't have the name, but our viewer wants to know a long-term view on this one. The person is holding 1,000 shares, bought at the levels of 139. Wants to know if he's going to lose more money or not is what he's asking. Lancelot, I'll stick with you for this one as well. With the market coupling coming in, we've seen a downtick in this counter a lot today. Overall, what's the view like on IEX?
So, market coupling is definitely going to have an impact on the business volumes of IEX, because at the moment, almost 85% of the volumes in the power trading market are traded on IEX stock. with the power coupling being notified and with the norms being announced, once it becomes a reality, volumes will drop, and probably a fair price or a fair value for IEX post the distribution of volumes could be in the region of 90-95 rupees. So it may be worthwhile to exit at this point in time and wait. Either it comes below 95, then one can look at buying the stock, or if there's a change in the norms and they decide to defer it, then one can look at it.
Got it, Lancelot. But viewers as well as Akshay and Lancelot, time now for the rapid fire round in this edition of Ask Profit. You both know the drill. Keep your answers as short as possible. The first one coming in on BHEL. Soumya from Bangalore is holding shares at 456. Akshay asking for a short-term target on this counter. What would you recommend? Should he continue to hold?
Hold. 450 is the support. 480 to 490 is the possible target zone.
Okay, Inox Wind is the next one. I think Hajpir wants to know about this counter and wants to know the target price for this one. Akshay, your view on the charts?
So I think it's better to book around 100 to 105 zone on the short-term scenario.
Next question coming in on Asian Paints, bought at roughly 2930 per share. Now we've seen a second round of price hikes, Lancelot, announced this morning. What would you recommend on the stock now?
Well, I think one can average out a little bit at this level as well.
Okay, Kane's Tech is the other one. Suresh from Kerala wants to know whether he can continue to hold from a long-term perspective and maybe average at the current levels. His buying price is 5,600. Lancelot, your view?
So you can definitely hold and maybe wait for a decline in order to average.
Okay.
Narasimhan is holding Sirma SGS at 850. Akshay, he's holding 45 shares. What would be your view on the stock now? Should he still continue to hold?
Yeah, continue to hold. 940 is the short-term support. 1040, 1075. This is the target zone you can look forward to.
Okay, what's the future outlook for Exide Industries? Gopinath from Nellore wants to know. He's got 100 shares at the levels of 564. Lancelot, your view?
He can hold on to the stock.
Rajiv is asking us on Translail Lighting, a 6-month view, Akshay. What should he do with this counter? He's a senior citizen.
I think for 6-month view, you can continue to hold for targets of 700. 600 is an important breakout zone.
Okay, the next one is on Orion Pro Solutions. Our viewer Suman from Kolkata wants to know whether it's good to continue to stay invested in this from a 5-year horizon. Her buying price is 886. Lancelot, your view?
I think it's better to exit from this account.
Mr. Rao is asking if it's a good time to take a long-term bet on PFC. Would you recommend that, Lancelot?
Yes, you can look at beginning to accumulate the stock.
HDFC Bank 80 shares bought at the levels of 736. What to do? Atulya from Odisha is asking this. Akshay, your view on the charts?
Short term, it's an exit.
Sudhir from Bangalore is holding Sterling and Wilson at 188. Lancelot asking a 2-year view. Which camp are you on for this counter?
Well, one can hold on to the stock.
Okay, pre-call, 500 shares bought at the levels of 418. Your view on this one, Akshay? Anand from Chandigarh wants to know.
Hold. 630 is a potential target.
JTL Industries bought at 66 rupees by Nageshwar Rao from Hyderabad, asking what he should do with his 3,000 shares. Akshay?
So for JTL Industries, it's a hold for short-term targets till 80.
Hindustan Zinc, can I continue to hold it for further upside? Govinda from Jharkhand wants to know. Although he's not given his buying price, but Akshay, your view on the charts?
Positive view, 2 to 3 months, you can stock and retest 700 on the upside.
Novartis actually bought at 500 in the last 5 years actually by a viewer, Hemendra, and he's asking what he should do with this counter now. Lancelot, any view?
I think you should continue to hold.
Okay, the next one is on NHPC. Our viewer Sanjay has bought 1,000 shares at the levels of 35.5. From a 3-year perspective, can you continue to hold, Lancelot?
Yes.
The next one coming in on Dwarkesh Sugar. Our viewer has bought shares at almost 84 rupees. What would be your view, Lancelot, for the long term?
Sell.
Canterbury Retail, buy or sell? Akshay, any view on the charts?
Canterbury is a buy.
Next question coming in on Hindustan Copper. Our viewer has bought shares at 600 rupees, 2,000 shares. What would be your view, Lancelot, is what Rajendra is asking.
Hold.
Hold, got it. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Akshay as well as Lancelot, thank you so much for helping us solve almost 40 queries in the last half an hour, and With that, we've crossed 100 queries in the morning as well as the afternoon edition. So thanks so much for that to our guests as well as to our viewers for sending across all these queries. But all the time on this edition of the show, India Market Close comes up next.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. And if there's one word to describe the market this Monday, it is range bound. Another would be cautious. And you know why. It's because of all of the back and forth that has taken place over the course of the weekend geopolitically. And that's why you have the benchmark that is trading with gains of just about 0.33% and holding above 24,400. That hasn't always been the case today though. In fact, pull up the intraday chart for the Nifty 50 and you will see that for a brief moment we did slip into the red. We recovered quite sharply and hit a pretty decent point and then dropped, and then now we're actually on the way back up again. If you follow me here, we're actually on the up and up. So let's take a look at the heat map for the Nifty 50 and you will see that those stocks that you anticipated would do incredibly well today are not doing that. It's actually other heroes that are coming to the fore today. Trent is doing particularly well. That is our stock of the day and we'll talk about that in more detail in just a bit. JSW Steel, State Bank of India doing particularly well as well. But what are the stocks that were expected to do well? ICICI Bank after a pretty stellar set of numbers, is up just about 0.9%, and HDFC Bank has made its way back from the low point of the day, but it's still trading with cuts of about 0.1% or so. Reliance Industries up about 0.33% as Tamanna joins me right now. I also want to pull up the sectoral heat map because that is going to tell you what the broader picture is. And there is more green on the screen, but this is despite the fact that the advance decline ratio actually favors the declines at this point. What is working is the PSU banking pack, and you saw State Bank of India doing particularly well, but you have auto that's up about 0.6%, IT underperforming, and the private banking index is not doing too much today. Lastly, just pull up the advance decline ratio because you've seen several changes of hands over the course of the day. The widest point for the advances and declines at this stage early on, when you saw that the market has slipped into the red, and then you've had a crossover multiple times through the day, and we're now widening again.
I think the nervousness is increasing, Alex. That's how I'd watch this screen, because if you look at the India VIX as well, a bit of a spike in the positive, and news-wise, look at that, 8.5% up. News-wise as well, the kind of commentary coming in is not pointing to any clarity on whether there's going to be a meeting between Iran and the United States. So that's a bit of a problem. The strait is pretty much shut. Not clear what's happening there, and that's bothering the markets. Pull up the top gainers and losers before we get to the overview of what you're seeing today. And you would see possibly even volumes not that great. IEX. And we pointed this out for you in detail today. If you had watched our show before markets opened today, we spent some time talking about IEX and how the CERC circular is possibly bad news for this stock. Once again, this decoupling pain point has come back. That's in pain. Mastec, the numbers didn't look that bad actually on the face of it, but Mastec taking a hit. On the winning side, Triveni Turbine, SW Solar, a smattering of companies which are doing okay. But I wouldn't say any thematic standout winners today in trade.
Even graphite, for example, of course, we've been talking about the steel players and the fact that pricing and all of that, and graphite usually is beneficial for those electric arc furnaces and has a play on steel, but really not anything that is thematic.
Nothing which is thematic. I mean, you can find a reason for anything moving up or down if you have to, but here's really the overview, because the market is range bound. 24,350 to 24,450 has been the trading range for the last 4 hours, in fact. Cash market turnover is down 8%. Compared to last trade, which is on Friday. SBI and ICICI Bank are supporting the Nifty and the bank index majorly, though ICICI Bank is also now pulling off. Mid and small caps are seeing some profit booking. Intraday support is seen around 24,250. Other support levels 24,200 and 24,300. A sustained move above 24,400 is crucial, and clearly we are not close to that right now. Move above this could pave the way for 24,800 if we get there. Himain Kapadia joining in this afternoon to speak technicals with us. Himain, always a pleasure to have you on the show. What is the direction you're seeing for the Nifty right now?
A very good afternoon to you, Tamanna. Thank you for having me on the show. It's always a pleasure. Frankly speaking, we are at very strong resistance levels, and we are sitting on top of a 2,200 point rise. Stock specific, lot of action happening. I'm slightly uncomfortable that we're going to make a further upside without a small cool off, retracement, or a consolidation. VIX, like you guys mentioned, VIX has gone up obviously. And 24,400, 24,600, traditionally important resistance levels. And we've been sort of, I wouldn't say struggling, but we've been here for the last 3-4 trading sessions, haven't made much headway. So, and last trading session, if you remove Reliance and HUL from the calculation, I mean, we wouldn't have been so positive. So I would say everything is fine, but market seems to be a bit top heavy. Sells haven't come in yet, so I wouldn't recommend anything to sell yet, but I would be slightly cautious about going fresh longs. I mean, I believe some sort of top formation or at least resistance is just around the corner. Tamanna.
Individual stocks that you're looking at, and good afternoon to you. some of those stocks that you anticipated would react to fundamental news haven't done so. And specifically, I'm talking about ICICI Bank, and that pre-open session that suggested that it would open with gains of 4+% hasn't panned out.
Absolutely. Hi, Alex. So yes, if such good fundamental news does not reflect in the stock price, that means either the stocks are exhausted or it's already built into the price. So, and I believe a little bit of profit taking won't harm anybody, because I mean, like, we're sitting on 2200 points on the Nifty. That's huge. It's the benchmark index. There are a couple of daily gaps also, Alex. It's not just the rise. So normally such gaps don't remain uncovered for too long, at least a near one. I'm not saying the 23,500 one, but so yes, I think what you mentioned is a valid point, that if ICICI Bank didn't do as they were supposed to, maybe the markets are a bit tired. Yeah, that seems to be the case.
Okay, Deven Choksi also joining us this afternoon. Deven Bhai, thank you so much for your time. Do you think there's a bit of nervousness in the markets which are now waiting for direction till something's clear? Is there going to be a talk? Is there not going to be a talk? Are we moving one way or the other? Or this is just a sort of deeper look that everything expected from an ICICI Bank has now been priced in?
Yeah, Tamanna, I think good afternoon. Well, I think the resolution to this particular war-related situation, as I see it, I think is near, but at the same time it is not confirmed. And as a result of which, I think market is remaining slightly more circumspect at this point of time about, I think, various outcomes. Particularly one of the most tricky outcome that one can possibly call it as April to June quarter, which is a new financial year. I think this particular quarter may have its impact on the earnings of the company because of, I think, what has happened in the last month in form of, I think, either the cost or as far as, I think, the selling is concerned. In whichever way you look at it, I think some of the companies are likely to be seeing the impact onto their businesses. And that's where market is slightly more careful, more guarded at this point of time. Maybe if the current rally has to sustain, then in such situation, I think a lot of clarity has to emerge as far as, I think, the outlook is concerned. June-ended quarter results are getting affected. That is what our understanding is. How much degree of it will be, I think, completely affected? Difficult to say, because we are in the first month of the quarter. And that's where probably, I think, one is not very sure about. However, having said that, I think the range in the market is pretty certain. I think it's likely to continue in this range for some time. And maybe, I think, as MNY probably would put it across rightly, I think 24,600, 24,800 on the upper side, and somewhere in the vicinity of around 23,800 to 24,200 could be, I think, the midterm range as we see it at this point of time. But it is largely going to be a trade-bound market as we see it for timing now.
Okay, do stay with us. Let's talk about the stock of the day. And this is something of a hard choice that we had to make today, because there are quite a few newsmakers. Let's go across to Mahima now to talk about Trent. It is the top gainer on the Nifty 50. Let's talk about why, Mahima.
Right, so three different news flows coming in for this one in one exchange filing, right? Because they did announce, they've kind of said in the exchange filing that they might consider bonus issue going forward on 22nd of April, and this will be the first ever bonus that Trent will announce post its listing. The second aspect is that they might announce dividend also going forward once they announce their earnings, and the third one is fundraise. Now this is an important one because what they've said is that company is looking for approval for fundraising additional funds. This could be via equity or rights issue. The last right issue that the company made was in June 2010. Now, just to for viewers' perspective as to how cash balance has been like Trent for the past 3 odd years, from 298 crore in March 24 to 340 odd crore in March 25, which has come down to 194.5 crore in September 25, and this is largely on account of the expansion that they're doing in terms of store addition. So the fundraise that they're doing might be used for one, the expansion of new stores in terms of the expansion for Zudio, Westside as well as Star Bazaar. High discounting due to competition, this might also eat up a lot of their cash And that is one of the reasons that could be, on the cards for fundraise. And lastly, higher inventory as well as higher inventory turnover because of changing landscape of what consumers are right now consuming. So these are the three aspects as to why they could be considering fundraising. In terms of guidance, the company has maintained the guidance of 20 to 25% of growth. And management commentary is that they are expecting demand to pick up in the medium term. Now, with regards to where valuations go, we've discussed this earlier as well, that valuations right now are below the 5-year average for Trent. The 5-year average stands at 131 and current PE at 81 times, and 1 year forward even lower at 73 times. But still, 73 times PE is not cheaper when it comes to valuation perspective. And lastly, with regards to where Bloomberg analyst take stands, there are still 19 buy calls, 5 hold calls, and 3 sell calls with a return potential of 22%. So this is the overall view of what's happening with Trent and why it's buzzing in trade today.
All right, interesting. Thanks so much for that, Mahima. Devin bhai, good afternoon first of all. And we had one commentator today talk about the fact that your FANG stocks are on a valuation metric available at cheaper than Trent. And so why would you buy Trent at this point? And there are several tailwinds, no doubt about that. But the valuations in this market are looking challenging.
Yeah, Alex, good afternoon. Well, I would be one among those, I think, who says that the particular valuation is expensive. I would like to say, yes, I think it's expensive. It's never been cheap. I also understand that part of it. But at the same time, I think buying anything expensive, you only reduce your margin of safety. Whether I would like to compare them with any other stocks in the universe, I would probably say no. Because India market, in a way, is a unique proposition. We have limited amount of supply available as far as I think such kind of companies are concerned, which are probably trying to create the size eventually, I think, which is larger and global size. Trend being one of them, Reliance Retail could be another one. So from that perspective, I think one would like to remain invested, and that justifies partly to the higher valuation for this kind of businesses. However, I think the market correction is the best time for buying such kind of expensive stocks, because at least you have 15-20% kind of a downside risk protected when they correct. Recently, Trent, I think, protected or gave that opportunity, and that is where probably I think those who bought, I think they protected the downside. In my viewpoint, not in a hurry at all, I think, to buy. Maybe I think some corrective downside, and that would be a better time to add into the portfolio.
Speaking of opportunities, I think a lot of people are now looking very strongly at private sector banks. If I look at mutual fund positioning as well, Devin bhai, a lot of storied fund managers have overweight positions in the large private sector banks, ICICI Bank being one of them. Now, specifically on this, a 2.4% return on asset, an improvement in asset quality for what was already a good franchise, a rock-solid net interest margin, possibly the highest for a bank of its size and stature, and a 15% loan growth, which is faster than the trajectory that they have shown. Why is the stock reacting the way it is done today? Is it already in the price? A lot of arguments have been made that it is not, and it's cheap right now.
To me, it is cheap. And I feel that I think they deserve to be re-rated. I think both HDFC as well as ICICI to begin with. I think both of them are very strong franchises. They are actually having a distributed loan portfolio across retail, corporates, prime sectors, and the infrastructure sector. I think a very well-balanced distributed portfolio. So from a downside perspective, I think they have taken care of through design in form of, I think, giving the advantage to the investors. Second most important aspect, on a 10% GDP growth, we are having around 16% kind of a loan book growth, where I think the likes of ICICI stands taller compared to the HDFC. HDFC is marginally lower compared to ICICI in the last quarter result as far as I think the loan growth is concerned. However, having said that, I think both these banks have corrected and probably have got the valuation to their advantage. In my viewpoint, I think this valuation advantage should be seized, and one should be probably looking at investment from a perspective a little longer term. If banks like HDFC, if they indeed adapt to the fintech at the front end, quite possible that I think they would probably grow faster compared to the peers in the same space. And that's where probably I think likes of Bajaj Finance could possibly be talked about. That I think it is one NBFC size of a bank itself, which is actually growing faster compared to the industry players, largely because of the use of the fintech on the AI at in the area of, I think, processing loan or in the area of acquiring customers, whichever you look at it. So if that kind of situation emerges for banks like NDFC and ICICI, probably I think you will see re-rating, and that's where I like this company. Downside risk in these stocks is probably, I think, list at this point of time. Any corrective fall, I think, would be a good buy opportunity from a perspective of holding the stock for 2 to 3 years.
Okay, so ICICI Bank fizzled out to some extent. HDFC Bank we spoke about. What did you make, Devin Bhai, of Yes Bank and Geo Financials, the other two that reported yesterday actually?
So good part of Yes Bank is that I think it is coming back onto the track. I think having seen the worst in its lifetime, probably I think that's a good part of it. And I think now the stronger partner, Japanese partner, is basically driving as far as I think this business is concerned. So it's a good thing to observe. Geo Finance, definitely, I think a model which one should be looking at. The credit business is got slightly impacted this year, this quarter, for a reason that they had to basically absorb the losses which basically Payment Bank brought in, the stake that they bought out, I think. So that part of the loss, I think they have actually provided for. And that's where I think you're seeing slightly dent in the margin also and the profit also. Along with, I think, the business built-up cost, I think, which they have acquired, which can be considered as one of kind of cost, I think, as far as the credit business is concerned. The other two businesses, the one which is asset management business, they started with low-cost products like ETF and index funds. And that's where probably I think they're right now building the book. And that's where you are not seeing the revenue contribution coming in from that side. But having got that, I think the large size book is being built here. And that's where probably I think you will see the valuation advantage favoring them at some point of time. Insurance business, I think, is yet to see many other things coming up, and also the distribution business in form of wealth product. But overall, if one has to look at, I think, this bank or the NBFC, as we want to call it, which is a CIC company, I would think that I think the horizon should be not less than 5 years, because that is where probably they build the business. Reliance is known for building the businesses of long tenure. And that's where we believe that I think any correction in the price could be a good opportunity to accumulate further into this stock.
So we're going to do a couple of reports. One, we'll talk a bit about why JFS, has seen this kind of a stock impact today, but also an analysis we've put together on how HDFC Bank and ICICI Bank's results stack up. Take a look.
Absolutely, Hiral. We have actually compiled and jotted down all the key metrics for the Q4 results for India's top 2 private banks. We can see that if we can move ahead, we can see that ICICI Bank's overall advances jumped quite high by 16% to 15.53 lakh crore rupees. HDFC Bank has maintained a cautious stance of growing their advances on a slower pace than the industry, at least in FY26. The loans jumped around 12% to 29.60 lakh crore. Q4 is the busiest quarter for banks. In terms of deposit growth also, if we see, HDFC Bank has continued to report higher deposit growth than credit of 14% YOY growth, around 31.05 lakh crore, whereas ICICI Bank's deposits grew 11% in Q4. We can see the net interest income. ICICI Bank has done well on this front. The NII has grown 8%, and HDFC Bank's NII has grown by just 3% in the reporting quarter. We can see the margin-wise, both the banks are more or less have posted decent gains. ICICI Bank's NIM was up 3% quarter-on-quarter, and HDFC Bank's NIM also was up 3% Q-on-Q. Moving on, we can see that HDFC Bank has posted a net profit of 19,221 crore, 9% rise YOY. Same goes with ICICI. The PAT is again up 9% to 13,702 crore rupees. And in terms of return on asset as well, HDFC's ROA stands at 1.96%, whereas ICICI Bank's ROA stands at 2.4%. Credit cost, ICICI Bank does not give specific figures, but HDFC Bank's credit cost actually has come down by a large degree of 20 basis point quarter on quarter to 0.35% in Q4. In terms of asset quality, both the banks have reported a fall in their GNPA ratio. ICICI Bank's Q4 GNPA ratio stood at 1.4%, down 13 basis point Q on Q, while HDFC Bank's GNPA also was down around 10 to 12 basis points. Yeah, around 10 basis points. In terms of net NPA ratio, ICICI's NNPA ratio is down 4 bips quarter on quarter, and HDFC Bank's net NPA ratio is also down by 4 basis points in Q4.
All right, so that's the comparative view, the head-to-head between HDFC Bank and ICICI Bank. They remain almost consensus buys for the entire brokerage community. But let's talk about Jio Financial Services as well, a stock that we asked Deven Bhai about just a short while back. Remains under pressure after what was a weak Q4 result. Shivam here to tell you about what is not working. Shivam?
So yes, Jio Financial have posted their Q4 FY26 results, and starting with the revenue from operations, it has increased by more than 2 times to 1019 crores. The total income of the company has also grown up by nearly 2 times to 1020 crores. The net interest income has also seen a growth of 28% on a YOY basis and currently stands at 344 crores. However, if we look at the finance cost, it has also seen a growth of 40% on quarter-on-quarter basis and also 37 times on YOY basis, and currently it stands at 298 crores. Also, we have seen a decline in the operating profit pre-provision, which is currently to 327 crores. Now, as a result of all this, the profit after tax has declined by 14% on YOY basis to 272 crores. Now, let's take a look at the key reasons what went wrong in Jio Financial's result. So, first one is the weaker earnings for Q4 FY26, in which the net interest income, operating profit, all of them have seen a decline, and this was mainly due to the OPEX which increased 5 times on YOY basis. Second was the share of income from the non-core activities, which still constitutes around 46% of consolidated total net income. And next is the profit degrowth from the increase in operational expenses, and operational profit has also declined as the Jio Payment Business Limited's operational loss has been considered in under the pre-provision operating profit in this quarter. And lastly, elevated yields due to geopolitical tension has also aided in the growth in the cost of borrowings.
Okay, thank you for that, Shivam. And putting that into perspective. But the other one in focus is, of course, Grow. Billion Brains Garage has seen a robust uptick in active users, leading to steady Q4 results. The numbers out a short while ago. Clearly some profit booking post those results as well. Sharad, what was the quarterly performance like, and how do you explain the street reaction that we've seen as well? A bit of profit booking there.
Well, Tamanna, initially, optically, the numbers look strong. When you talk about the EBITDA, total income, net profit, all of them going up on a sequential basis, more than 20% plus. But looking at the operational numbers on a year-on-year basis, it looks good. But there is some devil in the details. The first thing is definitely going to be a profit booking coming in. The growth rates which were there earlier, which used to be 35-40% plus, that has actually moderated. And that becomes a concern for the stock as well. Now, of course, there is a loss of market share coming in 2 categories. One is the retail average daily turnover and the equity derivatives. Both of them have seen a sequential downtick in their market share. And interestingly, the former MD of Peak 15 Partners, Ashish Agarwal, has also stepped down from Grow. Remember, Peak 15 Partners is having 17% stake in the company, and overall the market share for the mutual fund and the total transacting users are still on the positive side, but definitely the street is not giving a strong thumbs up.
I'm glad that you found the devil, which means that you were looking through the details, Sharad. Deven Bhai, what did you make of the inputs that have just been provided by Sharad, and what's the view on Grow?
So maybe I think little early to, call this company as a major growth provider from a perspective that they already have at the back, some of the smart numbers that they have produced so far. Now, whether they can sustain on this growth number is an extremely important challenge. Industry dynamics are changing too at the same time. And having got listed, probably the next responsibility would be to continuously show a relatively better performance on a steadier path, which is something which market will be probably expecting from this company, which is currently being missing. So in my viewpoint, I think as normally they say that I think 4 to 6 quarters is the time in which I think the company will have to consistently deliver on whatever the guidance and the expectations are. On that, if they continuously deliver, then probably I think they deserve to be looked into relatively better. At this point of time, I think everything is in price. Probably investor will have to wait for it, I think, to come down. Then one can probably make money out of it. At this point of time, we are not very comfortable buying the valuations around.
All right. It did actually report, and this is something that came through before the results. It did report that it had increased its share when a lot of companies did lose active clients during the month. Let's go across now to Somit Sarkar, who's joining in as he normally does at this time to tell you what he's hearing from the dealing rooms in Heard on the Street. Somit, it's been a range-bound session. I think this is par for the course because of what we saw over the weekend. But what are the individual counters that you're hearing about?
Well, in individual counters, firstly, it's Adani Enterprise that remains in focus. Now, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter. Even if you look at the chart for Adani Enterprises from days low, the stock has recovered very nicely in trade. And this is largely coming in from because of the buy flows on both FI and the DII desk. For Asian Paints, there are buy flows on the PMS desk. Dealers indicate strong volume growth numbers that could come in from this counter in the fourth quarter. And do remember that the company has taken a couple of price hikes for the first quarter of FY26. So Q4 is expected to be good, and commentary would be important to track given the fact that the company has taken price hike. For Gokul Agro, there are buy flows on the large HNI desk. Dealers indicate that a prominent HNI has been accumulating this counter in trade today from long-term perspective. And when it comes to PI Industries, there are sell flows on institutional desk. Weak Q4 expected owing to the geopolitical issues. And on the flip side, there is Tata Elxsi, where there are buy flows on the large HNI desk because it is expecting that the fourth quarter numbers would be better compared to what the street has been anticipating on the margin front specifically. So Tata Elxsi will be also important to track. The company will be reporting its numbers tomorrow.
Okay, thank you for that, and of course standard disclaimers there on your screen as well. I just want to go to what's on the ticker right now. Iran reviewing US proposal delivered via Pakistan as per reports coming in. You know, my problem with these updates that they just don't mean anything. It's like ether. It's one post and then another post and another post. I just wonder if markets are going to, beyond a point, just start ignoring all of these points till you don't see anything concrete.
So I think you're bang on, I think, there, because when it comes to posts on social media in particular, already a lot of people are starting to look through that and look for the news item in that as much as you can try to find it. And as we've realized over the course of the last 50 days or so, there is a lot of saber rattling on both sides. And so what ultimately happens is what's most important. Remember, between Friday and Sunday, there were at least three U-turns that took place. So we don't know what has taken place. Let's go across to CA Rudramurthy, who's joining in right now, founder director of Vachana Investments, just to find out whether there are U-turns expected in the market as well. It's been range-bound trade today. What are the technical indicators telling you about how we're ending up in today's session?
Alex, good afternoon, and let me tell you, structurally market has definitely changed into buy on dip market, and I fully agree with Tamanna. Like, markets are completely now ignoring any news whatsoever coming from the war front, but technically there are few points which are very important. If you specifically see the move from 22,200 to current levels of 24,400, Nifty has gone up around 2,250 points from the low. So in fact, I was very, very bullish. Even in your channel, 2-3 times I've come and told this is a buy on dip market. But if you want to enter fresh here, there is no good risk reward for a long trade here. I'm very clear this is not a market to short. But also I'm very clear, if you have a long position, which is a trading position, yes, hold on. Or else if you want to take a fresh entry, kindly wait, pray for Trump to give some negative news, and then market coming down to those levels of 24,000 or 23,800 on Nifty, that will be a great level to buy. So I don't want to take a position on a trading front overall in general at around 24,400, which is a resistance zone, and also on Bank Nifty, the zone, if you see, it is at around 57,100. Let me be very clear, I am bullish on this market. This market is a buy on dip market, but however, entering fresh at the resistance zone here may not be good. Wait for some negative opportunity and negative news flow. And if you get a dip levels to closer to the 24,000 to 23,800 on Nifty and Bank Nifty around 55,000, that will be a great entry point. But however, you have very sector specific and stock specific opportunity which you can take even here. And if you are longer term horizon kind of an investor, look at stocks like Asian Paint, ICICI Bank, which came out with good results. L&T looks very good to me. So these are all stocks which you can definitely buy at current market price and on dips, and specifically themes like energy and power, and even for that matter, stocks specifically from PSU basket. So you have to pick and choose a lot of stocks if you want to buy it here.
Of course. Okay, stay on with us, Rudra. Just want to thank Devin Bhai here for joining us on this leg of the show. We're getting a very interesting conversation going. JM Financial has come out with a report on how the Middle East crisis is set to impact infra companies. Case in point being Larsen and Toubro, due to higher raw material prices and cost inflation. In fact, 37% of L&T's 7.3 lakh crore order book could be exposed to the Middle East. As per this report, if the conflict continues, raw material, logistics and cost inflation will be the key headwinds. We're going to talk about much more than just L&T, but with that in focus, welcoming Priyankar Biswas, Industrials and Logistics Research Analyst at JM Financial, to our conversation this afternoon. Priyankar, very good afternoon to you. Let's start with whether, because there are two schools of thought. One of them is that maybe the impact or the extent of impact on a Larsen and Toubro, for example, has been overestimated. Do you agree, or do you think that the extent of the damage has not yet come to the surface?
So our viewpoint is that while in the near term you will have the impacts, especially of the cost inflations, we have also put this thing into perspective that in the longer term, the order inflows can actually go up materially. So for instance, we had given out that because L&T behaves almost like a local contractor in the Middle East, so the Middle East opportunity is north of around USD 3 trillion over the next few years. And considering that there may be capex on reconstruction and resilience, that is building of alternate infrastructure to, let's say, bypass the Strait of Hormuz particularly, we think in the long term, L&T actually should report better order inflows, and that we think should reflect in the multiples going forward.
So specifically, and good afternoon to you, Priyankar, there is also this view that once things settle and eventually, obviously, or rather hopefully, there's going to be a resolution of this conflict. Considering that already about 37 to 40% of the order book is exposed to that region for Larsen and Toubro, does it provide opportunities in a rebuild phase? The only question mark here is about the extent of damage, which some have pointed out is not as extensive as might have earlier been thought.
Yes, so we had actually put out two reports on that. So in the initial phase of the conflict and more recently about the Larsen report that you were specifying to. In the initial phases, the damages were actually quite minimal. So the reconstruction cost would not be that high per se. But right now, what you see is like, let's say, damages to oil tankages at Fujairah, then this Qatar LNG damage. So these things would be be repaired on an emergency basis and can be meaningful as well. So because the conflict, of course, is evolving, so the extent of damage is also evolving. But then besides the repair, there is, of course, the new thrust is building on resilience, so infrastructure resilience. So maybe a couple of days back, if you are aware that a design contract has also been given, not to L&T, but by the Saudi Arabian government for a land bridge system. So essentially to bypass the Strait of Hormuz. Now, if this is finally approved, let's say that sort of a project, then probably you will have a lot more, let's say, in the contracting going forward than would have happened in a more normalized scenario.
Priyanka, just to widen that ambit from the perspective, so that there are two kinds of impacts, right, that you're broadly looking at, as I understand, and please add more detail and perspective to this, please. One is companies who have business in these GCC countries that are right now either going to get delayed or on hold, and the other is the raw material input inflation, which is taking place because of the blockade of the Strait of Hormuz. In the latter case, which are the most vulnerable companies among the listed players you see?
So yes, since you will have, let's say, significant commodity inflation as a result, because as you rightly said, that we have also provided the report as well. And there would be shortage of things like even sulfur as well, which is related to welding. So if you consider that aspect, it may be possible, quite likelihood, and based on our checks, what we can suggest that there has been some capex deferrals as well. So particularly in, let's say, the upcoming quarter, we may see margin impact or maybe some deferral in the orderings. So in the core cap goods space, so which, as you all would have seen, that has gone heated up of late. So let's say those who don't really have a direct exposure, but because of these indirect factors, like for example, an ABB or the likes of it.
B and the likes of it could have some second order impact. You also talk in the report, Priyanka, about the impact of this on ports and logistics. And there's been some commentary recently on how alternate routes can emerge since what's happening, including mention of the Virinium port. How do you see this panning out?
So the alternate, so what is happening is there is a significant increase in transshipment that we have observed. So a lot of the cargoes that were supposed to be headed for Middle East or let's say passing through the Persian Gulf region, so those have to be like, let's say, because the ship cannot provide it over there except for certain emergency cargo. What we are observing is significant surge in volumes in both JNPT, Mundra as well, and also, as you mentioned, Vizhinjam as well, which happens to be at almost 100% utilization levels. So this is clearly happening. So we have seen Adani Ports, let's say, report its recently this March volumes. And I would say those were quite better than expected, is how I'll put it, considering the aspect of the conflict. As far as the other ports that you mentioned, yes, alternate routes are being developed. So this port called Khorfakkan in UAE, then port of Salalah in Oman. So green channels have been developed between Oman and UAE. So essentially you can put your goods into Oman and it would be treated as if it's part of the same economic zone. So our channel checks had suggested initially companies had expected in the Middle East, like almost, let's say, 40% slowdown in execution. Now the same companies are saying maybe the slowdown won't be that much. Maybe let's say a 20-25% odd. So that is how I'll put it. The logistics chain is evolving fast and alternate resilient channels are being evolving and being built up.
Interesting, very interesting. Priyanka, always a pleasure speaking with you, and thanks so much for taking the time and for explaining that to us.
Thank you so much for having me.
Our pleasure. All right, I want to go back to Rudramurthy just to get a sense of what individual counters he's liking. Just before we had this conversation, he mentioned L&T as one of them. That's what my ears caught. But specifically today, Rudra, what would you buy right now? What are the key levels that you would look at?
See, when it comes to overall market, as I have mentioned, the current level, Alex, at around 24,400, entering a new long position doesn't offer a good risk reward for me on Nifty. And similarly, there is a resistance in Bank Nifty, which is at around 57,100. So very close to this resistance zone, a fresh buying is definitely not advisable.
I'm speaking about individual counters, Rudra, if that was not clear.
Okay, so if you ask me for individual stocks to pick, I definitely like metals as a pack. And if you have to pick stocks from that metals pack, look at JSW Steel, which is very strong at current market price. So for me, JSW Steel is a buy. Look at targets of around 1,400 to come on JSW Steel, and one can have a stop loss of 1,250 for this long call. And from the theme of energy and power, I like JSW Energy. So JSW Energy again at current market price looks a very good buy. Both the stocks, both JSW Steel and JSW Energy are available in futures. One can definitely go long in futures. Looking at targets of around 575 to 580 on JSW Energy, and you can have a stop loss of around 530 for this long call. So JSW Steel, JSW Energy, both looks a good buy.
All right, all right. On that note, Rudramurthy, thanks so much for taking the time. Pleasure speaking with you. And we have to slip into a very quick break. On the other side, we'll talk about results, some of them coming through right now. Take a look at the bottom of your screen, by the way. And I would like to pull up the intraday chart of Bank of Maharashtra, just as we're talking about it, because it seems like there has been an improvement in the asset quality. The net NPA for a bank that was already at pretty good levels of asset quality has actually fallen to 0.1%, PAT growth of 35% on a year-on-year basis, standing at 2,014 crore rupees. GNPA coming at 1.45% compared with 1.6%. So at the gross level, there's an improvement. At the net level, there's an improvement. And I wonder what the number on the net interest margin will be. We'll come to know that in just a bit. Seemingly, a very good set of numbers from this bank as well, and you're seeing a reaction in the stock price. The entire PSU banking pack as a whole is doing well. We should pull up the constituents of that, because State Bank of India was leading the pack higher, but it now looks like Bank of Maharashtra will take that lead. Indian Bank also, by the way, posts its numbers today. Let's slip into a quick break. We'll analyze this in more detail on the other side, so stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show.
Welcome back. You're watching India Market Close. All right, Nagaraj Shetty joining in on this leg of the conversation. G. Chokalingam also with us. Good numbers from Bank of Maharashtra. That's the latest coming in. But if you look at markets, still very tepid and range bound because there's no clear direction yet. Nagaraj, what are you tweaking your Nifty targets as and when new developments take place, or do you expect this kind of range bound trade for a bit?
Hi, good afternoon. Nifty have had a very good upside recently, around more than 2,000 points rally without showing any reasonable downward correction in between. Anyhow, market is placed at the hurdle around 24,400 to 500 is going to be a strong resistance. There is a possibility of some consolidation or a minor dip around that level. And eventually, after showing the consolidation, eventually I'm expecting Nifty to bounce back from here onwards. And after that, 24,800 is going to be the next stop on the higher side. So these are going to be the levels. The overall trend remains positive, and every dip and consolidation is going to be a buying opportunity, and eventually we could see Nifty trading higher in the near term.
Individual counters that you like, Nagaraj, at this level?
I have two counters for the longs. First one is KFintech. Chartically, KFintech has been in a consolidation phase recently before showing a breakout in last week, and the overall chart pattern is indicating a formation of important bottom reversal somewhere around 870, 880. I'm expecting more upside in the near term. Overall chart pattern is looking positive. Currently trading around 978, 979. One can look to buy at this point of time. Immediate target would be around 1030, and one can place a stop loss at 930. Second one is Unominda. Unominda has been in a consolidation phase before showing a bounce back in recently. The overall chart pattern is indicating the stock prices in an attempt of upside breakout of the long sweeping trend line as well as weekly 10 and 20 period EMA. The chart pattern is clearly positive, and even volume is also showing some positive on the upper side. I'm expecting more upside, further upside in this stock. One can look to buy Unominda at 1131. Immediate target would be 1180. One can place a stop loss at 1100.
All right. There's quite a bit of news, stock specific, that we'll get into in just a bit. But Mr. Choklingam, I know that you study this closely, and so therefore I'm asking you a slightly broader question, but I want you to narrow it down perhaps to one or two stocks. Where is it that you see relative margin of safety to say that even if there is an impact on the cost side heading into FY27, the valuations are too attractive at this juncture to ignore? Is there an opportunity that you see right now?
I believe plenty, because from 2024 September high, many have failed to recover. So two stocks I would give. Personally, I do not own them. One is EIH Limited, East India Hotel. If you take a 2-year high, it's down substantially. Why I like is that there are numerous expansion plans for the next 2 years. And already EV to EBITDA basis, it is cheaper than ITC Hotel, even Indian Hotel. This is much cheaper. And also the Reliance and ITC together hold about 35% stake. Retail float is hardly about 10%. So a lot of positive triggers are there in the stock. And second, Techno Electric. It has got two triggers. One is a data center. They are going quite aggressive in setting up data center. And second, they are into power transmission segment. And that is likely to attract 5 lakh crore of investment over next 5 years. So both triggers augur well for Techno Electric. So these are the two stocks. I may be wrong, but I believe they have got a great potential with high degree of margin of safety.
Chokha, stay on with us. Going across now to Varsha to talk about, I think in a way this is also a stock of the day, right? IEX down about 8% now, in focus because of the latest release by the Central Electricity Regulatory Commission, or the CERC. They've put out a draft on power market regulations. What are the potential changes there that have spooked investors in the stock? Varsha joining in with more details.
Well, thank you so much for that. I would say the market coupling talk is again back, wherein IEX is in focus. Why? Because CERC has issued new rules on power market regulations and is looking to introduce a formal framework for market coupling in power markets. Now, what will change under new system? Single central body will decide the price versus, if you see currently, each exchanges is deciding its own price. Now, market coupling will be applicable to day-ahead market, real-time market and other market segments. Now, who will decide the electricity price is what is the importance over here. One is the Grid India will become the market coupling operator, and Grid India will aggregate bids from all the exchanges, and power exchanges will collect bids from buyers and sellers, and power exchanges will send the bids to Grid India. This is how the price discovery will happen. And Grid India will combine bids from all the exchanges and one uniform market price will be calculated, and if the transmission is congested, prices may differ by region. Now, when will CRC rules come into picture? The public comments on the new rules are invited till 16th May, and detailed market coupling procedures will be issued within the next 6 months. How this is going to impact IEX? If market couplings comes, then this will reduce IEX pricing power, and it will also dilute current dominant position, and volume may shift to rival exchanges. So overall, this is actually a negative when it comes to IEX, and hence we are seeing the pressure in the stock.
Thank you so much, Varsha, for explaining that so ably. We got Rupesh Sankhe, Senior Vice President Research at Elara Capital, joining us on the phone line just to quickly give us a view on how things stand right now. Rupesh, thanks so much for taking the time. This market coupling has been a bugbear for IEX for quite some time because, as Varsha just explained, it's threatening its ability to price. What is the impact that you see, particularly now, because seemingly deadlines have been put in place?
Good afternoon. Certainly, market coupling is very, very negative for IEX because currently most of the volumes are happening on the day ahead and the RTM market, where IEX has close to 98% kind of a market share is there. Now, discovery is happening on the grid operator level, so there is no advantage for IEX to give a better price to the buyers and sellers. So certainly other exchanges will bringing down exchange margin, which is currently at 4 paisa, and taking a significant volume from IEX to. So certainly there is a market share loss, and also exchange price reduction is there. So
Rupesh, my question is that this is known for a while. This is like a sword over the head which is descending slowly. But we know what the outcome is going to be. So what is the case or the investment case then in IEX, considering that this decoupling is coming in one form or fashion, market share loss is going to happen?
Right. Surely, first is that multiple derating is there on the cards, and which has happened in the last 6 months. Certainly, the EPS, which is currently at 5 rupees, and in the last 1.5 years, we have seen very good volume traction there. But despite that, the EPS downgrade is there for sure post FY28, when we'll see a real picture of market coupling. And EPS, which is currently at 5 rupees, may go down to below 4 rupees also. And because of multiple derating, currently trading at 30 times P multiple, this can go down to 20-25 also. So from that perspective, I think the market may give them a lower, fair value from the what it's trading currently. So definitely, we don't see upside because of these uncertainties, and a lot of things will play out in the next 2 to 3 years in terms of market share loss. All these things.
So if someone is invested, Rupesh, so long story short, someone's invested in IEX right now, should they exit at first opportunity?
I think most of these negatives are already priced in, but still see a lower from the current level. So maybe 110, 105 is a good entry level from medium to long-term perspective, because the other verticals is also coming up, like gas exchange and carbon trading. All these verticals will come up, and that might give some value for the IEX from the other than the electricity trading business.
Okay, thank you for that, Rupesh Sankhe. All right, we cover and analyze the news quick and fast here at NDTV Profit. Bank of Maharashtra numbers are out. They look good on the face of it. We've seen a bit of a spike on the stock and then a cool off. Sharad, what is the first cut?
Well, the first cut is initially a strong set of numbers coming in for Bank of Maharashtra, and two important points to note. NIMs, net interest margins, they have improved, and looking at the numbers, initially we see that NIMs have increased at 3.8% in the last quarter. In the current quarter, it's at 3.91%. Also, the asset quality has seen a good improvement, and overall, if you look at the net numbers, that has also beaten the street estimates. The net interest income grew by 19%, and we already knew the data about the operational data about that and the deposits as well, both of them growing up as per the industry standards between 13 to 14 odd %. RAM, which is nothing but your retail, agri and MSME business, that has done really well. That's up 21% on a year-on-year basis. So prima facie on the operational numbers and the NIMs and the asset quality improvement, it's a strong set of numbers coming in from Bank of Maharashtra.
Strong set of numbers on the face of it. G. Chokalingam, have you had a chance to look at the Bank of Maharashtra numbers, at least what's available so far? Any views over there and on the banking space, because that's still in focus?
Yeah, definitely. We've been covering it for last 3-4 years. It's a great results. You take a profit growth, both year on year and Q on Q, strong double-digit growth. You look at low-cost deposits, perhaps this is the highest in the industry at around 53%. Even net NPA at 0.13%, I think that's the best in the industry. So it's amazing performance, and the credit growth around 22%, far above industry credit growth. So in all respects, whether business growth, asset quality, access to low-cost deposits, it leads in the industry. So we continue to maintain hold because long ago we initiated around 17 rupees. We have a target of around 80. You might or you may not revise. I have to look at the details, but definitely it is worth holding till 80.
Okay, so the stock is corrected. From what I see, there is also plan for a fundraise, and this could be either, of course, on an ongoing basis, Mr. Chokalingam, banks do raise funds, but then if it is an equity issuance, then there's a possibility of supply coming through, and so therefore there could be some pressure on the downside. Would you use those opportunities to buy?
Certainly, and in case of Bank of Maharashtra, it has already done several rounds of dilution of equity. So what they are going to raise is a very not a very dominant as compared to the market cap. So, and also if you see the last offering, there were huge demand for its shares in the market. So temporarily it might have dipped only 1 or 2 days, but subsequently it recovered a lot. So as you rightly said, if it falls on the eve of equity offering, that should be an opportunity to accumulate the stock.
On the charts then, since we're talking about levels that you can use to accumulate Bank of Maharashtra, it's come off very sharply from the high point of the day, which itself was a sharp spike. Where would you look at an opportunity to accumulate?
The chart pattern of Maharashtra Bank is looking very positive. We have seen some tremendous up move from the 62 support to around the 76, 77 levels, and without showing any reasonable downward correction in between. So there is a hurdle around 77, 78 levels. There may be some consolidation, minor dips. I think near-term support is somewhere around 70 to 75 levels, and the overall chart pattern is looking very positive. And eventually, after the consolidation, this stock could move up further, which is going to be a good base for at the lower levels, and could eventually retest the highs of around 77, 78 in the near term.
Okay, just looking at what's moving sharply in the last few minutes, and I'm going to come to Nagaraj for his BTST very quickly. We had this long discussion on IEX. Nagaraj, your view over there, any supports that you can see? Let's also talk about Radico Khaitan in focus because of new liquor rules in Karnataka. Just both of those stocks, if you can give us a view.
IEX is no doubt reversal has taken place after the event from the hurdle of 135, 140 levels. I think the overall chart pattern is a little bit weak for this stock price, and 120 is going to be the support. I think it could hold on in the near term at the lower levels. And second is the Radico. Radico has been in a good uptrend recently, and this uptrend continued without any resistance. We observed 4-5 sessions, long bull candles, which is phenomenal. I think though placed at the higher levels around 3,350, 3,400 levels, still there is no indication of any reversal pattern building at the higher levels. More upside is likely around 3,450, 3,500 is going to be the next hurdle for the stock price in the next 1 month.
We have still 6 minutes to execute possible BTST trades. Nagaraj, what would they be, if at all?
Yeah, I'm continuing with the two stocks where I discussed recent now, the Unominda and the K Fintech. Unominda is currently placed at the same levels what we have discussed and looking very attractive at this point of time, very short term. And even K Fintech also, it is looking very positive, moved up very well, currently showing consolidation, bind up dips opportunity during today's consolidation, and I'm expecting more upside, at least in the short term.
Earnings-wise, there's quite a bit to look forward to tomorrow. Off the top of my head, HCL Tech is something that you would watch for, but it will come through post-market hours. During market hours, you will see Nestle, another Nifty 50 stock that is set to report its numbers. Let's go across to Mahima to find out what the street anticipates. If Friday's move in FMCG is anything to go by, there might just be an expectation of a strong Q4. Is that true, Mahima?
That's true, Alex, because the double-digit revenue growth is what we're expecting from Nestle as per what the Bloomberg analysts are suggesting. Consensus estimates, of course, are suggesting. If you take a look at the numbers, revenue might see an uptick of around 12%, which is a good growth for a company like Nestle. EBITDA may see a rise of 8%. Margins, however, may take a slight hit considering the raw material inflation, and profit may see a growth of around 5%. Now, what to expect? Volume growth is set to be around that 4% mark. For growth, will largely be supported by trade normalization after GST implementation. This is also something that we'll be watching out for in terms of commentary as to how much of that has seen benefit. Domestic business is expected to rise around 12%, largely volume growth led is what analysts are penciling in. Gross margins likely to decline modestly year on year, and higher advertising and staffing cost might weigh on EBITDA margins. One of the key reasons as to why EBITDA margins could also see pressure after raw material pricing. Key things to watch out for, I think, two things in terms of commentary. One being raw material inflation and price hikes, and second one being the entire impact of West Asia conflict. And lastly, in terms of how demand is faring in terms of both rural as well as urban demand, whether recovery continues in rural and whether urban demand has picked up or not. So this is the overall view of what you can expect from Nestle's earnings, which are set to be announced tomorrow.
Shoka, are you watching out for Nestle?
Certainly not. I mean, I am not excited about this one.
Are you watching out for trend? Are you looking on when to buy trend, or certainly not there as well?
Well, I have been giving sell call and trend on the same channel from 8,000. So I would not touch that either.
But trend is 3% up. Now they're going to give bonus share, rights issue. So much is happening.
Bonus issues don't create wealth unless you have a solid growth in profits.
Okay.
That's the history. So I am not excited.
Okay.
So not by Nestle, because last 3 year or 5 year you take, both sales and revenue, sales and profits have grown only at the range in the range of 10 to 11% per annum. So why should we pay 78 PE for that kind of growth company?
I'm tempted to ask you, what is exciting you, Choka?
Small and mid-cap stocks.
Okay, name one at least. We're waiting to go into markets. At least leave us with something specific.
No, I am extremely bullish, not because I am holding it. I recommended and then I bought one stock, Nesco. I believe it's a next generation stock.
Nesco. Okay, very interesting. On that note, gentlemen, thanks so much for taking the time. I wonder whether anything that is made in 2 minutes is something that excites Choka, if not the stock. But let's take a look at the markets. We've got just 2 minutes left. Just about flat for the benchmark Nifty 50. We've broken below that 24,400 mark.
Maggie joke, by the way, in case you didn't get it. Okay.
Just about flat for the benchmark Nifty 50. We've come off the high point of the day, and we've actually moved in a pretty narrow range. If you pull up the Nifty 50 intraday chart, look at this, right? So it's a pretty narrow range from the start to finish. We're ending off the low point, but certainly off the high point. And pull up the heat map for the Nifty 50 as well, and we'll see some of those stocks that were buzzing just about an hour back continuing to do so. Trent is doing okay. On the downside, you have Geofin and Hindalco.
Yeah, I think extremely dull day. Volumes would have been low. But if I were to take away something positive from here, Alex, it would be that the market is no longer reacting tick by tick, minute by minute to what is happening and what is not happening. It's going to be clearly focused on specific stocks and results which will come in. So watch out for some of those reactions. I think people are playing it safe, if nothing else. Even India VIX not moved too much beyond a point. It's still about 10% up, but about in that 18 to 19 range. Look at the broader markets once, and we'll put up the sectoral heat map after that. The small cap and the mid cap also pretty much flat. 0.25% down, but I would say flat. The advanced decline ratio is clearly bearish. 1:2 almost. 0.5% down on this Nifty small cap 250. So that's where the profit booking has essentially come in at the last hour or so. The sectoral heat map, I mean, I wonder if energy stocks are still ruling the roost.
I think PSU banks will
PSU banks are both pretty much even Stevens. Nifty Media only because of one stock really, the Z stock, which has been up and about, but IT has taken a dive. Once again,
ahead of
Nifty
HCL
IT.
Tech numbers as
Ahead
well.
of HCL Tech numbers, India Defence also seeing some profit booking going there, so are realty stocks. So Monday evening, Monday markets are ending with a bit of a neither here, neither there. Quiet, not too bad, with a negative bias.
Yeah.
There's no doubt about that.
Absolutely. 1/10% is where the closing tick is for the Nifty 50, and the broader market's losing a little bit more ground. If anything, the Nifty Bank is more or less mirrored that. You'll see that not too far away from here. Where is it? So the private banking index is here, but you have the Nifty Bank that's just about flat. And so you have PSU banks along with State Bank of India that have actually ruled the roost today. You saw Bank of Maharashtra, and you know what? I think I have a feeling that a lot of companies are going to post a good set of numbers in Q4, but the market is already looking at what the impact is going to be in Q1. So you may not see too much of a reward.
But that's exactly what seems to have happened with ICICI Bank. That was the biggest surprise of the day. ICICI Bank, stellar numbers by all accounts. You've closed about 0.5% up. Hardly a hat tip to the kind of numbers that came in. I want to see where Yes Bank also closed. Big spike when the stock opened in the morning. It's closed about 2% down.
And HDFC Bank, the third one.
HDFC Bank, the other one in that pack, with a lot of questions here and there. Nothing much happening, about 0.5% down. So it's a wait and watch. Well, you can definitely wait and watch our next show after the break. For now, that's it from Alex, me and the team that put this show together. Thank you so much for watching India Market Close. Stay tuned. Market Express up next.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Welcome, you're watching Market Express. I am Mahima Vajrarani, and let's get straight into the show. Let's take a quick look as to how the top stories in the markets have fared today. Markets overall have, kind of given up the early rally that it saw as selling pressure picked up late and the Nifty slipped below 24,400 levels, while the Sensex closed nearly the day's low point, reflecting cautious sentiment as investors locked in profits at higher levels. On the sectoral picture now, markets closed on a mixed note. Energy and PSU banks led the gains, offering support to the benchmarks, while IT and realty stocks slipped into the red, reflecting continued sector-specific caution despite relative broader stability. InCred flags a marginal revenue miss for BHEL in FY26 but points to strong execution momentum. Annual revenue growth in high teens with implied March quarter growth of over 30% driven by better execution and higher project commissioning. However, order inflows declined during the year even as the overall order book remains strong, giving long-term revenue visibility. InCred believes that timely and profitable execution is the key to unlocking the next leg of growth. IEX is the other one that is in focus. Central Electricity Regulatory Commission, that is CERC, puts the spotlight on Indian Energy Exchange with a draft of market coupling. Now, under the proposal, a central operator, while determining a uniform power price, will replace the current system where exchanges will kind of set their own rates. Grid India is basically expected to aggregate bids and drive price discovery. The move could dilute IEX dominance and increase competition in power trading space. Jio Financial Services reports strong top-line growth in the quarter of March, but with revenue more than doubling year-on-year. However, profitability comes under pressure as operating costs rise and consolidation of losses weigh on earnings. A high share of non-operating income and higher borrowing costs also hurt the quality of profits, making this a weak quarter despite of the headline growth that we saw. Trent is the other one that's remained in focus today. In fact, the top Nifty gainer today. Trent's board is set to meet later this week on the back of announcement of its earnings, as well as considering its first ever bonus after getting listed, along with a possible dividend announcement alongside with its earnings. And the company will also look at enabling approval for a potential fundraise as its first such move in more than a decade. The proposal comes as cash levels moderate amid aggressive store expansion and a tougher retail environment. Overall, the focus remains on funding growth while maintaining momentum. Asian Paints is raising prices again. This is the second round of price hikes that they've announced. A fresh hike of around 3 to 5% is what channel checks are suggesting, effective early May. This comes just weeks after an early increase in April. Together, prices have now gone up by close to double digits. The move signals continued cost pressure, which could impact demand in the near term. Groww posts a strong fourth quarter with profits and income rising sharply on sequential basis. The platform sees solid growth in users and customer assets, even as markets remain volatile. Mutual fund inflows stay robust, while newer segments like margin trading and commodities add to revenues. The share of derivatives in overall income dips slightly, signaling better diversification. Mastek's Q4 reflects a mixed quarter with pressure on profitability despite modest revenue improvement. Revenue rose 3.6% sequentially, while EBITDA margins compressed by 70 basis points, hit by the bulk impact of labor code changes that weighed on profits. That said, the deal outlook remains constructive. Mastek signed 27 AI deals in the quarter and over 85 in FY26, with its order backlog rising over 7%. The UK business stood out as the key growth driver, even as near-term margins remain under pressure, keeping the street focused on execution as well as recovery ahead. Now, Dredging Corporation of India has signed a long-term fuel supply agreement with the Indian Oil Corporation, securing diesel for its entire dredging fleet. The 5-year MOU is valued at over 2,100 crore, providing cost visibility and uninterrupted fuel availability for operations. With fuel being a key operating input for dredging projects, the agreement is expected to support execution efficiency and margin stability even amid volatile energy prices. Bharti Airtel is making a small but telling pricing tweak. The company has raised its popular 1.5 GB per day 84-day plan to 899 from 859, a 4.6% hike, even as its entry-level 5G plan continues to start higher at 979. The impact on revenue is limited for now, but with the increase restricted to a single plan. But the move narrows the price gap between 5G offering, signaling Airtel's intent to nudge users towards higher value 5G plans. Importantly, such modest adjustments suggest a full-fledged tariff hike is something that is still distance away, keeping the street cautious on near-term pricing expectations. EMS has been declared the lowest bidder for two projects from UP Jal Nigam Varanasi. The combined order value stands at around 209 crore, excluding GST, strengthening the company's order pipeline. The projects are a part of ongoing urban infrastructure development in Uttar Pradesh and, if awarded, are expected to support revenue visibility over the medium term. The street will now watch for the formal order award and execution timelines as EMS looks to convert first position into a confirmed contract. Zen Technologies is the other one that's gained after a key regulatory nod. The company secures an arm manufacturing license from the government, allowing it to produce cannons and critical weapon systems. It will also manufacture equipment for air defense, naval operations and counter-drone capabilities. The move marks a strategic expansion into advanced defense manufacturing. Adani Power surged to a fresh record high as the group signaled a clear step into nuclear energy. The company announced that its subsidiary, that is Adani Atomic Energy, has incorporated a coastal Maha Atomic Energy, a wholly owned arm focused on nuclear power generation, transmission and distribution. The move strengthens Adani's long-term clean and base load energy ambitions, even as investors cheer the strategic expansion, pushing the stock to a new lifetime high. Sterling and Wilson Solar has landed a major order win. The company has emerged as the L1 bidder in Coal India's turnkey EPC tender, securing a contract valued at 3,490 crore. This for a 4,400 crore odd market cap company. And with this win, total EPC order inflows are now exceeding 10,000 odd crores, sharply improving revenue visibility going forward. The order adds depth to the execution pipeline and reinforces Sterling and Wilson's positioning in large-scale infrastructure projects, keeping its growth momentum firmly on track. MCX is set to expand deeper into the energy ecosystem. The exchange has received SEBI's approval to invest up to 100 crores in a proposed coal exchange, marking a strategic entry into physical coal trading. MCX will initially own the platform fully, with scope to bring in strategic partners later. The proposed exchange aims to enable transparent, standardized and digital coal trading with physical delivery, a move expected to improve price discovery and efficiency in one of India's most critical energy markets. Bank of Maharashtra reports a strong fourth quarter with profit rising sharply and asset quality improving further. Bad loans continue to decline while core income stays healthy. Margins see a slight uptick supporting overall performance. The bank also outlines an aggressive fundraising plan through equity, bonds and overseas market to fuel future growth. The government is considering a major push for flex fuel vehicles to reduce dependence on imported fossil fuels. A stakeholder meeting is being held today to discuss policy measures and incentives for widespread adoption of flex fuel technology. Flex fuel vehicles can run on petrol blended with up to 100% ethanol, supporting India's ethanol blending program. The move is expected to boost the ethanol economy and benefit farmers and help meet environmental targets as well. BMW is planning to double sales of its Mini brand in India 2026 through increased localization and new model launches. The Germany luxury car maker aims to make Mini more affordable and competitive by ramping up local production and reducing reliance on imports. The strategy includes introducing more variants and enhancing the brand's appeal among young buyers. BMW India is also focusing on expanding its dealer network and improving after-sales service to support higher volumes. Now for banks as a whole, the pack remained in focus on the back of its earnings coming in. HDFC Bank, ICICI Bank and Yes Bank have reported a decline in treasury income for Q4 FY26 And this is due to RBI's recent forex measures. The central bank's intervention and policy actions to manage rupee volatility impacted banks' gain from foreign exchange and investment portfolios, while core lending operations remained stable. The treasury segment faced pressure, leading to lower non-interest income for these lenders. Now, analysts noted that such fluctuations are a part of normal cycle when RBI actively manages currency movements. The Indian Army is accelerating the adoption of biogas and solar energy to reduce dependence on conventional fuel supplies, and amidst this ongoing West Asia crisis, according to media reports, senior officials said that the force is installing biogas plants and solar power systems at multiple military stations and forward locations. The move aims to ensure energy self-sufficiency, cut costs and lower the carbon footprint of its operation. The Army has already commissioned several pilot projects and plans wider implementation in the coming months. Moving on to Indian Railways, which has reported a sharp rise in scrap sales, crossing 6,000 crore in current financial year. The surge is driven by incremental disposal in old coaches, wagons, rails and other obsolete materials. Non-revenue earnings from scrap have become a significant contributor to Railways' overall income. Officials said better scrap management, faster disposable process and a higher scrap price in the market have boosted the overall collections. In other move, the Karnataka government has released a draft notification proposing a shift to an alcohol in the entire alcohol policy by volume-based tax regime for liquor. Basically, what this means is that under new tax system, tax rates will be linked to the actual alcohol content in the beverages rather than the current fixed duty structure. The move aims to bring greater transparency, reduce tax evasion and make the taxation system more scientific and equitable. The draft has been put out for public comments and the final policy is expected to be rolled out after stakeholder consultations, and largely 25th April is when they're considering to push this policy going ahead. But the Uttar Pradesh government, has kind of allowed farmers to sell wheat directly at minimum support price without the need for online registration. The decision aims to simplify the procurement process and ensure faster payments to farmers. Earlier, the registration on the government portal was mandatory, while which kind of had caused delays and inconvenience for many small and marginal farmers. The new order will be effective immediately and is expected to benefit lakhs of wheat growers and state during the ongoing Rabi marketing season. Now, moving on to a major incident that just kind of ahead of a high-profile launch happened in Bareilly 24 hours before Prime Minister Narendra Modi was set to inaugurate India's first greenfield integrated refinery cum petrochemical complex in Rajasthan. A massive fire broke out at the Pachpadra facility and sending kind of thick black smoke billowing into the sky. The refinery in Balotra is a joint venture between HPCL and Rajasthan government and is seen as a key project for strengthening India's energy security by cutting import dependence. First announced in 2013, this project was later relaunched by PM Modi in 2018, while with a revised cost over 43,000 crore, and this making one of the country's most strategic energy investments. In other news, the IMD has issued a fresh weather warning, forecasting heat wave conditions across central and southern India, including parts of Maharashtra, Madhya Pradesh, Telangana, Andhra Pradesh and Karnataka. At the same time, an orange alert has been issued for northern regions such as Punjab, Haryana, Uttar Pradesh and Rajasthan, warning of thunderstorms, lightning and gusty winds. The IMD says temperature will remain well above normal in several parts, highlighting a sharp contrast between the extreme heat in the south and a storm activity in the north. Guwahati experienced its first major wave of urban flooding this season after heavy overnight rainfall brought large parts of the city to a standstill. Schools were shut and normal life was severely disrupted as several areas remained waterlogged. Key roads were submerged under knee-deep water, causing traffic chaos and leaving many commuters stranded. One woman lost her life in Malegaon after reportedly slipping into an open manhole. Residents complained about the lack of a permanent solution to the recurring drainage problem and pointed to improper waste disposal as a contributing factor. A massive explosion at a firecracker manufacturing unit in Viruddhanagar, Tamil Nadu, has kind of left over a dozen workers dead. The explosion claimed at least 20 lives. Prime Minister Narendra Modi called the accident deeply distressing as he condoled the deaths. The probe into the incident has revealed major safety lapses. Investigators have found that nearly 20 workers were present in a production room meant for just 4, pointing to a blatant overcrowding and violation of norms. At least 15 people were killed and 20 others injured after a bus rolled down a hill in Jammu and Kashmir's Udhampur district. The accident occurred on a hilly stretch when the bus lost control and plunged into a gorge. Now, to rescue from this situation was underway with kind of teams working to reach the injured and recover the victims. The injured have been rushed to nearby hospitals for treatment. India and South Korea have agreed to upgrade their existing free trade agreement with the goal of doubling bilateral trade by 2030. The decision was taken during high-level talks between the two countries. The upgrade will focus on expanding market access, reducing tariffs, and deepening cooperation in sectors like semiconductors, electric vehicles, and critical minerals. Both sides also discussed enhancing supply chain resilience and increasing investments. The move is expected to give a significant boost to economic ties and support India's manufacturing and export ambitions. Tensions are rising again between the US and Iran, with US Navy seizing Iranian-flagged cargo ship while it was attempting to cross the Strait of Hormuz. The Strait of Hormuz remains a critical point, with the ceasefire set to expire on 22nd of April. Tehran has ruled out attending a second round of talks in Islamabad. The move follows accusations that Donald Trump violated the ceasefire shortly after announcing new negotiations. But even as tensions spike, Iran's president struck a more measured tone, saying war benefits no one and diplomacy remains the only path forward. The UAE basically is in talks with the United States for a financial lifeline to mitigate the economic fallout from the ongoing Iran war. The conflict has disrupted oil supplies, raised shipping costs, and affected regional trade. UAE conflicts are seeking support through increased investment, trade facilitation, and possible financial assistance. The move reflects growing concerns over the impact of prolonged instability in the Gulf of UAE's economy. The discussions come as the UAE tries to stabilize its markets and protect key sectors like energy, aviation, and tourism from further damage. A horrific mass shooting in Louisiana has left 8 children dead and a community in shock. Police says that man shot and killed 7 of his own children and another child, all aged between 1 and 13, at a home in Shreveport. Now, 2 women, including the gunman's wife, were critically injured, while another child escaped but remains in hospital. The suspect was later shot dead by police after fleeing the scene in a stolen vehicle. Authorities say that the attack appears to stem from a domestic incident, with the motive still under investigation. A powerful 7.4 magnitude earthquake struck northern Japan on Monday, triggering a tsunami warning. Japan's meteorological agency said that the earthquake hit off the coast of Iwate prefecture, shaking buildings as far away as Tokyo. Around 40 minutes later, an 80-centimeter tsunami wave struck a port in Kuji, prompting authorities to urge residents to evacuate coastal and riverside areas immediately. While no immediate damage has been reported, officials have warned that repeated tsunami waves and further quakes remain possible, asking people to stay on the safe ground. A devastating fire has ripped through a water village in Malaysian Borneo, leaving thousands of people homeless. A blaze torn through a coastal settlement in Sabah's Sadakan district, destroying around 1,000 wooden homes built on stilts over the sea and displacing more than 9,000 residents. Strong winds, tightly packed structures and difficult access hampered firefighting efforts, though no deaths have been reported yet. Authorities say the cause remains under investigation, while Prime Minister Anwar Ibrahim confirmed federal and state agencies are coordinating relief with displaced families moved to temporary shelters. Rohit Sharma has been declared fit ahead of Mumbai Indians' next IPL clash against Gujarat Titans, giving a big boost to Mumbai Indians. The skipper's availability strengthens the battling lineup at the stage tournament. Rohit's return is kind of expected to add stability at the top as Mumbai looks to build momentum in the league. All right, with that, completely out of time on this edition of Markets Express. I hope you got the entire summary of what's happened throughout the day till now, but do stay tuned to NDTV Profit for more news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
From the factory floors of Guangdong to the policy corridors in Beijing, what is going to be China's next political, economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence, and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management.
Nifty touched its highest level in a month but pared gains to end in the red today amid renewed US-Iran tensions. Sensex falls 500 points, broader markets underperform the benchmarks. Nifty sectors end in mixed note. Energy markets jolted by fresh escalation at sea with Brent soaring nearly 8% today. War premium returns to the barrel after US Navy seizes an Iranian-linked ship, while Tehran fired at vessels and reimposed controls on the Strait of Hormuz. IEX ends at the top loser after the CERC released its draft power market regulations. The proposal on market coupling could reshape the price discovery across the exchanges, raising questions on liquidity, volumes, and the competitive landscape. West Asia crisis spurs government to consider flex fuel vehicles. According to sources, Ministry of Petroleum and Natural Gas to hold key meetings today. Government exploring ways to expand ethanol blending beyond 20%. Shares of Zen Technologies rose over 2% after the company secured a government license to manufacture advanced cannons. The license allows production of critical weapons system for air defense, naval operations, and counter-drone capabilities. India and South Korea strengthen bilateral trade ties. Both nations sign MOUs on energy chips. Prime Minister Modi says bilateral trade will be increased to $50 billion by 2030. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and let's take it to an important news development just breaking right now. The Reserve Bank of India has withdrawn its April 1st circulars on foreign exchange risk management and also interbank dealings with immediate effect. Now, this move allows banks greater flexibility, including the option to cancel or roll over the existing Forex derivative contracts. Dealers will no longer be bound by the earlier restrictions on undertaking the derivative transactions. That's a big development coming in on rupee. RBI had taken some steps to arrest the fall of rupee, but now that rupee is flat since April 1st and has really fairly recovered, this is the move really coming in. In fact, Piyush Shukla joins in with all the details on what it means for the banking sector. Piyush.
That's right, Nisha. In a big move, RBI has withdrawn its earlier directions pertaining to the ceiling of $100 million that they had set on banks' net open position in NDA contracts. So the ceiling has been removed, and the RBI has said that it has decided that bankers authorized dealers shall not undertake any forex derivative contract involving INR with their related party except for cancelling and rolling over existing contracts and transactions that are undertaken with non-related, non-resident users on a back-to-back basis. And related party here means the same meaning as assigned to it under the Indian accounting standards. These instructions, importantly, are coming from an immediate effect. Nisha, as you are aware, the RBI had taken additional measures in the forex market to curb the depreciation in Indian rupee hit the level of around 95 versus US dollar, and the RBI found that certain dealers and market makers were holding certain position and creating an artificial shortage of dollars in the spot market, which actually led to the depreciation of the currency. And the RBI took these measures as a temporary measure. In the last monetary policy committee press conference, the governor had mentioned how these steps are not going to stay forever, and there will be a time when they will reverse these directions. So the RBI has done exactly that, and given further headroom for traders to deal in the NDF, onshore and derivative market. Back to you, Nisha.
Yeah, spot on, Piyush. And of course, the rupee has also substantially stabilized and also recovered from the lowest point, which had touched around 95 to the dollar. But Piyush, how did the banking circle also take this? Because the banks did meet with the Reserve Bank and did give out their feedback on this, and also the difficulty of such an unconventional measure to arrest the rupee fall. So how it's going to really benefit the banking sector now?
So, Nisha, what we understand from our sources is that the banks, leading banks, treasury officials met with RBI officials, asking them to extend the deadline, April 10 deadline, and provide them more room to unwind their short positions, which are estimated at around, each large bank has around $250 to $300 million each of positions these large banks had. They wanted more time to offload their existing positions, but the RBI was not content with this particular request, nor the other request that banks made that allow us to stagger the mark-to-market losses over a period of 2 to 3 quarters. The RBI did not accept both of these requests, and rightly so, Nisha, because we have seen certain position, the hedging, the way it was being done, there was an arbitrage being created between the onshore and offshore market rates. So the RBI...
All right, so Piyush was talking about how the banks, the top bank leaders and the treasury leaders of the banks had met with the Reserve Bank of India and had really asked and requested for pushing this particular deadline and also on the difficulties that they were facing on this. But of course, this was an unconventional measure that had really come in from the Reserve Bank of India to arrest the fall of rupee. Let's also take a look at the rupee movement. Since 1st of April, for this particular month, for 20 days, the rupee has been almost flat from 1st to now. From April to 93 rupees 66 paise, and today closing at 93.12. All right, and remember that rupee has appreciated 0.6% from the April low period. So a large part of the work was done, and also the stability came into the huge volatility and depreciation that rupee was seeing. So this particular circular and very unconventional measure that was taken by the central bank, that was really taken in order to arrest the fall of rupee on the count of also the nervousness from the FPI portfolio investors, and the outflows was putting pressure on the rupee movement in the war situation, and that needed some of those aggressive measures coming in from the central bank. All right, Anindya Banerjee joins in to give the views on this particular bit. Anindya, always a pleasure to welcome you on NDTV Profit. What do you make of this withdrawal of the circular, and how will this really impact first rupee and also the bank treasuries?
A very good afternoon. Thank you for having me. Basically, it's a kind of a clarification from the RBI. First of all, RBI is saying that your existing positions, which have been taken, you don't have to exit in haste. You can either cancel it or carry it forward to its maturity. I think that would save, if these banks had done an arbitrage, let's say the onshore arm would have bought dollars, and the offshore arm would have sold the USD NDF forward, then they can hold it till maturity. It basically means to roll over. And if there are specific foreign clients who are genuine hedgers, they want to hedge, then only the related party can offer that as a hedge. But the Indian banks cannot use the related entities, the overseas branches, to do the arbitrage trade, which was possible before between NDF and onshore market.
All right. So some part of that particular restriction stays. But how much will this ease the operations of the bank treasuries, Anindya?
I think it looks like some representation would have happened from the bankers about the existing positions, and I think then the relaxation would have come. But the overarching theme remains the same, starting from the first circular, which came out a few weeks back, that RBI is trying to snuff out all kinds of speculation which could have happened in the onshore market, whether through NDA, whether through the corporate buying or selling.
All right. So those speculative trades had been arrested. But Anindya, if we really take a look at the rupee movement, it has been fairly stable in this particular month and has seen a huge amount of depreciation earlier, but has recovered substantially also. How do you see rupee getting impacted with this particular circular?
I think as far as the momentum is concerned, is gone from the market, because right now there is no way for speculators to really impact the USD/INR pair. Yes, there will be a signaling impact from NDF, but the major impact of the NDF used to happen through the arbitrage window. That is gone, or through the speculators who would be hedging and cancelling that. So now coming to the macros, the biggest factor remains oil prices. If oil prices remain below $120, we also think that USD/INR will stay below 95. We have seen the worst in the rupee. But if oil prices flare up much higher, it will exert a pressure on the Indian rupee. But the overall pace would be slower than what we have seen in the past.
All right. So ease the momentum of depreciation of rupee and will be above much better levels than the 95 lows that it had touched now is what you're penciling in. And of course, the crude flare-up is one of the very big factors to watch out for rupee movement as well. Anindya Banerjee, always a pleasure to get your insights. Thank you so much for joining us on NDTV Profit. All right, moving on, let's focus on the equities market as well. And markets ended on a cautious note today with the Nifty slipping below 24,350 odd level. Remember, in a month's time, Nifty 50 had touched its highest level in the trading session today, but soon it pared down some of the gains in order to end in the red, while the Sensex gave up gains to close off the day's high also amid fresh US-Iran tensions. Now, the broader markets, they underperformed, even as PSU banks as well as the energy stocks saw some buying coming in. In fact, let's take it across to my colleague Jasmeet Singh, who's standing by with a detailed market roundup. Jasmeet.
Well, Nifty ends in red in today's trade. It ends below the 24,350 mark. If you look at the top Nifty losers, we have stocks like Jio Financials and Hindalco both losing over 2.5% in today's trade. If you look at the broader market has underperformed the benchmark, while Midcap 150 and Small Cap 250 both end in red. In terms of top losers in Nifty Midcap 150, we have stocks like PI Industries and Godrej Philip both losing over 2.5%, while in Small Cap 250 we have stocks like IEX and GMDC both losing over 6% in today's trade. If we look at the key sectors end on a mixed note. While we have something like a Nifty Media and Nifty PSU Bank, the best performing sectors where they have gained 0.5%. In terms of top performing stocks in these sectors, we have stocks like Bank of Maharashtra and SBI both gaining the most in Nifty PSU sector, while we have stocks like Zee Entertainment and Sun TV both gaining the most in Nifty Media. Now, in terms of the sector which has done really worst in today's trade, we have Nifty IT down by 1%. We have stocks like Persistent System and Coforge both losing over 2% in today's trade and seeing that extended pressure in trade. While in terms of the key trends, we do make a note that Nifty Media gains for the fourth consecutive day, while Nifty IT for the falls for the second consecutive day. While Nifty Realty, Nifty Metal, Nifty FMCG snaps the 3-day of gaining streak and loses in today's trade. While lastly, if we look at Nifty Oil and Gas, Nifty Auto, Nifty PSU Bank, they gain for the second consecutive day in today's trade.
All right, Jasmeet, thanks so much for all the market action of the day. So Nifty 50, after reaching the highest point in a month, really pared down its gains, also owing to the tensions emerging on the Middle East front. Now, as the markets remain on the edge amidst the global uncertainty, here's Jonathan Barrett, the Chief Investment Officer at ETO, on what's really driving the sentiment here. Listen in.
And I think the market's going to factor in some form of volatility or disruption until we can get some clear signs.
All right, crude prices remain elevated with Brent hovering around the $94 per barrel range and also WTI nearly $88 per barrel mark. And amid the ongoing geopolitical tensions, the oil has flared up. Now, the sharp move in oil really continues to keep the pressure on the currency despite the intermittent recovery there. So keep an eye out on crude prices. That will define the Indian equity as well as the money market move. Now, tensions are rising again between the US and Iran, with US Navy really seizing Iranian-flagged cargo ship Tosca while it was attempting to cross the Strait of Hormuz. Now, Pentagon has also released a video showing the guided missile